industry, but not many traders know what it actually means. So when we say P&L, what that stands for is simply profit and loss. All right, that's your profit and loss. And what a lot of brokerages offer on their platforms is a column for the P&L, for the profit and loss, that displays in real time on your trade station your realized and your unrealized profit and losses for the session. So that's all fine and great, but what kind of an issue can this potentially present? Well, to the newer trader, it can really open up the door for manifesting a P&L trading mindset. And once you kind of fall into that mindset where you're focusing on the P&L, it can become very, very easy to sort of spiral out of control, to stop following your plan, and to start trading more so based on emotions than on actual strategy. All right. So what does it mean to trade your P&L? To trade your P&L simply means that you're making trading decisions based on the unrealized or the realized profit and loss on your session, instead of using the context of the chart and what price action is currently showing. So before you take a trade, you want to check on economic reports, make sure that there's nothing getting in the way of your setup. You're going to draw on your levels. You're going to identify your potential entries, your potential exits, your potential targets, as well as where you're going to put your stops, and then you execute. All right. And so none of these steps actually focus on the profit. So why do you automatically focus on the P&L column as soon as you get triggered into a trade? And that's exactly what we're going to discuss today. And I'm going to let George take on over here, and we'll get into the meat and potatoes of this topic.
I'm so excited about this episode, Mark. Like, I got so much to say on this topic that it's mind-boggling, because I was one of those traders that started out and I watched the P&L section of the software. All right, I started out on MetaTrader, believe it or not, a long time ago.
Me too.
A brokerage called Oanda Charts. I started a currency trader, and I watched the moving profit and loss in real time more than I watched the charts.
Yeah, I can agree for sure, 100% with that. You're completely objective. It seems. I think most traders would agree with this. I think the last moment of complete objectivity is before you press the submit button for your entries, before you place those limits on. That's really the last time you're objective, because as soon as you get filled onto that trade, it's no longer a plan. It's about managing that risk, right? And so I completely agree. I know when I started, everything was objective. As soon as I got filled on the trade, whether it was a good trade or not, my eyes and my focus gravitated right on that P&L.
Yeah, and me too, right? I've been to that exact same journey, Mark. And I think that part of the reason we do this is, think about a regular 9-to-5 job that we work. We're doing any other non-trading related job where we work for money. Right? It's like the job that's done is being rewarded by the money, but because in this business, the money is the reward and the job that's being done at the same time, there's a constant fixation on saying, well, how much money have I made? Because who starts in this business for any other reason than to make money?
Not me.
Right? Everyone's trading at the end of the day to be able to make money. Yes, you might want to use that money to live a better lifestyle, travel more, to be with your family more, but it starts with the money. And so it makes sense to fixate on that column, right? And so if we look at this from a psychology standpoint, to me, it all comes down to knowing the score. What you're trying to see when you look at your profit and losses is you're trying to evaluate the score of you and your performance. And when you think about that, where does that come from? And if you think back to when you were born as a child, you're always told to look at numbers, look at qualitative data, and then make decisions based on it. We're conditioned to be evaluated. From the time we enter into the schooling system very early on, what happens as a kid in school? You come home with a grade, all right? I don't know what kind of grade. Mine got thrown out in the garbage, and I was told to bring home a better grade. But if you had a decent grade, your parents would take it with a fridge magnet and throw it on there and say, congratulations, good job. Well, we've been taught to evaluate ourselves and to constantly seek to know what the score is, real-time input of our performance. And trading gives you that with profit and loss. But I don't think it's a good idea. So what's the problem of watching profit and loss while you're trading? What does keeping a score do for people in competition? Marky, you've played sports competitively, and I've said this before, you're a great hockey player. I wish you would come out more often on Saturdays.
Thanks.
If you guys want Mark to come out more often, leave a comment on this podcast. But What does it do for you? What does keeping a score do in competition?
In competition, I honestly think as a player looking at the score, it's a distraction.
Interesting.
I think it's a bit of a distraction because it kind of takes you away from the end goal, right? Obviously, you want to win as a competitor,
Right.
especially as it relates to sports. You want to win, but if you're if you're so focused on the end result, you can put pressures on yourself that you don't really need, which can weigh on especially on your psychology and your mindset. So, yeah, that's what I think. I think that keeping a score definitely puts a distraction for athletes away from what they have to do in order to win, and more so on, the distractions to keep them from winning.
Yeah. So then I agree 100% with you. In competitive situations, you as an athlete, you're creating the score. All right. The score is really for the fans, the spectators. Because how are they going to know if they're winning their bets or who they're going to make fun of at work the next day or what jersey to wear? Those fans in the stands that have the half jerseys, or like Justin was saying, halfway through the game they switch jerseys. So, like, to me, keeping the score is for the fans, not the players. What players do instead in sport is they take focus and they put their attention on the actions that they could execute and the decisions that they could make to create a more favorable outcome. They create the score. As players in a sport, they're creating the score by focusing on what needs to be done in the moment to get a favorable result. All right. If players watch the score, like you said, one of the first things you said is, I don't keep an eye on the score. It's a distraction. If players watch the score, they'd turn into spectators. They'd miss the game entirely.
Yeah.
Right? Because you can't focus on how many. Like, I love seeing post-game conferences where they say, you just beat the record for the most amount of passes in some kind of absurd record. Like, I didn't know that. And then what do they say? What's the default after that? Oh, our team skated hard. We went up the boards and we kept their. It's just like a pre-box response that they have. And so, as a professional athlete, and we talked about this in one of the podcast episodes, traders are professional athletes in a different way, right? We can't miss the game. We can't watch the score. Because if you're down 5-1, theoretically, in a hockey game, let's say, all right, what does this mean? That means you're being outplayed. But do you give up? Do you say, hey, I'm down 5-1? What would your coach do if you skate off, said, let's just go to the next city. I'm giving up. There's 20 minutes left. You would never be able to play again. So do you give up? No. What you do is you make changes. What do you change? Your strategy, your approach. Maybe you get some more nutrition in you, all right? And you focus on what? The next goal. You're not saying, how do I get 4 goals to tie the game? You're saying, focus on the next goal. If it's 5-1, are you behind? Yes. Are you less behind if you get to 5-2? Yes, you are. You're making progress. So let's get that second goal.
Yeah, exactly. And you know what? We're recording this episode shortly after the most recent Super Bowl.
Yes.
After the most recent Super Bowl. And to be quite frank, I didn't catch the whole game, but I watched the fourth quarter, and I watched the point at which, as somebody that played competitively before, I kind of saw the moment where the 49ers quit, right? I saw that moment where they let the score get in their heads.
Yeah.
And it was as soon as KC scored that final touchdown, you kind of saw in the players' faces that they lost belief in actually winning, right? And then looking at the flip side, KC, right? The whole time, if you listen to the post game interviews, a lot of the time the players, especially that young quarterback Mahomes, I think his name is, he mentioned, and a lot of the other team mentioned that we were just focused on, we had belief in ourselves because we had been here before, right? I believe they were the only team in history. I'm not sure if it's in history or not, but they were one of the few teams that they came throughout the whole playoff series. They came from behind to win. And so having kind of instilled that mental toughness in themselves, they were, in the exact same situation in the final game, right? For all the marbles. And they performed because they were focused on, on the process. Whereas it seemed like the 49ers, after that final touchdown got scored by KC, it seems like the 49ers just lost belief in themselves. Yeah. And that's kind of where it started to fall apart for them. So very interesting that you mentioned that. And I think this also kind of relates back to our episode on mental toughness, where, a lot of athletes, and I think the example we used was with Serena Williams, where she was kind of quoted saying that when I'm down, 5-1 in a Grand Slam tournament, I'm not thinking about that actual score. The only thing I'm thinking about at that time is just the next point, making sure that I work on executing the next point flawlessly, and then the point after that, right? So you're not really focusing on the future. You're not focusing on what's happened because you can't really change that. You're focusing on the present and executing, and being in that right state of mind to execute what you got to do on that individual basis.
Yeah, and I think that's fascinating. If we dig a little bit deeper into sports psychology, think about this, Mark. Like when KC was down, why were they able to rally and do a comeback? Everyone loves a good comeback story in sports and life in general. I think if you think about it, it comes down to score as well. The score takes the pressure off because you either give up in that moment or you decide to come back, and the score doesn't matter anymore. What you're doing is, how do I come back? Now that comes to actions, which we're going to relate this to trading in a moment. But I think the mentality is, in sports and in trading, you have two options. You could either watch the score or you could take responsibility to create the score. And if you're watching the score, then get in the stands. Get some popcorn, have a beer. That's what those players would be doing too.
Yeah.
There's no point of watching the score pretending to be an athlete. You don't watch a football game while running on a treadmill. You sit there, you eat potato chips, and you love life.
That's true.
Right?
And you yell at the TV.
Yeah, it's like, I can't believe that. You have your own little flag that you're throwing on your floor. But at the end of the day, like, trading is an industry where you choose to take responsibility to create the score. And because you're creating the score, it's not actually that important to you. The most important part is, what could you do now? What could be the next trade? What could be the next step that will change the score? But you're not out there to change the score. You're just trying to get the next point. And point by point, let the scorekeepers keep the tally, right? And this also works in relationships. This causes a lot of problems in relationships. It's like, if you say, hey, you take out the garbage this time. I've done it 4 times in the last 5 days. How would you know that unless you kept track of it? And then knowing that, what's important to you? Saying that you won or that the trash gets taken out. So it's like, in trading, when we put so much focus on the score, we put a lot of pressure on the need for us to succeed every single trade. And when you put that need for you to succeed every single trade, you're getting at it. Every one loss that you have is more surprising. But let's be honest, today, like this past week, today I had 2 winning trades, but most days, I'd say 8 out of 10 sessions I trade, I have at least 1 losing trade. All right. So if I focus on the score, at some point I'm going to be bummed out because I'm taking a -1. Imagine this being a game where not only do you not get a point if you screw up, but you lose a point every time you screw up. So it's interesting stuff, and I liken trading to professional sports once again. And so let's talk about this. What are some scenarios, Marky, where in trading we can bring this back to our craft, where we've seen a profit and loss mentality start to manifest and cause some bad things?
Yeah, awesome. So we've got actually a couple of them. And one of the first ones that I think many of you will be able to relate to. Have you guys ever heard of this, or have you guys ever said it yourselves? The statement, and I use quotations right now, I just want to get out for break even. All right. So let's make this an example. Let's say you get into a position, you qualify the trade, and as soon as you get into that trade, it moves against you. And then trades down. Let's say you get long. All right, you get long. You buy a stock. Let's call it a stock. As soon as you get filled on that trade, it moves against you, and then it trades within a tick or two of your stop loss, and then gives you a slight bounce. All right. A lot of people might be thinking in such a scenario, maybe I should cancel my stop, or maybe I should do a cardinal sin. Maybe I should even add to this losing position.
Stab you right in the chest with that one.
Yeah. And so if I do that, the stock will just get back to break even so that I can get out without a loss. Be honest, guys. How many times have you heard this, or you've been in that scenario where it's been you in those shoes?
Yeah, been there, done that. I got to confess.
Exactly. And so what happens when you stop focusing on objectivity in the markets and price action and context? What happens when you throw all that out the window? It becomes emotional. You start to make decisions based on emotions and not your trade plan. And this can lead to more destructive habits that can slowly start to drain your account. If you're lucky. If you're unlucky, the account's going to get blown. It could be within a day. So this is one of those scenarios where you start to see that P&L trading mindset manifest in doing things like this, coming within a tick or two of your stop, then you're starting to think, man, I don't know about this anymore. Maybe I should give a little bit more space. Or I think it's, if it just comes back to where I entered it, I can just get out for break even without a loss. And then I don't even care what has to happen for the rest of the session. I just got back to green, and this is one of those key scenarios where we start to seeing that P&L trading mindset manifesting.
And so have you experienced this, Mark?
Yeah, definitely.
What do you think causes this? Like, what caused you to switch into that mentality of, I just want to get out for break even? Because we got to unpack this. This is a very deep statement of just 1, 2, 3, 4, 5, 6, 7, 8 words. I had to count 8 words, but this is massive. We could do a whole episode with the title, I just want to get out for break even.
What was I thinking when I was doing stuff like this?
What led you to get into that mentality?
You know what? This happened quite often when I started day trading.
Right.
And it was just ego. It's literally, I just made a YouTube video on this as well. It's literally the battle between ego and reality.
Right.
And that's what it was to me, right? And the idea here is that, Mike Tyson said it best, everyone has a plan until they get punched in the face, right? And it's all great to have a plan, but as soon as, you get filled on the trade, your plan is ideally, if you're taking that trade, is to make money on it, right?
Right.
To make a profit on it, right? And as soon as the opposite happens, you get filled and this thing goes right in or trades right down to within a tick of your stop loss. What was supposed to happen is not happening. The plans change, and now it becomes, oh man, I'm wrong. And it's by realizing or crystallizing that loss, you're admitting defeat.
Absolutely.
Right?
Yeah.
And that does not satisfy the ego. What satisfies the ego is being right. Right. So even in that kind of a scenario where, you plan the trade, you qualify the trade, and then as soon as it goes against you, you've pretty much thrown everything you've planned beforehand out the window, and now it just becomes emotional. I got to be right about this. Right. And now it's not even, I got to make money on this trade. I just don't want to lose on it.
You're right. And so that becomes an away motivation.
Exactly.
Right? Like, I don't want to lose money on this trade. But think about this. If you were ever in professional sports and your only goal is to break even, you'd never win. You just keep getting ties.
Yeah.
And so to me, that statement speaks volume for the mindset. This is, I think, a mindset where you're trying to run away from losing money, and you're more afraid of a loss than you are excited about the opportunity of a return. Because I just want to get out for break even is relief. You want relief to get to where you started. How about changing that statement to, I just want to win, or I am going to win? Because if you think about the context of a long game, we put so much weight and responsibility on every single trade. All right. But we have to realize that one trade is not your career. One trade will not get you a house, a boat, whatever you're trying to get. All right. Not at this point. Otherwise, you'd have a house or a boat. Right. You're never one trade away from one goal. You're always looking for this trade in the greater context of your career. And I think when you take away the focus from how important just one trade is, it starts to make sense on a whole scale. Right. And this is a very, very, very deep sentence. I find that if you catch yourself saying this often, it could be that you just have a day where, everything else hasn't gone well. Maybe you had crappy sleep, didn't get good breakfast, you got an argument with somebody in the morning, and now you just want to break even. It speaks to psychology of your mental state. But if you find yourself saying this very often, all right, this is, like Mark said, 100% an ego thing. You're trading to be right. What you want out of this industry is validation that you're right. You don't want money, because otherwise, forget break even. Why would you be going for break even?
Yeah.
Be going for profit. I just want to win is what you'd be saying.
Yeah. I think that kind of speaks to that quote from Ed Sequoia with regards
Love
to
this quote.
Right. It's again, don't quote me on it, but it goes something along the lines of everybody gets what they want out of the markets.
Right.
Some to that point. Right. And so like Georgie just said, you get what you want out of the market. So if all that you want is to get out at break even, that's exactly what you're gonna get.
Yeah, and if you're happy with break even, don't even put in a trade. Go do something else. You're break even. Right? But you didn't start trading to not trade. You started trading to trade so you can realize some of your opportunity and potential. So if you're getting into this mindset often, the one thing I tell you is be a cause for creating the situation And more importantly, do something about it. What you could do is go back to the episode where we talked about towards motivation and put a whole bunch of towards motivations on your computer. And that way, when you're down, you're not looking for relief of break even. You're saying, you know what? This happens. If KC can come back, the Chiefs can come back at a Super Bowl from behind and do it consistently throughout the whole season, why can't I? All right? Forget about the score. The score is not important. What am I going to do now to create a better result tomorrow? Because I'm creating the score. If you're watching the score, go to the stands. You're a spectator. So I love this. I think this is huge and a big part of P&L mentality.
Yeah, exactly. And, guys, if you are listening to this and, you're kind of worried that, oh, man, I might have, you know what? I actually did say this. I don't know if I'm in the right place anymore. Don't be worried about that, because we are going to offer you guys some practical tips and solutions on how to prevent this P&L trading mindset from manifesting and how to keep it at bay if you've already, fallen into some of these habits. But for now, the idea here is just to kind of show you some of the scenarios in which this P&L trading mindset can start to manifest,
right?
So that you guys can catch it in the act if you haven't already fallen into that trap. All right. Scenario number 2.
Before we get into that, can I say one thing?
Sure.
So I understand that I might have gotten a little bit aggressive there, and so Mark had to kind of provide that message. But I got to tell you this: if somebody's not passionate about what they're saying, they haven't experienced it. I'm telling you that because I've been through it, and my passion comes from the fact that I want to help you see the light. Because this took me a long time to get out of this mentality. Right? It would be great on the days where I started profitable, but the days where I started when I was down money, it would compound my losses to the point that in 3 weeks of consistent, solid risk management trading, I'd lose my profits in one day. And that's disastrous. And that's where the passion came, where, I want you to understand it's something we could work on and fix. And I also want you to understand it's very important. So that's why I kind of put a little bit more oomph in it, if you will.
Awesome.
Number 2, my bad.
Number 2. So number 2, the second type of scenario that we see quite often where that P&L trading mindset starts to manifest is in scenarios where you say things like, I just need to recover my last loss quickly. So that little blurb that you just heard from George prior to me giving you this second one, this second scenario here, was exactly what we're going to be talking about, right? And the fact where, 3 weeks of consistent risk management can go down the drain in one day. These next scenarios are going to be really indicative of what the potential of a P&L trading mindset can do to your account and the different scenarios, right? So with this scenario here, have you ever been in the position where you take a streak of losses to start the session? Right?
Yes.
If you had started green, that would be a different thing. But what happens when you take a streak of losses to start the session? Have you ever been in the position where you've done that, where you had a plan? All right, I'm going to take 3 trades on this session. This is what I want to do. Bam, first trade comes out, stop. Bam, second trade qualified, stop. Bam, third trade qualified and stop and stop. Right, and then you get to another opportunity, and guess what? You're down 3 trades now. You're down, ideally, if you're managing risk correctly, 3%. 3 to 6% on the account. You find your next setup, and guess what? You've been trading the first trade, maybe 1 or 2 lots, the second trade, 1 or 2 lots, the third trade, 1 or 2 lots. Now you're down 3 trades. You have another opportunity. Now you're saying, all right, you know what? I'm going to scale up on this one. I'm going to go, instead of 1 or 2 lots, I'm going to try 5 or 6 lots.
Size up, baby.
Exactly. Size lords. I'm going to size up on this one, and I'm going to look for a smaller price fluctuation in order to get back to the green. All right. Again, how many times have you heard something like this said, or how many times have you said it yourself? All right. And this is a very, very destructive pattern. And so what is a potential fix? The fix on this one is relatively easy. Just position size correctly. If you're going to be risking 1 to 2% of your account size, you should not fall into this problem. All right. It can be destructive if you're positioning your trades at 10 to 20% for trying to make back several losses. That is very destructive, right? And so the idea here is to risk 1 to 2% of your account size until you build up a sizable chunk of what we like to call house money, right? And I did that in quotes as well, house money. And then at that point, once you have some house money, not money that's actually your capital that you've worked for, that you've done labor for, right? This is money that you've extracted from the markets. Once you have a nice little cushion in your account, then you can start potentially increasing the position size. But up until that point, to avoid this kind of a scenario, you wanna keep risk tight. Any thoughts on this one, Georgie?
Oh man, Mark, you've picked some really good like quotations around this. I could do a whole podcast of this. Let's read this statement again, Mark. I need to recover my last loss quickly. 2 thoughts on this. Number 1, you don't need to do anything, right? You need to breathe, you need to eat, and you need to sleep. Nothing else is a need. Okay, so by activating the word need, you're putting so much importance on this, a survival level of importance. Okay, so let's think about this. Your survival depends on, that's what need means.
Yep.
Let's read the statement like that. My survival depends on my ability to recover my last loss quickly. So what happens when you get a loss? Now your survival is in question.
Mm-hmm.
Now your emotions start to flare up. And you're like, okay, I got to size up. These decisions to increase your size, to work your way out of a loss, they're not decisions you make because you think they're the right ones. They're decisions you make because you need to survive.
Survival
Mode gets triggered. And that old brain of yours doesn't really care about what your logic is. When you tell it that you need to survive, number 1 prime directive of the subconscious mind is to protect your well-being and safety. All right? So
episode 2, by the way.
Yeah, episode 2.
That was episode 2, by the way.
Worth review, absolutely. So when you use a word like need, you actually don't need to recover your last loss. How come? Why do you need to recover your last loss? And if you need to recover it, then guess what that also means, right? So if we've established needing is essential to your survival, you need a loss to recover. And so you're going to create a situation in which you're losing trades because you need to recover them. And I know it sounds crazy, and you look at that and you're probably driving or running on the treadmill laughing at this, like, that you're reading so deeply into a simple sentence. Every sentence is an expression of a mental state. So if you use that sentence, there's something else going on. And I would say that using the word need is not necessary here. One way you could look at it is, rather than needing to recover your last loss, is you're looking for, I'm going to find a good trade. Because if you look for good trades and focus on the next one, you're not going to have a loss to recover. You're going to eventually work your way out. It's okay in a competitive industry that we compare to a professional sport to be down. All right? There isn't a team, not even New England, that could take a W the whole season through. Actually, they did do it. They had a perfect season. Multiple.
You know what? For the football fans or the soccer fans in North America, Liverpool's looking pretty good for an unbeatable season this year.
But they were probably still down a point at some point.
They've definitely tied games. They've been down for sure.
And come back.
And they've come back. They were actually a great example of that last season, UEFA Champions League. They were down on aggregate 4-0 against Barcelona, which means that the game that they played, they had to not let Barcelona score, and they needed to score 4 or more goals.
Wow, and they did it. That's amazing.
Then they went on to the finals and they beat Tottenham. So,
and I bet you when they're on the pitch and they're playing the game, they're not thinking about scoring 4 goals. They're thinking about, let's absolutely annihilate and overpower these people.
And you know what the best part is? They made it to the finals the year prior and they lost.
Oh, wow. And there you go. So they didn't need to come back, but they did because they decided, I don't want this. What I do want is my towards motivation. I want to win. And so if you want to win, it's natural you're going to recover your loss. If you need to recover your loss, you're going to create losses that you need to recover from.
These cliffhangers, I like them. I like them a lot. So that's a great point there. And this next scenario here kind of builds on the prior one, but it's a little bit different, and we'll explain how. So this next scenario where we typically tend to see P&L trading mindsets start to manifest is scenarios when you hear the words similar to, I only need one big winner to reach my goal.
Oh,
all right. And so it sounds quite a lot like that previous scenario, right? I need to recover my last loss quickly. Now, they do sound similar. However, the main difference between these two is that instead of actually scaling up your position size after taking a streak of losses, right? Showing the P&L is showing you that you're down for the day. That kind of puts you in a state where you're now required to make that money back, right? And so the main difference between these two is that in this kind of scenario, you're not actually scaling up your position size to make the money back. What you're going to be doing is something like this. So again, another situation. Let's say you've taken a string of losses and then you actually catch one good trade. You catch a great trade as per your plan. You follow your rules, you follow your risk management, and you're in on that trade. Now, you start to see that profit on your P&L screen, and guess what? You see that you're still down on the day, and you've caught a good trade. So you know what? This one looks like it can go. This one looks like it might just be a home run. So what do you do? Instead of following your plan and getting paid where your plan tells you that you should be getting paid, you cancel that take profit and you extend it higher in order to try to capture a larger chunk of the move to recoup those losses that you made earlier. All right, guys. So this is not scaling up your position size. This is taking a good trade and trying to milk more out of it than what your plan has. All right. And so you manage the risk accordingly. All right. So let's say you extend this take profit to try to capture a larger chunk of the move, and you've managed your risk accordingly. You extend the TP, and guess what? Maybe the market doesn't go all the way up there, right? You're extending the take profit not because of an objective factor, not because of what your plan says. You're doing that based on emotion because you're trying to make those losses back. So that trade is no longer a valid setup because it's no longer based on what you qualified it for. It's based on your emotions because it looks to you like it can keep going higher. All right. And so you can definitely be in this situation where if you had followed your plan and gotten paid where you said you would be getting paid, you would have gotten paid, right? Whereas if you extended the take profit and let's say the market rolls back over and you don't get paid and, you know, the position might come back to break even or even put you even deeper in the red, adding really to that negative tally on the day. How would that make you feel? I know for me, that would make me not feel the best. All right. So really, unless you're an experienced trader that's kind of dealt with this and has learned how to mitigate this from happening in real time, this can lead to, this is one of those things, especially when you have a good trade, you don't get paid, and then you start to let that turn into a loss, especially after looking at your P&L and seeing that you were down, right? This can lead to those emotions creeping in and triggering, you know, the nasty self-sabotage cycle that a lot of traders tend to deal with. All right, so we'll pass the mic on over to Georgie and see if you've got anything to chime in on this one.
I did this yesterday. You remember that? I was looking for fades and fade shorting the market, and I was getting +8. +8 is 8 ticks on the S&P. That's 2 points. And so my plan is to get paid at +8 and then see if I could run the rest. And so I had 2 or 3 trades where I would get paid +8, and rather than taking the full profit, knowing the context of the day, it wasn't moving much up or down. It was kind of more tied to a narrow range. And I know that I could get +8 with a pretty high degree of probability. So I'd get +8, then I get greedy. I'm like, let me run some more, and I get stopped out of break even on the half. And so I do it again and again and again. And I even said in the webinar, I'm like, if I just take +8s, I would have had a fantastic day. Now I'm having a good day. But my psychology knows it should be fantastic, and it also knows I didn't follow my plan, and that's the reason I'm underperforming. So that happened to me, and I totally understand this. I understand this one big winner mentality because the human animal is designed to reach the most amount of abundance with the least amount of energy. Most efficient. And the most efficient ways to trade is make one trade in your career, make $600 million and never trade again.
And you're out.
Yeah, exactly.
You're on the beach
but
selling trading courses.
Yeah, exactly. And if you're at the home plate, giving it everything you got, swinging for home runs, we're going across a lot of sports.
Yeah.
You're giving it every single at bat, every single time that you try, you give it a home run swing. You're not even going to get on base. You're going to be exhausted. And so when you're going for the one winning trade, you're wasting a lot of energy on that. It's always safer to take smaller trades consecutively that'll build to a lot more money than going for that one winner. The one winner risks a lot of your mental capital or your ability to succeed. The one winner mentality also puts too much focus on any one trade.
Yeah,
it'll actually make you miss the good opportunity because if you need one winner, there's a chance you're trading bigger size than you normally would.
Yeah, I agree with that.
It makes you miss the good opportunity, and makes you wait until it looks like, okay, it's already gone up 10 points. Now's my time to get in. You're looking for a more safe trade. So you're looking to extract safety out of an unsafe sport. And I think that this is also a pretty dangerous habit, but I will tell you, it's going to happen to you occasionally here and there. And also, the context of the market will draw you into this.
Yeah.
If you're having a nice moving day, I mean, I don't know a single professional trader that'll say, I'm happy with making $200. If your plan is to make $200 a day and it usually moves 10 points, and today we're up 200 points, I don't know anyone who's going to say, $200 is good for me. You should step on it. It's our job to get on there with the opportunity and absolutely annihilate it when we're given the chance. And so I understand this one. I get it, but you have to be careful with it. And one rule that I have for myself is when I have a profit, only half the house money. So if I'm up $1,000, I can only risk 500. The only thing worse than being down on a day in trading is being down after you've been up for your target. That's the worst.
I think we can make that another episode.
Dude, we can do a whole show on that.
Yeah, guys, comment below if that would be an episode you'd like to hear. Yeah, how to get back from giving back good gains.
And number D.
Yeah, and number 4. Oh man, and so this one kind of builds on the prior 3, and this is honestly something that I've seen a lot in newer traders. It's very, very common for newer traders, and it is the scenario where you find yourself saying, I don't want to give back unrealized profits. All right. And again, this is one of those scenarios or situations where, let's say you qualify a trade, you get filled on that trade, and then it starts to move into profit right away. But let's say before you took this trade, you had a streak of losses. And I hope you guys are seeing that, we're putting in these streak of losses before you're catching these trades.
Right.
For that reason, right? Is because not every day is going to start with, I wish every single one of my days started with the first trade being a winner. That's,
that'd be ideal. But you know what? Then we get the God complex.
It works 60% of the time, 100% of the time. But with this one, right? So let's say that you're in a situation where, maybe your first trade was a loser and you're on your second trade now and you've qualified this trade. It starts to move into profit right away. It's feeling good. And, you might have a tendency to try to book those profits as soon as they show up without letting the full trade play out as planned because of your experience from the prior trade having been a loser, right? So you're worried that it's going to happen again, right? You got the trade. What happened last time? The last time you took the trade, it went into a loss. If you're still thinking about that loss when you're in this trade, that's what you're going to relate to. You're going to relate that loss to this trade as well. And so because you're worried and fearful that this trade is going to turn into a loss, you might cut the potential profits out on this individual trade because you don't want to give back those profits, right? Again, you're no longer managing the trade based on the individual setup. You're not managing it based on what you qualified it for. You're managing it based on your experience for the prior trades, right? Every trade is unique. Each moment in the market is unique. All right.
That's a tongue twister. That sentence is a tongue twister.
Yeah. And so each moment in the market is unique. And what that means is you should not be managing this trade based on your experience from the last trades, right? That's where you can start to manifest this P&L mindset where you're no longer trading your setups based on how you qualify them. You're trading your setups now based on your experience from what's happened. And that's a result of keeping a close eye on that P&L statement, right?
Yeah, that's like when you're going with your wife to a nice dinner, whatever, celebration, it's your birthday or an anniversary, and you're driving and you're like 5 minutes away from the restaurant.
I can't wait to hear the end of this.
And then suddenly you veer off with the car, almost going on 2 wheels because you almost roll the car. You stop at McDonald's. Like, I didn't want to lose their chance to get dinner, and we're running 2 minutes behind schedule. That doesn't make sense. Neither does this. So it's like if you're afraid of giving back your open profits, you were probably afraid to get in the trade to begin with. And I think this is a scarcity mindset, right? And like you mentioned, the scarcity mindset's triggered by the fact that you lost 3. So if you lose 3 and you're like, I've lost 3 trades, I'm down $100, for example, and now I have $20, so I've recovered 20 of my 100. Like, yes, I'm coming back. And you close the trade. Yeah, but you took $100 worth of risk. So if you're getting paid early, you're still taking on more risk. In the long run, that's going to not work more times than it does work, and you're going to lose more money than you make, putting yourself in a deeper hole. And so, unrealized profits are just that. They're unrealized, and there's still risk on the table. And if the trade was worth the risk when you put it on, the question I ask myself in these trades is it still worth the risk? Would I take this trade now at this level if I didn't get it before? And if the answer is yes, I'm not taking profit early. And we talk a lot about how do we extend our gains, right? And that's the way we do it. We just say, look, if I'm in this trade, would I get in again? And I don't think this happens to me as well. I'm going to be honest with you. Those last two, you got me.
Yeah. Oh, I was going to say that the last one, still working on, it doesn't matter how long you've been trading, right? It's a constant work in progress, right?
Oh, yeah,
I liken trading to golf in the fact that you'll never truly be a master of it. I mean, every time I sit in front of the screen, even for as long as I've been doing it, I learn something new. Might not necessarily be about the markets. It could be about myself, right? And that's what trading's been for me. Is just it's a evolution of myself.
It's a constant journey of making progress. You got to have enough energy and enough motivation to want to improve daily.
Yeah, exactly. And so I know that a lot. I still find it to this day. If this exact scenario plays out, I still kind of struggle with this as well. If I've taken three losses not simultaneously, but back to back consecutively, that fourth one is going to be somewhat of a make or break for my day, right?
Yep.
I usually, if it's my first three trades are losers, I'm probably not seeing things, or I'm not trading well, and I might give myself one more shot. But if I do catch that fourth one and it's a good trade, there's always that internal battle, that internal dialogue being like, man, if you get paid here, you're still going to be down, but you're getting paid, versus this one looks like it's good. I think this is the one that's going to get me back to green. And it's a constant internal battle. And, to say that it just goes away at some point, we'd be lying to you. It never goes away, but you just find different ways to manage it. And like Georgie said, he identified it. I think that's the first key thing. And that's why we're telling you guys about these scenarios, is because the whole point of that is to help you guys identify it in real time, before their ugly heads stick out and kind of weigh on your psychology and weigh on your results, right? So I think it's important to, even replay this and just go through those 4 scenarios. And we've got some fixes coming up for you guys. And that's going to be the next part of this episode. What's the fix? How do I fix this P&L trading mindset? How can I avoid getting into that mindset or manifesting it in the first place? That's what we're going to talk about now. And we'll pass the mic on over to Georgie, and he's going to hook you guys up with some actionable tips and solutions here.
Before I get into that, I just realized something huge, Mark.
Uh-oh.
I really like doing this podcast with you.
Hey.
It's fun.
Yeah.
I'm having a blast. What's the fix? There is, I wrote this, so the fix. What's a fix? There is no the fix. We've come up with a few solutions that can help you with the challenge of watching profit and loss. All right. My first one, I'll share the first one that I think is important. I want you to accept that it's normal. You don't have any kind of condition. There's nothing wrong with you. You're a perfectly capable human being. You can accomplish your goals. You deserve to accomplish your goals. By right of being born, you deserve growth. All living things grow. All right? It's facts. It's science, bro. And so,
bro science.
Accept that it's normal, number one, and that you've been conditioned to look at this. You've been conditioned to keep track of score and evaluate yourself based on what you see. That's not going to work for you in trading. And so that's the one thing you need to accept, is that this is normal. This is a learned behavior. And in this instance and in this industry, I could unlearn this behavior through implementing some of these other solutions as well. And more importantly, like Mark just said, knowing how to catch these things. Because if you don't know what the potential problems are, how will you know that you're experiencing a problem? I think that's the challenge with new traders. They don't know what they're looking for. Therefore, everything looks good.
Mm-hmm.
And so, accept it. It's normal. There's nothing wrong with you. That's my number one solution. Acceptance is very important.
Awesome. And you know what? I might just get you to read the second one since I'm not too sure what you're trying to get across
come on,
here.
it's realized. All right, the second one's realized versus unrealized profits. Next. I'm kidding. It's I wanted to just explain to you the difference between realized and unrealized profit. All right.
Okay.
I don't think you could count a realized profit means the trade is closed, crystallized. No matter where the market goes from here, the amount you've made or lost, it's firm. It's done. It's put in the book because you've done the trade. You've offset it. You've made it real. Unrealized means that you have a gain, and then the market as it moves will still cause fluctuations in your trade. And so one thing we need to do is I put this down here to discuss this. Realized means your work is done. Unrealized means you're still in progress. And so for me, whenever I start to look at the P&L, like I'm looking at my eyes, looking at how many points I'm up and all that, and I have a trade opened, I'm starting to second guess things. I'm starting to get distracted. And so remember, unrealized profit is just that. It's an unrealized profit. Do not allow it to cause you emotions. Let me flip that statement. Allow it to make you feel like you still have work to do. Because if you have an unrealized profit and you're looking at it, you're like, yes, $200, sweet. Where am I going to go for dinner tonight? What can I do? You're being distracted. You're kind of looking up at the scoreboard. And if you play hockey, the scoreboard is right above you. And I think it's amazing it's there. I don't know in football why it's on both ends because players can see the score. Hockey, it's hard to see the score. You got to be like,
Yeah, it's true.
Imagine skating down the ice with the puck, breaking out of the zone. It's a fast game, and you decide to look up at the score. You're going to get your head taken off. And so if you have an unrealized profit, that's what you're doing. You're skating and trying to look at the scoreboard. You don't need to look at the scoreboard. What you need to be focusing on is managing this trade. How do I extract more profit? Am I removing risk? If you're looking at where's my profit at while the trade is open, you're getting ahead of yourself and losing mental focus. You're becoming a spectator. And if you're becoming a spectator, who the heck is driving the car? All right? Or who the heck's in those skates, to stick with the hockey analogy? I think that's why it's important to realize versus unrealized profits. Realize.
Wow, a little tongue twister there from Georgie. And I just want to put a little side note in here, guys. George's notes are literally a sentence, right? You guys, from the point where I said I'm going to let Georgie take over number 2 to me getting back on the mic, the only thing written in the show notes was realized versus unrealized profits. So I'm not lazy. I just know George's style. He likes to put a little bit in there and then go and run with it.
Mark, when you hear all these voices in your head, you just need a little
yeah, I'm a little bit different.
Little space holder. That's all. Yeah. The rest is coming.
Just a file cabinet up top there. So solution number 3. This is one that I found really helped me out, and it's really almost ingeniously simple. Remove the profit and loss from your trade station. All right. Just as I mentioned in the beginning of this episode, brokerages on their platforms, they display that P&L column just as easily as you can see it. You can hide it. All right. As soon as you hide the DOM or you hide the profit and loss statement, that's going to change things around for you. Number one, and I'm going to use my own experience with this as an example. Number one, right? The flashing red and green lights when you get filled, right? We see the position orders, we see the brackets, and when you get filled on the DOM lights up green and red, right? On Sierra Chart, the platform that we use, it lights up green and red. And so if you get filled and you're seeing that on your charts, you're seeing it tick up red, you're seeing it tick down red, right? Up and down, up and down, up and down. Whether you qualified the trade based on your criteria or not, it almost forces an emotional response from you if it's there, right? You're seeing it tick up and down, especially if it's staying in the red, and then it ticks back up to green, right? That's where people can start getting emotional and start any one of these cycles, right? And so just hiding the profit and loss statement is going to help almost calm the whole process down. I found that was my experience. As soon as I hid the P&L statement and I hid my show order positions and all those things, as soon as I hid that stuff and I just took the trade based on my setup, right? And I managed it based on that without having the distraction of the green lights, the red lights back and forth. That was a big one for me. So number one, it's going to kind of remove the stress, if you will, from managing the trades, especially for the newer traders,
Yep.
because like we both said, and I'm sure a lot of traders can relate, that when you start off, despite qualifying trades, as soon as you get filled, your eyes kind of focus on that P&L. So just hide it. Hide that from your DOM, hide that from your trade station, and really focus on qualifying the trades and managing those trades individually based on the individual setup. That's really going to help you, focus on executing your plan flawlessly, as opposed to executing your plan based on emotions from what you see on that P&L statement.
Wait, so you don't have the green or red entry position thing on your ladder?
No, I have the thing on my ladder,
But just not the DPL at the top left.
Yeah.
You're going to have to show me how to remove that, because what I do is I narrow my DOM on the window to the point that I can't see it. You know, if you narrow it in, it hides. But then sometimes you can't click your orders to drag them anyways, so I have to use shortcuts. But anywho, that's key. It helps you when you're in a losing state. When you're down money, you don't focus on that, but also helps you when you're up, because today I was in oil. I had 30 cents. I'm clicking to expand the DOM so I could move my order down. And as I'm doing that, I look at the top left where the profit is. I'm like, holy crap, I'm up nice. And then I took it out probably 12 cents earlier than I should have.
Yeah.
And so it's important both ways to help you focus on the market when you're losing and to help you focus on the market when you're winning, so you keep winning.
Yeah,
It just helps you focus on the market.
Exactly. And it helps you focus on your plan, right? Because it takes away all that whole emotional aspect of it. If you're not seeing the red lights, the green lights, like Georgie said, you're not seeing the daily profit. He said, he saw how much he was up, and as a result of that, I mean, that's not the only reason why, but as a result of seeing that number and being like, oh man, I'm actually up pretty good. I can take profits here.
Yeah.
Right. If that wasn't there, he would have taken the trade based on the structure. And I know exactly where he got taken out, because it was a level. He had his stop initially at a good level, and then he saw that profit and loss, and he moved his stop down to lock in profits. But I know exactly where that was. It was about, you had it at the 52s, right?
It was the 52s.
It was at the 52s.
And then it could have moved down to 42. It could have moved down to 32. Heck, oil's down another like 60 cents from there.
Yeah.
God knows what it could have done if I didn't just look at that.
Exactly. Right.
Well, God doesn't need, the market knows.
The market goes.
Don't get the big man involved in this.
Yeah, exactly. And so on that point, once you hide your profit and loss statement from your trade station, the next solution we can offer is to focus on your next best trade. This one. Yeah, this one's super important. I don't know, George, if you want to take it, or what, I'll take this one because you had the first two.
Equal it up. If I could just get back to even.
If I could just get back.
Gotcha.
Oh,
Gotcha.
Boy. And so focus on the next best trade. What's the next best trade? This is a concept that I don't know if we came up with it. I'm sure there's similar ones out there.
We came up with it. We own it. Trademark. No, that's a lie, but it's our idea.
So the idea is basically exactly what the name suggests, your next best trade, right? And so the next best trade is basically at any point in time, you should not be guessing what or where you're going to be looking to get involved in the market. You should have a game plan for when that scenario occurs. And so next best trade, if I were to word it differently, it would just simply be called if-then scenarios, right? Let's say the market's at, I don't know, let's say $50, a nice round number, right? And then we say, if we break above $50.50 and we retest that level as support, we'll get involved to the long side. If the market breaks below, let's call it, I don't know, 49.5, breaks and retests that, then I'll look to get involved for the downside. If neither of those happens, there's no trade, right? That in itself will keep you, number one, it'll keep you patient because you know where you're going to be getting involved. Number two, it's going to keep you from fiddling in the middle. This kind of leans on number one here. It's going to keep you from fiddling in the middle, right? So we identified the range, and really, if you're trying to get a trade within that range, you're fiddling in the middle. Do not do that. All right.
Love that.
Yeah, don't fiddle in the middle. And then number three, it comes back to your experience. When, I think Georgie said it perfectly here, a lot of newer traders, they don't know what they're looking for, and so everything looks good, right? When you have the concept of the next best trade and you kind of, you know what you're looking for, that removes the emotionality from it, right? Because if you're anchored to, oh man, this thing has to go up, right, and it starts selling off, because you're anchored to that idea that it has to go up, you might miss good shorting opportunities to catch the downside moves, right?
Yep.
And the opposite would hold true. So this kind of helps keep you objective, number one, and number two, it keeps you nice and patient.
That was number 4, focus on the next trade. I love that. You did a very good coverage of it. All I would have to add to that is one simple thing. If you had to come back in a sport where you were down, what would you do? You'd have to make a good play. To make a good play, you'd have to focus on reading the situation around you. You'd have to time the moment where the safe play is, and you're going for the safe, high probability play. And so if you want to get back to anywhere, whether it's even or whether you want to protect the lead, you want to win a Super Bowl, you want to win a trade, it all happens on just focusing on the next opportunity. One step at a time, you're going to get to where you need to go. Number 5 of the solutions is trading is not about taking trades.
What?
Who wrote this in here?
Wait.
Trading is not about taking trades. It's about taking good trades. This is very vital, critical to your success. You're not out there with a AK-47 in the front line trying to, let off as many rounds as you can. It's a sniper role. You have to wait. You got to be tactful. And the money doesn't come from taking trades. If the money came from quantity of trades, there'd be a lot of rich traders, right? The money comes from the quality of the trade. You're not out there looking for a Christmas sale. You're looking to purchase something that has high quality. And so if you're looking for the good trades, you're focusing on the process. You're not really looking at the results. The scoreboard doesn't matter. All that matters is when you do this behavior right now, after the game, whether you win or lose, your coach is going to see that replay of the tape. That was a good play. Next time, do it again.
Yeah. Actually, funny you bring that up. We're getting a whole bunch of sports analogies here, and I got another one just because you said that. Sheldon Keefe, for those that don't watch the NHL or are not fans of Toronto Maple Leafs.
Who would that be?
He's the new Toronto Maple Leafs head coach, and Toronto played Florida Panthers yesterday. And for those that don't know, we are basically in a race with them to get into, I believe it's the wild card spot for a go at the playoffs, a go at Stanley's Cup. And so yesterday we lost the game. All right, we lost the game. Toronto was up 3-1, and I think in the third they went down and they ended up losing the game 4-2. I think it was
5-2. I think
5. The result does not matter. Boom. Boom, got you back. And so in the post-game interview, Sheldon Keefe, the coach, said, he's like, I think we played the best game we've played this whole season. He said, if we played this game the way that we played it tonight, 100 times over, he's like, 99% of the time we would win the game.
Love it. This
one time, it did not work out, right? And you heard that from the coach. You heard that from the players. The players thought it was a great game. They played the game. They played the game very well. And look at what the result was. It was a negative result. I think that's a perfect example for this, in the sense that, sometimes it does not work out. Guess what? That's what you sign up for. Not every trade's going to work out. But the trades that don't work out, when you qualified them, were they trades that fit your plan? Right? If they fit your plan and you qualified them based on your plan and you took a loss, that's the cost of doing business.
Love it, man.
All right? That's the cost of doing business. So that's what you got to focus on, the process and not the results. Because like George said, you cannot control your profits. What you can control at the end of the day is the risk. All right? And,
beautiful.
Excuse me. Further to that, solution number 6. A big one, a really, really big one here to help you guys prevent that P&L mindset from manifesting is to build confidence and trust in yourself and your ability as a trader by mastering one single setup first.
I love this.
One single setup first, and then build up to other setups. Then you can start looking to load up your arsenal of tools and, be able to catch all those pullbacks, the breakouts, and all of the fades. Right? The idea here is that you master one setup, you get to know all of the intricacies of how the setup works, what it looks like when it does work, what it looks like when it doesn't work, and that is going to give you confidence in execution. And this kind of relates back to what we said earlier. Once you can build up a chunk of house money, of, the capital that you've extracted from the markets, then you'll have confidence. Then you may start looking at other potential setups. But really, until you can get to that point, focus on one single setup and focus on executing that setup flawlessly, right? Focus on that process and not the results. And you're going to start to see the results.
Yeah, you gotta start. If you can't do one thing consistently, there's no point of building on top of that foundation. It's more worth your effort to figure out how to do that one strategy consistently versus looking for another one. You know how to do a slap shot, Mark? You know how to do a wrist shot. Have you ever tried
all the shots?
Huh?
I know how to do all the shots.
Have you ever tried a slist shot? Slap wrist shot.
Slap wrist shot? Isn't that a snapshot?
I suppose. All right, that analogy doesn't work. What I'm saying is,
Got him.
Got him. You can't do both at the same time, and that's the important part. And to wrap up this episode and this hockey stuff as well, did you know that Lord Stanley never made it to a hockey game? Isn't it ironic? These teams fight so hard
For his cup, yeah.
cup who's named after a guy that never went to a hockey game.
I didn't actually know
That's
that.
almost unfair. Anywho, last
fun
one here.
facts.
Number one, the last solution is number 7.
Yeah.
Profit is the score. The game is not over until you're done. And I think we've proven that with this podcast. My advice to you is start looking at the market, start looking for the next trade, and take your eyes off the scoreboard. You're not a spectator. You're creating the score. Own it. Take action, take responsibility, and sign up and take the Trade Pro Academy training and get yourself all set up. We have the strategies for you, the tools of the community to help you succeed. This episode's been a blast, Marky.
It's been awesome. And so, guys, that is going to be a wrap on today's episode. Thank you guys so much for listening. And again, as we usually ask at the end of these episodes, if you guys can think of one person in particular who would find today's message helpful on their trading journey, please share this episode with them. And also, did you know that you can leave reviews on iTunes? And if you guys enjoyed listening to this podcast, please do us a huge favor and just simply pop onto iTunes, throw us a rating there, and leave us a review as well. And until next time, guys, good luck and good trading. Take care.
Thanks for listening to the Mind Over Market podcast. You can find us at tradeproacademy.com. You're listening to Mind Over Markets, a podcast on trading psychology to help you build a bulletproof mindset. Here's your hosts, George Papazov and Mark Borscht.
Hello, Trade Pros. You're listening to episode number 15 of the Mind Over Markets podcast, The Power of Trade Journaling. This is George Papazov and your co-host,
Mark Borscht.
And today we're going to dive into a very important episode in the evolution and success of every single trader. Before we begin, we want to sum up what we talked about in episode 14, talking about watching profit and loss when trading and your positions. We talked about how it was important to know the score and what it helped you do, all right, how to use this actual P&L tactics, and we shared 7 or 8 tips with you or solutions on how to fix the problem and focus more on the process in the trade rather than the actual profit and loss number or figure. If you want to learn more about that and how to fix this tendency that dooms a lot of traders, check out episode 14. Today we got an exciting one for you. And before we begin, a little message from the sponsor. Hello, this is George from Trade Pro Academy. Join us. We're a community of traders, and what we really do is we provide you an educational platform for development. It's not just education. It's not just a trade room. It's an entire community that aims to take you and transform you to a professional trader and put you in a professional environment. From day trading courses to trading psychology, we have everything that you need no matter where you are in your stage of development. So head on over, check us out at tradeproacademy.com, and the best starting point would be to actually look at the free course and the free trading that we have available on our website at the top tab. So let's jump into episode 15. Marky, let's kick it off.
Awesome. Thanks for that great intro, Georgie. Did the marketing team sign off on that?
I don't know.
Yeah,
They don't sign off on anything I say, so probably not.
exactly. Georgie just takes it and runs with it. Welcome, guys. Welcome back to another episode here. Hope you guys have enjoyed the series so far, and that you guys have, seen and felt your own progression. If you've been following along since the first episode, we really appreciate your support and your commitment to showing up and, applying what we're actually speaking about. Because hopefully it's not just we're giving you guys these tips, actionable tips and actionable solutions, and all these the knowledge that we've kind of accumulated through our own experiences, and hopefully you guys are actually taking this and applying. If you are doing that, awesome, good on you. Thumbs up from us in the office here. Yeah, exactly. Thumbs up from us in the office here, and do let us know. Please feel free to reach out to us if this podcast is helping you out. That being said, let's jump into this topic. So trade journaling is a really big topic for myself personally. And I think that, many successful traders, if not all successful traders, have a journal. All right. And so when you think about the trading industry in itself, it's really no secret that the failure rate is really, really high amongst traders. And there's only a very few, call it a select amount, that reach that, that the 5% of profitable traders, right? Why do you guys think this is, right? Most of the time, it's because most traders never really take the time to actually master a single strategy. And oftentimes what we see from our experiences is that many traders, instead of focusing on a single strategy and working on the strategy and themselves to be able to execute it properly, most traders find it a lot easier to just opt to hop from one strategy to another strategy, looking for that one holy grail that will start printing money tomorrow. All right. And so that's not the way that works. So that's the news that we've got for you. Holy grails do not exist. But if I were to put my finger down on, the one thing that would be required in order to find success in this industry, it would probably be having a journal. And, that's kind of counterintuitive to what most people think. They think, I need this strategy, I need these indicators, I need this and that. If you've been listening to this podcast for any time, that's further from the truth. More times than not, in fact, almost all the time, the consistency that you're searching for can be found in yourself, right?
Absolutely.
And not a lot of people will go searching for that, right? Because it's easier to say this strategy doesn't work, I'm going to try this one, than it is to actually master yourself. That's essentially what successful trading is mastering yourself. And Georgie, I'll let you chime in on that before we continue on.
I think it's a great point here, Mark. What I really like about this the most is that you said people hop from strategy to strategy and not knowing one single thing to focus on. I think the lack of focus is because people want to see progress. And the way we measure progress is the dollars and cents in this business. Unfortunately, that's how we're trained. It's all about the money, right? But what about progress along the way? Progression of yourself as a master of the discipline, progression of yourself as a trader, your personality, maybe how long you're trading, what you're trading. There's no way to measure that if you just look at the dollars and cents. And so I think this is where the trading journal becomes very important. I remember having a trader reach out to me once specifically, and he goes, "Oh, I'm losing all my trades every single day. I'm here. I'm trying to win. I apply the stuff. I have a strategy, but I can't seem to get a grasp. I can't win. What do you think I asked him? I'm like, I'll help you out.
Send me your journal.
And what do you think you said?
If not, what's a journal?
Yeah.
Then I don't have a journal.
What's a trading journal? I said, really? Are you kidding me? And so very important stuff.
Yeah, exactly. And, that kind of leads into my next point here is that, we've worked with a lot of traders, and it's still surprising to this date to see how many people are struggling, which is part of the journey, right? But the fact that you're not really tracking anything, you don't really have anything to relate back to, right? If you can't track it, how do you expect to master it, right? And so the way that I want you guys to think about a trading journal is as if you're operating your own business, because you are. All right, think of it this way. All successful businesses keep records. What do they track? They track things such as income, expenses, they track seasonal trends, etc. They know where their strengths lie and where their weaknesses lie. And more often than not, by having that data and tracking it, they can allocate or leverage resources towards their strengths, and they can outsource their weaknesses, right? Make sure that they're a nice, lean performing machine. And so successful trading is really no different. All right. You've got to be able to track your trades, review your performance. But is that enough? All right. Keeping a journal is a great strategy to enhance your performance and to get confidence in your executions. But even if you know what a trading journal is, just tracking your performance metrics alone is not enough. And we're going to tell you guys in today's episode what you should be tracking on top of your, the regular performance metrics in order to ensure that you're getting the most out of your journal. Because at the end of the day, you got to track what you're doing, and you got to track the things that, prevent you from getting to where you want to go.
Details are very important. It's like when somebody comes up to you and says, I want to become a good trader. Okay, great. What does that mean? Or I want to become a better trader. That's like going up to Tiger Woods and saying, I want to be a golfer. Like, how do you start? How do I become a better golfer? Well, what are you good at now? Where are your challenges? What have you done in the past? What do you plan to do? Based on what you've done in the past, what has been the result? When you lose that information, it becomes meaningless to try to improve, because what are you going to improve on, right? And that's kind of how I liken this, is like, if you're going to work on something, and you constantly have to work on something as trading. I've been doing it for nearly 20 years, and I'm still working on things. If you're going to work on things, it's important to know what it is you're working on, and then creating a set of data based on the results, so you can continue to tweak it.
Exactly. And so before we can kind of introduce some of the, the metrics to track and what you actually want to track, I think it's important to, kind of peel the layer of the onion back, if you will, and look at what the benefits of journaling in its own essence, not necessarily keeping a trade journal, but just keeping a journal in itself, how that can benefit your life. And then we can look at how keeping a journal will help benefit you as a trader. And then we'll follow that up with some of the solutions and some of the metrics that you guys should also be tracking on a daily basis with regards to your trading. All right. So let's go ahead and get started with this. What are some of the benefits of journaling? Well, there is scientific evidence that supports that journaling provides many unexpected benefits. Something interesting I found in research for this episode was that the act of writing accesses your left brain, which is your analytical and rational side. All right. And so while your left brain is occupied, your right side of the brain is free to create and to feel. So in sum, writing will remove mental blocks and allow you to use all of your brain power toward getting a better understanding of yourself, a better understanding of others, and a better understanding of the world around you. So
interesting. So it's like the act of writing ties up your rational part, so you can open up the feeling more.
Exactly.
That's a really interesting scientific point that you bring into it. And I think that's true. A lot of the times in the world, we try to justify things rationally and logically and analytically, especially people that are drawn to the profession of trading. Interesting. Okay.
Exactly. And so we're going to read through some of the benefits of journaling that we found here. I'll start it off with benefit number 1, and that is that journaling can help reduce depression and anxiety. All right. So there's been studies done where there are patients that are, they're either sick or they are going through anxiety or they have depression. And it's actually been studied that by writing about what you're going through and being optimistic going forward can help actually boost your mood. And like this evidence said here, the fact that when you're actually writing, your left side of your brain, which is the logical part, is tied up, right? Which gives you the right side of your brain the opportunity to create and to feel. All right. And so there's been studies where, patients have written about what they're feeling and how they would like to feel. And just getting that on paper in itself helps to boost their mood.
Amazing. And benefit number 2, which is in line of benefit 1 as well, is journaling helps cultivate gratitude, which is really important because as you look at journaling and what it does for you, what are you going to write? So it's important to note that this isn't trade journaling. All right, this is just journaling as a whole, the act and process of recording on a daily basis what you feel, think, etc. All right, or anything that you want to journal about. So journaling helps cultivate gratitude, especially when you do a gratitude journal, a gratuity journal. It's super important to write down the things that we are grateful for. Because as a human society, we're constantly seeking more, we're craving more, we desire more, and that's not going to change. The human animal needs more to grow. But at the same time, in this pursuit, we sometimes miss to turn around and look at how far we've actually come. And this is where the gratitude's cultivated. You know, for the things that you already have, you have to realize that those things you've earned and created and accumulated are things that people would do anything for. Right? It's important to remember that we already have more than most people on a population basis, especially if you've been born in like Western culture. You know, you've had a chance at education, you had a chance at schooling, at a job, you know, at clean water. Like even that's such a huge thing. It's like there's so much to be grateful for. And no one has a lack of things to be grateful for. And as you practice journaling, it creates a sense of gratuity, and that sense of gratuity increases your self-worth and helps you reduce anxiety and depression.
Awesome. So that is the second benefit. I honestly think that's probably one of the biggest ones.
Me too, 100%.
Based on this list that we've kind of compiled here. Benefit number 3, very similar to the first one, journaling can help with recovery from trauma. All right. And so it kind of further to what I mentioned, when patients or when people going through trauma basically write about their actual stresses,
Right.
It helps them with the actual recovery from that, right? It's been said that expressive writing can have a healing impact, right? And that our language expresses our realities, but it can also help shape fresh realities. So our language is an important link between the mind and the body, right? And so when you speak on these stresses, it almost lets you release it.
Yeah, that's what I was going to mention. Is important. That's the important part about journaling trauma, right? It's that release, because when we go through trauma, we tend to bottle that stuff up.
Yeah.
And this is really controversial, by the way. I'm not a doctor, nor am I giving medical advice, nor am I liable for anything I say on this podcast. But but there are studies linking specific traumas to specific types of cancer, which is pretty phenomenal if you think about it. If you had somebody cheated on you, that kind of emotional trauma, it's linked to very specific types and areas of cancer, which is really, I'm not going to go too much deeper into that. You can kind of put your imagination to work, but if you're able to detail your trauma, the act of talking about it or putting it on a journal is like therapy in a way. It's therapeutic for that purpose. And so this is important for trading. If you have a very traumatic, really bad day, what a better way to get over it than to write about it? How do you feel? Because in this business, you may not have a trader next door. Like, in Saturday when you're mowing your lawn and your neighbor's like, "Hey, Friday, how's the kids?" That you could talk to him about a few things, but he's not likely going to be a trader. And so because if you're not in a community like ours, you may not have other traders to talk to. At the very least, you're talking to yourself. You're talking your way through any experience trading-wise that may be traumatic and giving yourself some feedback. At the end of the day, we have to be both the boss and the worker in this business. So it's kind of a communication between the Mark or the George that's the boss and makes the rules, and the Mark or the George that executes the rules.
Yeah, exactly. Benefit number 4.
I got excited there. I'm sorry.
He did. Keeping a journal can improve memory function. All right, this one's kind of self-explanatory.
Wait, what were we talking about?
Someone hasn't been keeping their journal, right? So keeping a journal can help improve memory function. I think this is pretty self-explanatory. We don't really need to drive in on this one.
Number 5.
And we'll hit benefit number 5. Georgie, you can go ahead.
Strengthens emotional function and keeps memory sharp. It's pretty much a cultivation of a lot of the other ones. So there you have it. Scientifically, there are a lot of benefits of journaling. And, it's important, and it's specifically important in the crazy world of trading.
Exactly. And that's a great little underhand there for me, Georgie. Thank you.
Gotcha.
Which is going to lead us into the next segue. So for the traders out there, this one is really going to relate to you guys. So we kind of just went through some of the benefits that just keeping a journal, an everyday kind of a journal, can have the benefits in your life. Now let's take a look at what some of the benefits of keeping a trading journal can have in your life and with regards to your trading performance. So one of the things that we kind of look towards and in researching these notes is obviously we look at other performance coaches. And one notable figure in this trading arena is Dr. Brett Steenbarger, who we are putting it out there. We're going to manifest this, that we're going to get him on the show at some
We'll
point.
get him on the show. We have a really good contact, and we'll get him on.
We'll get him on the show somehow. But until then, here's a interesting study that he kind of put together, and he said that one of the first things that mentors at trading firms recommend to their apprentices is to keep a journal. All right. And he mentions that there are two strong reasons why keeping a journal is important and is such a powerful learning tool for us. Number one, I kind of briefly glazed over this. Journals can reflect and shape our realities. Right. So that first little bit there kind of goes into the topic here that expressive writing can have that healing impact. All right. The language that we expresses our realities and can help shape fresh realities. And that language is an important link between mind and body. Furthermore, he kind of mentioned that there were generally two types of journals that he found most managers would use. And the two types of journals were essentially, they were journals where there was a lot of venting going on, or it was kind of reacting. And then there was journals where they were focused on solution-focused journals. And based on this study, he basically found that the managers that were using these solutions-focused journals were more likely to keep consistent with their actual journal entries, and B, they were more likely to find the writing to be more empowering and helpful.
Doesn't that sound like in effect managers and then at cause managers in that order?
Funny how that works, right? Really funny how that works, right? And if this sounds new to you guys, I believe that was episode...
Literally number 1, wasn't it? Cause and effect and being at cause?
Literally
listen to episode 1 of this podcast. For those of you that are joining us new, episodes 1 through 5 are a kind of rapid but very powerful, structured mini trading psychology course and all psychology course. Improve your performance psychology as a whole in 5 lessons. I'd really recommend you guys start there and check it out if you're curious about how that works.
Exactly. And reason number 2 why Mr. Steenbarger considers journals such a powerful tool is that they can enhance learning and development. So something we've kind of already covered, but more specifically in this example, because of his background in financial markets and as a performance coach to many prop firms, and I believe some institutional desks as well, he's found these kinds of things. So the journals of the most successful managers served learning functions. The journal entries rather, they specifically analyzed what happened in the recent past, but went further to frame goals for going forward. All right. So it basically, the next line goes, it struck me that these successful journals had to become platforms for deliberate practice, evaluating experience, making corrective efforts, and re-evaluating performance after those efforts. Right. So, at the beginning of the episode, when I had mentioned that keeping a trading journal and just recording your trading metrics is not enough, you've also got to be focused on solutions. It's got to be solutions focused. And, Georgie also made this point at the beginning of this episode in the sense that you've got to have some kind of goal that you're feeling like you're getting closer towards. And if you can start implementing a solutions focused journal where you're looking to find ways to improve your performance, to be able to kind of track not only those important trading metrics, but also your emotions.
Yep.
And we'll touch on that shortly. Being able to track those things and have goals for yourself and focusing on those solutions, you can make it a lot easier on yourself to stay consistent with those journals, because you'll be feeling like, okay, if I review this, I wanted to get better at, let's say, managing emotions pre-trade. You want to work on that. Great. You give yourself a goal. You give yourself a solution, how you're going to do that. And then you reflect on the next session. Did I do that? Right. And so those are some of the benefits, the major benefits that we got from Mr. Steenbarger as they relate to trading. And we've got a couple of our own here just from our own personal experience. that we'd like to share with you guys. And so those go as following: the benefits of journaling for traders. So journaling can improve self-awareness, right? This is a big one. I kind of touched on it. And self-awareness is really big when it comes to trading because, this is a lonely game. Unless you're in a community, even if you're in a community, you're the one that's at control of the trigger, if you will. At the end of the day, you're the one that clicks the button to buy and to sell, right? And so if you can improve your self-awareness by keeping a journal, that's going to really help you in the long run to maintain your emotions and really to focus on executing your plan as flawlessly as possible.
Love it. Benefit number 2 is that you learn to identify trends and patterns. This one to me is huge, Mark, because think about our culture in today's age. We literally track, analyze, and obsess over everything. Like there's an app to track your calories, your heart rest. You wear one of those watches, and then you wake up in the morning, you're like, let me see how my heart rest pattern was over time. We track everything, every little detail down to, I know some people have an app that times them out if they look at their phone for too long.
Yeah, we are literally in the information age.
Yeah, we're tracking this information and trying to do something with it in every other aspect. But for some reason in trading, where it's the most important, we skip that step. All right. And I think it's super important because if you don't have information, how are you going to make decisions? Right?
Exactly.
It's like having a business decision. You go to the executive meeting and they're like, okay, you have to vote on this. And you've never read a single report or have no background. It's like it's just a shot in the dark. And I would challenge that traders who aren't using a journal, every single trade they're doing is a shot in the dark.
It is. And, kind of further to that point, if I were to ask you, the listeners, if you can read back or kind of explain to me the last 10 trades that you took, would you be able to do it? Would you be able to give me the exact reasons that you got into the last 10 trades that you took off the top of your head?
Not in my best of days. Not even if I did 10 trades in the last 10 minutes would I be able to do that.
Yeah, exactly. And so this kind of goes back to, what we mentioned at the beginning, where you have traders that are, they're struggling to find profitability and struggling to find consistency, yet you ask them about what the last 10 trades look like. They have no idea, right? How do you expect to get out of that slump, right? And start progressing towards profitability if you're not really following any procedures for consistency?
Yeah, 100%. I think we could go a little bit deeper on that. I know we're going to go off script a little bit here, Mark.
All good.
But I feel like that's why sometimes when we lose money trading and we don't have a journal, we feel the pain, like personally, and we don't know why it hurts. It's like if you lose some money, but you've created statistics that you're tracking, that now you have a learning opportunity. You haven't lost money, you've paid for data, right? You're in the data business. And I think when people lose money and don't have a journal, they're like, I don't know what happened. It feels emotional because that's all you have. You didn't track the information that was important. You only tracked the emotional part of it. If you have a journal and you lose, let's say, $100 in a day, $200 in a day, you didn't lose money. You paid for $200 worth of data. And now you could do something with this data. So I would challenge the people who feel like emotionally like they're losing capital and aren't journaling to start journaling, because that's what you're paying for. You're not losing money. You're investing in data on which you could improve. I thought that was a neat point.
I think that's a very neat point. And that kind of goes on to one line that I kind of wanted to say for later, but I'll throw it out right now.
I stole the...
Yeah, and there's the line that I kind of came across, and it was something along the lines of losers either win or lose. Winners win or learn.
Beautiful.
All right. And yeah,
I love it.
Hats off. Lovely, lovely. Yeah. So, that's kind of building on to Georgie's point there, in the sense that, I don't like to consider them, losses. I like to consider it feedback. That's kind of the way that I framed it for myself. Is I'm not taking a loss. I'm just getting feedback.
Absolutely.
And based on that feedback, what can I do to improve, right? And this is where having a journal is important, because you can see, was that journal part of the plan? Were my emotions in check, etc. We'll get onto that shortly. Don't you guys worry. But for now, the next benefit of journaling for traders, it helps you manage emotional triggers. All right. I can definitely speak on this one, because this is one where I struggled with, and I still continue to struggle with. Not to the same effect, but I think it's important to note, guys, that, even if you've been doing this for a while, nobody is perfect, right? And I'm not claiming to be perfect myself, but emotions will get the best of you at some point. And at best, what you can do is you can find out what your emotional triggers are. And if you can find out those emotional triggers by keeping a journal, finding the times where, let's say your trading really gets sloppy if you take 2 losses in a row. For example, you start revenge trading, you get upset, you want to make that money back quickly. That's one of your emotional triggers. Okay, fine. Now that you know that, the next time you get that same emotion in real time, you can catch yourself. Take a deep breath, step away from the trade station, whatever it may be. These are the kind of things that help you with developing consistency. Hard work pays off.
Well, I mentioned that in there for a reason, actually, because I wanted to ask you, Mark, what was one of your toughest emotional triggers to work through?
Revenge trading.
It's so funny. Me too.
Revenge trading, and you know what? Yeah, I would say revenge. I want to say it's a big battle between ego and revenge trading, but I think at the end of the day, they're kind of the same thing.
What do you think causes the revenge? Like, what at the end of the day, what triggers you to want to seek revenge? This is very important. I have my reason. I'll share a quick little story. That's why I wrote that line down there.
Okay. What causes me to seek revenge? I think it was the need to be right.
Yeah, to satisfy the ego, more or less.
Mm-hmm.
And, that's amazing and fantastic. You're being honest about it, because it takes that level of honesty to reach mastery of this business. And it makes sense. For me, and the reason I wrote hard work pays off is because I used to have a belief. You have to remember, my parents are immigrants to this country. We came with nothing. And it's like, the value that was instilled with me is that hard work pays off. You have to work hard in order to make money. You have to work hard to survive, not to make money, not to live like the lifestyle of a millionaire. You have to work your ass off just to pay the bills. That was the values that was instilled in me. And so the reason this was an emotional trigger for me is because I know that trading is not working hard. It's working smart. I know that trading is not an hourly job.
There's anything.
I know that it's less and more. I know that it's variable income. And I know all that before I sit down and trade. But when I sit down and trade and I'm in danger, it's too late to think. I start to react. And my reaction's always been the value, hard work pays off, right? Or hard work is how you earn money. So what would I snap to? I would snap to, I got to work harder, all right? How do you work harder in the trading business? You're not going to stay longer hours because there's only 24 hours a day, right? And you know that staying longer is not how you fix it. Now, how do you work harder? You do more trades. And so what that would do for me is that revenge trading would force me to overtrade. And that was based on the value of me believing that I had to work harder, come back from things. It's like hard work pays. Those were the words that kept ringing in my head. And I noticed that from my journal. There was always revenge trading. I'm like, what the hell am I revenge trading for? And then I realized I'm fulfilling the value I used to have, that like I have to work hard in order to do good in life. And whenever I felt like I wasn't doing good, when I saw a negative P&L on my screen, I was like, damn it, time to work hard.
You know what? I'm glad that you kind of went off on that, because that got me thinking, and I could probably say the same thing, with my trading as well. The hard work pays off. I'm sure a couple of you guys listening, and you ladies as well listening, can kind of relate to this. If you're coming from a background where, like Georgie said, either you've had these beliefs since childhood, or you're currently working in a labor-intensive kind of a job, right? And hard work pays off. That's the thing. And I kind of exhibited the same things when I started too. When you start the day off, and let's say your first trade of the session is green, it feels almost too easy.
Yeah.
Right? It doesn't feel like you're working hard. And I feel like a lot of people will relate to this, because I see this all the time, whether it's our community or, searching through Reddit, whatever communities are out there, right? We're everywhere.
Yeah.
Trade Pro sees everything. Right? And so what I want to get at here is the fact that I see a lot of people, they say, I have my plan, I can get good trades, but when I'm not in a trade, I get bored.
Yeah.
And that's where I start getting clicky, and I can't control that. How do I control that? I think what Georgie just mentioned is kind of your route towards changing things around, right? Because if you've grown up with the belief that hard work pays off, right? And let's say your first trades, or whatever, let's say you're having a good session, you have a hot hand. Let's say the first 2 or 3 trades end up green, right? If you're coming from the background where hard work pays off and it doesn't feel like you're working hard, you are, what's the word, vulnerable.
Yeah.
You're vulnerable to start sabotaging yourself because it doesn't feel like hard work. And when the days where I tend to think I'm the most focused, the days where I start off with losses, because now this feels like work.
Yeah.
And now hard work. This is hard work to get back to the green. Now it feels like work. Now I'm more focused on taking the right setups, etc. Right? More patient with everything. And so I really like that you kind of opened up that eggshell.
Very interesting, isn't it?
Yeah.
It's my little, but it's because it's like if you have a hard work pays off value, when you're making money, it feels like you're borrowing it, like it's not deserved. And when you're not making it, feels like now's the time to work hard to kind of make it back. But I think both of those are very dangerous. And so for me, I overcame that when, you know how I overcame the belief that hard work pays off? Trying to explain to my grandfather years ago at the dinner table what trading was. You got to understand.
What I do, yeah. We've had similar, I haven't had to explain it to my grandparents, but my parents have had the difficulty trying to explain.
Yeah, the story is very quick. I'm sitting here telling him all these things, translating in Bulgarian, because I speak Bulgarian, but not to the daily conversational level. I could convey complex topics, but I sat at the table with my grandfather. I'm talking to him, telling him that this is what I do, this is what I do. You know what he asked me at the very end? He was listening, paying attention. I'm like, wow, he's getting it. I'm doing such a good job. You know what he asked me at the very end? He's like, wait, when do you ever touch or move stuff? He's like, do you use your hands at all? I'm like, oh man, you missed the whole thing.
In one ear out the other. Yeah. Because it doesn't seem, to that generation, it's completely a wild topic to think.
Yeah. Well, we also have to understand that, when people think that way, you could ask them, hey, why does it need to be hard for something to pay off? But if you look at people who have been raised with those values, if you go back to their family history, you'll find plenty of examples where hard work was necessary, right? And you look at our generation, we're enjoying a lot of the benefits, but previous generations that have gone through the Great Depression stuff have examples where, times were hard. So, we've kind of spun off a little bit.
Way off topic. That's all right.
It was a good discussion because I think if you have revenge trading tendencies, check and make sure it's in alignment with your value. If you have a revenge trade tendency and one of your values is like hard work pays off, safety is the equivalent of how much effort you're exerting, now you have some grounds to refocus.
Exactly. So let's get back on topic here. We've got a couple more benefits for trade journaling as far as it relates to traders. Then we'll get into the meat and potatoes, what to journal. So the next one here, keeping a trading journal will help you define your strengths and weaknesses. So further to the example I mentioned earlier with regards to a business, for example, tracking their daily operations, seeing where their profits are coming, where their expenses are going, and being able to leverage that data and find inefficiencies and find efficiencies as far as where their operations, what their strengths are and where their weaknesses are, right? And so if a business uses this kind of data to see how they can optimize their operations, I think it's important that you do the same.
Yeah.
Right? At the end of the day, you can focus on your strengths and mitigate those weaknesses. Case in point, kind of an example here. Let's say that you've been trading a strategy for, let's say 3 to 6 months, for example. You've got the data on that. And let's say your strike rate is, let's call it 50%, right? But let's say of that 50%, maybe 70% of the time you took short trades, you were a winner in those, right? And let's say, 40% of the time you took long trades and you won 40% of your long trades, whereas you won 70% of your short trade.
So keep shorting.
Exactly.
That's your strength.
So the journal is suggesting to you that your strength lies in shorting the markets, which is fine. Fear is 3 times greater than greed, so you tend to get paid quicker. In fact, I like to get shorts a little bit more than longs, right? But this makes the point. If you know where your strengths and your weaknesses lie, you can work on them. That's at the end of the day, what the focus of a journal is.
And be honest with yourself here when you're journaling. You're going to be the only person that reviews it unless you want somebody else to have a look at it. this isn't one of those weaknesses like a job interview. Like my weakness is I work too hard. You know?
I care too much.
Yeah, I care too much about this company. But just be honest and put some things on there that if you want to rename it to a challenge. Strengths and challenges. Then you're focusing on something that you could improve that's challenging and fun. But highly big believer of this.
I like it. What's another benefit of trade journaling? It will help keep you out of questionable trades. All right. So
What if you don't do any questionable trades ever?
Well, then I don't know. You're probably not a real trader.
You wouldn't be me.
Yeah, you are probably not a real trader. And in all honesty, probably a demo god. But keeping you out of questionable trades, this kind of builds on what we mentioned earlier. You know, knowing where your strengths and weaknesses lie, especially with those emotional triggers. All of my questionable trades have come as a result of an emotional trigger. All right. And I know where those lie now. And I've gotten a lot better with working with them, working with those triggers. I've developed safeguards, if you will, to save myself from myself. Because that at the end of the day, like I said, you're the one that's in control of the most, right? You control the button that clicks buy or sell, right? And if you know what triggers you and that's happening, guess what? You know it's probably a good time to step up, get away from the table, and come back, clear up your mind, and come back to the trade station.
And has that helped you in like other areas of life? Just curious, Mark, the emotional like management and trading.
Other areas of my life, yeah, it has helped me. It's made me almost a little bit more like a robot.
Yeah.
I don't know if that's a good thing or not, but I tend to find that I'm a lot more objective to things now.
Yeah.
Right. I don't get like if somebody tells me something before I used to, I had my perceived emotions on the topic, and then, based on what drove me emotionally or internally, that's how I would kind of see it. But nowadays I'm more, like I said, I'm more objective to it. I don't really let emotions draw me into certain topics. Sure, I can have things that I don't agree with.
Right.
So I almost hit you guys with double negative. I might have things I don't agree with, but I'm at a point in my life where, you can give me all of those points and I'll listen. And if those points make sense to me, then, I can side with that. I have no problem. Let's call it this way. I don't get married to my own opinion.
Right. So
For
you're more
example.
open and like open to hearing other people's models of the world, theories, ideas, even if they don't jive with yours.
Exactly. And I think that's where development happens at the end of the day, is when you're able to, and this kind of relates back to trading, right? Because the idea of getting married to a trade, for an example, right? If you think it's going to go up and you get long and it doesn't go up, then if you're married to that idea, then you're going to be the bag holder that's holding it as it's sinking, right? Whereas if you're the trader that doesn't get married to the idea, you can flip your bias, on a dime, then great. You cut those losses and you look for potential next opportunity.
I love that. And let me just reframe this. I think this is really interesting. How much would you say, let's just make up a figure. Like how much money would one person lose due to emotional triggers in trading? Let's say it's 5,000, 10,000. One way to look at it is like lost capital. Another way to look at it is if you paid that much money, but it gave you an emotional edge, not just in trading, but your life, the way you're able to deal with responses, is it worth it? Could you say that instead of wasting $10,000 on emotional trades, you spent $10,000 on emotional coaching, you just got it from the market? Just an interesting question.
Georgie's always got a way to flip things around to make you think about it.
It's interesting though, right? Because I thought about this too. Trust me, I've thought a lot about this stuff. Is when I've lost money in the market, I've called it a loss. But like, it's polarity. The universe works on polarity. Every time you lose, something's gained. It's like, yes, you lost whatever X amount of money. What did you gain from that money?
Yeah.
And I think when people can't answer it, it's not because they don't have an answer. I think it's because they never really thought about it that way. Right. And I thought about it long that way. And I'm like, look, I might have lost some money on emotional trading, but the emotional discipline I've gained now, and if I never repeat those mistakes, was it worth the cost to begin with? And how much would I pay? And it's just, that really flipped my way of thinking towards emotional trading.
That's great, Georgie. And I've also got a quote here from Napoleon Hill. And this comes from, one of the best books that I've read and I'm rereading again, called Think and Grow Rich. And this quote is on page 55 for anybody that does have the book handy. And the quote reads, "Every adversity, every failure, and every heartache carries with it the seed of an equivalent or a greater benefit.
Damn, I absolutely love that quote and that book. And I love that that popped into your mind because you read it enough now that you're like, that's becoming part of the routine. It's very deep, and I agree with it 100%. As an eternal optimist, it's the only way I've ever seen it. And I know that sometimes it can be challenging to see it that way, especially in the face of like some deeper, more challenging adversity. But that's very powerful stuff. I love it. And that's one of the benefits of journaling is you can notice these things and continue to progress. And the last benefit for journaling for traders is that it encourages performance-driven growth. If you record everything and if you make decisions based on the statistics, it's not hard to see how you're going to perform better. All right? It's like Formula One. There's an engineer in the pits and they're in charge of steering the strategy. They dial things in. But what do they do before they even race? They do before they even qualify. They'll do a test lap. And the reason they do test laps in Formula One is to record all the data. How are things performing? That way they can decide what could they adjust. And so in any performance sport that you watch or you've played in your past, there's been a recording of statistics. Right? Think about it. Like statistics is a huge thing. There's bookies, there's gambling industries formed on it. But more importantly, every time there's a performance-driven sport or activity, performance is recorded. You need to do the same for yourself so you can continue to optimize, improve, and roll with it.
Yeah, exactly. And I will bring up another thing with regards to the importance of tracking data. Look at probably the most successful companies these days. What do?
Data.
Your Facebooks, your Googles,
Amazon.
your Amazons, right?
In fact, Amazon takes the data and creates competing products.
Ask me how I know. That's another tangent. But to that point, right? You guys, hopefully by now you're understanding really how important journaling is, how it affects your psychology from a personable level and also from as it relates to trading and your trading performance. So we've given you guys some of the benefits of journaling. We've given you guys some benefits of trade journaling. And now we're going to discuss what to actually journal in your journals. So before we discuss those actual, the metrics that you should be journaling, let's take a moment to suggest some of the mediums in which to keep a journal, right? So there's a lot of different ways to keep a journal. The old school method, pen and paper. Don't see very many people do this one. In fact, there's, I think, only one person in our community that I know keeps a journal. Kim?
Yeah, I knew one other person who wanted to send me their journal, and they sent me like pictures of their notebook. I'm like, you're going to have to type that in, pal.
Yeah. So, that's one way to do it. By all means, pen and paper can work if you can keep track and keep organized. You're going to have to get a couple of binders if you're a day trader. But the other medium and the one that I kind of prefer is another manual basis. And I like Evernote. You don't necessarily need to use Evernote, but anything that you've got that's online, it's a cloud-based platform. And ideally, you can access it across a multitude of devices. I like to be able to access it on my desktop. I like to be able to access it on my laptop. And I like to also read. In fact, I review my trade journal, like the actual review of it, the analysis of my trade journal on a daily basis when I'm taking the streetcar back home from the office.
Wow. So on the way home.
On the way home. Yeah.
Because that's what I was going to ask you. When do you review it and do it, I guess?
Yeah.
When do you actually fill it out? Is it, and I'm assuming to the listeners are also probably curious, is it after every trade, during the trade, afterward? How do you like to do it?
Yeah, exactly. I'll get into that process in just a moment.
Sorry.
Right. So
got excited.
He got a little too excited. Got to keep him on track here and there. And so Evernote, Google Drive, Google Docs is a good free thing as well. Microsoft OneDrive or OneNote, that's also a free option. Great things to use. And then you've got the actual automated journaling software. So I believe TraderView. TraderView is one of them. Shout out to TraderView. You guys are doing a good job.
I love that one. It looks simplistic, but it's very powerful.
Yeah, TraderView is one of them that I know.
There's another one I think from TopStep, isn't it? Or one of these companies that do education as well that provide it as well. Edgewonk or something?
Edgewonk.
TradeMetria, and then
Yeah, so you do have a couple of some online options which they essentially auto import the data for you. But I like personally to have that personal touch, and I don't like to have my stuff imported in because then I'm not really reviewing it. I like to go in and literally copy the charts over to Evernote, and that way it keeps me accountable because I know if I take a lot of trades throughout a session that I'm going to have to journal each and every single one of those. And if I'm manually taking those screenshots into my Evernote file, it's going to be a bit of a tedious process. And as much as I love work, it's all about working smart, not hard.
Yeah, and a lot of the journal isn't about the end result. It's also about doing it. The act of putting it down is therapeutic, and you can learn a lot as you speak it out.
Exactly. If you guys haven't already caught on to that from the benefits we spoke on.
So I like the Evernote one as well. Evernote or Google Docs or anything that that involves more of you doing the work.
Yeah, exactly. So that is the medium that we can use to keep a trading journal. All right. As far as the process itself, let's get into some of the actual relevant metrics that we like to use, more specifically that I like to use for my journal. So number one, I look at the asset that I traded. I'll mark that down. Number two, the position size used. We trade futures. We day trade futures primarily here. So that's really quite simple. It's a couple of lots. Whether you go long or short and the reasons behind the entry, the strategy you use to execute the trade. So we teach, 5 strategies?
Or 5, yeah.
5 strategies at Trade Pro Academy. So you've got a good arsenal of tools here, and based on whichever strategy you're executing on, that's what you're going to put into here. The time and date of the trade, of course, your entry price, your exit price. This one is, you can put it there, the final P&L result, and I'll speak on why you can keep that as optional. Screenshots of the trades, obviously. We use a 10 tick, 5 tick, and a footprint chart. So I get a screenshot of all 3. You got notes with regards to why we took or disqualified the trades. And then my personal favorite, trade grading or performance grading.
This is the grade you give yourself, or?
This is the grade that you give yourself. Exactly. So we can put this list together in the show notes for you guys. So you don't have to, write this down with your notes. Even better, I can give you guys the link to the YouTube video with regards to that whole process, so you can see the whole thing. And so those are some of the main things that we look at. But the most important thing is to track your emotions. I think that is where, of the traders that do keep a journal, the ones that are the most successful, they don't track only their performance metrics. They also track their emotions. All right. And they track the emotions that they have, pre-trade, during trades, and after trades as well. And again, there's a couple of cool softwares you can use. I know Anthony Drager from Edge Trading Group has a verbal journal.
Yeah, his product's fantastic. Actually, I'm going to put a link in the description below to that. I highly recommend you guys check out his verbal journal. It's exactly what it sounds like. You verbally journal. You just speak into the mic. And not the most creative guy, but genius idea.
Yeah, no, the idea is awesome. And essentially what it lets you do is you can put a timestamp on your actual charts and record in real time, what you're seeing. And then you can go back at the end of the day, all those timestamps will show up, and you can actually review what you were, your emotional state at the time, whether it was pre-trade, during the trade, or after the trade. And that's really a huge, huge tool.
It's really cool. You can color code. You can put voice memos on top of your trading charts that are color coded for different things that you prefer. It makes it very easy to organize your thoughts, but then go back and review them once you see how price actually traded.
Exactly. So it's important to, if you're not going to be using, software like that, to be able to track what your emotions are. So, to George's point earlier when he asked me, what's my process look like? When do you actually take these notes, etc.? The journaling in itself happens after the trading session. All right. But as a trading session is going on, as we're, the real time is playing out, the hard right edge is playing out, I've got a notebook on my desk. And on that notebook, I will have my next best trades. I'll have, if then scenarios, what I'm looking for. And then I have a section where I have, pre-trade, in-trade, and post-trade emotions. So I'll basically look at what my emotions. I do an emotional check. So I check in on my emotions, how I'm feeling, etc. before the trade. right? So before this thing even sets up, what am I feeling? How's my emotions on the day? Am I feeling like I got to make back some losses I took earlier? Or am I in a good spot? I'm up on house money and I'm feeling good on the session. These are the things that can keep me from taking a trade or can add as confluence to getting me into the trade. Or they'll depend on, or not depend on, but they'll facilitate how I actually take the trades. If I'm feeling good and I've got house money and the trade's setting up nicely, then I could probably size in on the trade. Whereas if I'm not feeling the best, I've taken a streak of losses, it's getting to me, I'm starting to check the P&L, right? Then I probably wouldn't be taking that trade, or I'll be skipping on it. So real-time emotional checks are great. Keeping a notebook on your desk is also important. Making note of what your feelings are like I said, pre-trade, during the trade, and after the trade. So you do those at the end of the session, you put it all together, nice little screenshots, your descriptions, and then you basically grade yourself on the session. So you grade yourself, you look at your trades, you grade those trades that were A pluses. In fact, I like something that Victorio did recently, and it's kind of like a daily report card. So it's really simple process. All you're doing is you're putting in your screenshots from the session, you're writing in A plus trades, and then you're putting in areas of improvement, right? So you note down all the trades that you took that were A plus trades, and then any trades that weren't A plus trades, you put those down in notes for improvement. Why did you take those trades? What can you do going forward to prevent you from taking those kinds of trades, etc. And so with regards to the trade metrics, like I said, the grading is one thing, having your actual performance metrics is another thing, and emotions are very, very important. So here are 3 types of emotions that are very important for you guys to take notice of and to start tracking and to give yourself kind of solutions to come up with solutions to prevent these things from happening. So number 1, the first type of emotion that you want to be aware of when you're trading is negative self-talk. Right, this is a big one. In fact, this is one that
I did this a lot in my trading journey, and it did not help. It was the worst thing I've ever done.
Exactly. Patterns of negative self-talk. This happens, I think this happens to everybody at some point in their career. And this often occurs during frustrated moments in the markets. Missing a trade, trades blowing through our stops, giving back money on the day, etc. Those are all types of situations that will create frustration in your trading. That frustration then goes off and creates an anger response that we direct towards ourselves. All right. And then we can go and say stuff like, oh man, here it goes. Especially if you're in a community and let's say your community is doing good, but let's say maybe your performance isn't as stellar as the people in the community, right? You're comparing your chapter 1 to somebody else's chapter 20. At that point, you're seeing other guys are killing it in the community and you're not killing it. Everyone's making money. Here you are sitting on the sidelines. Am I really still a trader?
Yeah.
All right. This is kind of the point where your frustration kicks in, and the frustration is no longer about that specific trade or that event. It becomes directed towards yourself as a person, right? And that's not what trading is about. It's not about you. All right. And so if you find yourself at any point in time with negative self-talk, man, other people are killing this. I should be doing the same. What's wrong with me? Why am I not keeping up when other people are killing it? These are the kinds of patterns that you'll want to identify, and you'll want to note that down in your journal, and you'll want to figure out a way to interrupt that negative self-talk in real time. So this is where the solutions part comes into play. If you find that you're giving yourself negative self-talk, and then you can catch yourself doing it, instead of saying something like, oh man, all of these traders are making money today and I haven't even taken a single trade yet. Like, am I even a good trader? What's going on? Am I not seeing things? Right? Instead of double guessing yourself, you can switch it around. Say, you know what? There's been some opportunities. I'm going to look for the next best opportunity and I'm going to capitalize on that opportunity. Right? So your solution goes from focusing on what you don't have, which is the profits from the markets moving, into changing that focus towards the solution, which is, all right, let's regain my composure, regain my focus, wait for the next opportunity, and then to capitalize on that one.
Love it. Yeah, I honestly 100% love that. It's a good way to start be more towards motivated, right? Because that's what's going to create the actionable outcomes that you want. And when you think about what you want and you talk about what you want, it ends up arriving. So talk to yourself. If oddly enough, talk to yourself how you would talk to your friend, not how you talk to yourself. Because we say the nastiest things about ourselves that we'd never say to anyone or to anyone.
Yeah,
So remove that, eliminate it. It'll serve you.
exactly. And in addition to that, I would say probably check out episode number 5, the topic on the power of positive thought.
Love that episode.
Exactly. That one's going to help you out a lot. So that is one of the 3 patterns of emotions coming into your trading that you should track. Pattern number 2 is that of impulsivity. I think this is one that, all traders also face. You take trades because you're bored. You take trades because of excitement, FOMO. You want to get in on the, on the next best trade, next best stock, whatever is moving. I think Tesla's been hot recently. I want to get in on Tesla.
Yeah.
I want to retire on Tesla.
Let's buy it. It's $960.
Yeah, I think it's around there at the point of this recording. And so when you find yourself trading too frequently or with too much size because or as a result of excitement or boredom or a desire to regain regain profits, or let's say maybe you've had a hot hand and that hot streak's got to continue, right? So I'm going to keep clicking that buy button. When you find yourself taking impulsive trades like this, it can become a problem, right? And so your job here is to identify any of these triggers of emotional trading. And that's where impulsiveness comes from. It comes from emotions creeping into your plan, creeping into your environment as you're trading, right? And so obviously being able to identify these is huge, but also you got to focus on the solutions, right? What can I do to prevent this from happening? Or how can I safeguard myself from myself in these kinds of situations, right? And, in this kind of a situation, there's a number of things you can do. One of them is to make sure you have a checklist. So we give all of our traders checklists to start. It's a good practice to have a checklist and to ensure that you're qualifying. You have a set not rules, but you have a set of rules rather that you have to qualify in order to give you what you would consider a trade or a setup that has edge, right? Because at the end of the day, that's all we're doing. We're trying to get the probabilities in our favor so that when we get into a trade, it's got a higher likelihood of working out for us than it doesn't. Ideally, that's the ideal case, right? And so if you can figure out the triggers that make you impulsive, you've got a good chance to put on the brakes before you can act on those impulses, right? So one of the main ones we say is obviously to have a trading plan. But number 2, put up a checklist. Use a checklist, and let's say for the next month, you got to fill out a checklist before you take a trade, right? And see what that does to your trading. Are you going to be as impulsive? I can't guarantee anything, but with a high degree of confidence, I could say you're probably going to take less trades and you're not going to be as impulsive because now you're not focusing, but now you're not letting emotions creep in. You're remaining objective, and that's the whole point of this game. All right. The final emotion that you'll want to track is patterns of fear. All right. Anytime you are looking at the markets, especially after taking a string of losses, maybe sometimes after making money and being afraid to lose it, right? This will often occur when traders are basically worrying. There's a signs of physical tension where you're thinking about getting into the market, but you can feel your body physically tightening up. Right? What happens if I were to throw this cup at George and he's not looking? Well, the moment
catch it.
You
can't throw it fast enough.
That's a good. He's
I'm
looking
keeping
at
my
it.
eye on you.
He's keeping an eye on it now. But let's say George just walks through the door and I throw this cup at him. The first thing that he's gonna do is probably tense up, right? I mean, unless he's got Neo-like reflexes, you're probably gonna tense up, right? And so signs of worry, signs of physical tension, feelings of nervousness are really good clues for you to track in your journal, right? The idea here is that once you can recognize these fear patterns, you can take deep breaths, calm yourself, and focus on assessing the opportunities, right? And focus on trading your plan, not on what might happen, not on, oh man, if I get in this trade, I might get stopped out. Focus on executing your plan, right? So in summary, those are the three emotions rather, that you should be tracking in your trade journal on a daily basis as they creep up. And again, in summary, those are patterns of negative self-talk, patterns of impulsivity, and finally, patterns of fear.
These are three huge triggers that you could be on the lookout for that could help you prevent bad trades before they happen. So this is very important. Thank you for covering it in good detail, Mark. This is very helpful.
Hey, it's been my absolute pleasure. And so that there, guys, is basically a wrap on today's episode. So hope you guys enjoyed that one. I'm gonna requote that line just because I think it's so powerful. And that quote is, "Losers either win or lose. Winners either win or learn."
Wait, what was it again?
I'll let you play that back, Georgie. Play that back. So at the end of the day, guys, an effective journal not only captures what has happened, it will also connect the present and the future by framing relevant goals. Hope
I
you guys-
absolutely love that quote, by the way, Mark. Honestly, I'm gonna
He's gonna tattoo it.
yeah on my forehead. But
Oh my gosh.
there you guys go. You have the full episode on the power of creating a trading journal, and I challenge you to take this episode and apply at least one part of it. Start trade journaling if you're not, and if you're wondering what is a good trade journal, it's one that you start. That's all that's important, and then work your way up to something that you're proud of. It. At the end of the day, a journal is like trading. It's constantly evolving on your skill, your progress, your experience level. And so the most important part is that you start, not as of today, as of yesterday. Journal yesterday's trades today. Get started. That's my takeaway action for you, because it will make a huge difference. And I don't know one professional trader that hasn't used or isn't using a trading journal. It's that important.
Exactly. Really, really relevant information there, guys. And we're just going to summarize this guy again. So thank you so much, all trade pros, for listening. As always, if you can think of one person in particular that could find today's message really helpful on their trading journey, please share this episode with them, whether it's on iTunes, Spotify, etc. We really, really appreciate you guys sharing this and getting this message out to the trading community, because honestly, it's something that not very many people focus on. And if you've listened to any of these episodes so far, you'll see how we at Trade Pro feel about psychology and the role that it plays in consistent, profitable trading. All right. So that's the first ask of you guys. The second ask is, if you guys are enjoying this podcast, please go ahead and leave us a review on iTunes, and ideally a rating too. Please, pretty please. Big smile on my face with puppy eyes. That's really going to help us, and it's really going to show us that you guys are appreciating what we're the work that we're putting in, and that it's actually having an effect on your lives, right? If you guys can imagine, the podcast, I'm just looking at George. That's the only thing I see. And unless you guys let us know that we're having an effect on your lives and on your trading career, there's no other way for us to get that feedback. So all feedback is appreciated. Good feedback, bad feedback. Please, if you do have a chance, of course, if you're driving, do that when you're in a safe environment. But if you guys have a chance, we'd really appreciate that review on rating and review on iTunes. So until next time, everyone, we got a really exciting next episode planned, but we'll let you guys know what that topic is when it gets released. So until next time, everyone, good luck and good trading. This has been Mark Borscht and
George Papazov, Trade Pro Academy.
Signing out. Good luck and good trading, guys. Take care.
Goodbye. Take care.
Thanks for listening to the Mind Over Market podcast. You can find us at tradeproacademy.com. You're listening to Mind Over Markets, a podcast on trading psychology to help you build a bulletproof mindset. Here's your hosts, George Papazov and Mark Borscht.
Hello, trade pros, and welcome back to another episode of Mind Over Markets podcast. I'm here with myself, Mark Borscht, and my host,
George from Trade Pro Academy.
And we're excited to bring you guys another episode of this podcast. So guys, if you haven't had a chance to yet, in the previous episode, we spoke on the importance of keeping a trading journal, and we kind of listed a summary of the benefits of doing that. of doing just that, of keeping a journal, and some of the benefits that relate to keeping a journal as far as, personal benefits, health benefits, etc., and then some of the benefits as far as trading performance is concerned. So if you guys haven't had a chance to yet, make sure to check out that episode. However, in today's episode, we've got a really, really exciting topic. But before we get into that, I am going to pass the mic on over to our sponsor here, who's got a message to share with you guys.
Thank you, Marky. This episode has been sponsored by Trade Pro Academy. It's George. But in all honesty, if you've ever felt the overwhelm as a new trader and you're wondering, where do I begin? It's great to listen to the trading podcasts and consume free information. But if you're like, look, where do I really start in a structured program? Well, I have an answer for you. We have a 6-lesson free training available on our website, and it is the optimal and perfect starting point for new and intermediate traders. It's designed with you in mind. So head on over to tradeproacademy.com/free training or hit the free training button at the very top of the website.
Awesome. Thank you, Georgie, for sharing that message. And so let's get started with today's episode, everybody. Today's episode is going to really relate to a lot of the people that are towards the starting point of their journey. A lot of newer traders, you guys are gonna be able to relate to a lot of what we're saying. And hopefully you guys do take this advice and you run with it, because
it's a little controversial, this episode.
Yeah, it's a little controversial, and it's going to be a lot different than what you'll see a majority of trading education suggest, right? And from our point here is, if you want the same results as other people, you're going to be doing the same things as other people, right? If you want good results, you're going to have to do things differently. And today's episode is going to show you guys why it's good to do things differently and how to do things differently. So if that wasn't a long enough walk around the topic, here is the actual topic, guys. Why your demo trading results do not matter. I know, right? So, ladies and gentlemen, if you are new in this industry, I'm sure you had a good chance to start doing some research on trading education. A majority of what you'll find out there tells you that you should find a strategy. You should stick around with it in demo until you find that you're profitable in demo with that strategy. It'll give you some confidence to execute those trades. And then once you're consistently profitable in demo, it's time to jump into live trading and give it a shot. All right. That is how it is typically sold to most people, right? So you go into demo, you start killing it on demo, you see the strategies working out really well, you're making those consistent profits, and you've built up confidence in executing on your patterns and on your setup, and you decide, okay, it's time to get my feet wet and open a live trading account with the idea that you're killing it on demo, you're making consistent profits. So that means it should be relatively easy to duplicate those results, or rather to replicate those results with real money on the line, right?
We're going to debunk that.
It should be pretty easy to do that, right? The unfortunate reality, guys, is that when most new traders go live after a streak of success in demo, the results are actually far from what they experienced in demo. And you know what that leads to? A lot of frustration, a lot of confusion. Am I seeing things right? Is my strategy not right? And then they have that little streak in live where they're not really getting the results they want. And guess where they end up? Back in demo.
So what do you think is the big, because Mark, back in the day, first of all, we have to understand the industry's changed a lot, right? Back in the day, but to start trading live, you had to start out with a fairly decent chunk of change, like a good size of capital. And these days, there's a lot of innovation and new products that allow new traders to start out like new traders, trading small, but with live money. So what do you think is because I used to be the proponent for sim trading. I'm reformed on this topic. I used to say, you should sim trade, you should hit a 70% win rate and all the good stuff. But guess what? I don't think any of that matters. And so why do you think that, what are some reasons that you would think, Marky, sim trading could affect or could actually hurt your performance and development as a trader? And are we saying eliminating never sim trade?
No, we're definitely not saying to never sim trade. Hold on, that might be a double negative. We're telling you not. Wow, I'm catching myself off guard here. You guys still want to demo trade, right? We're gonna outline how to use simulation mode properly. But there is a time and place to have demo trading in your journey. But what we've typically seen from a majority of traders is that they overstay their welcome
Right.
in demo. And the reason why it can have, negative effects on your trading when you go live is because none of your results on demo are based on emotions,
Right.
right? I know that even when I started demo trading, I got to a point where I was just putting on not stupid positions, but like contracts that I wouldn't be trading for years, right? For
Right.
years, putting on, 30 lots, 40 lots, etc., stuff like that. And just, there's not much accountability. I think that's the danger in it. There's not much accountability, and it's it's like a sandbox, if you will, where you can either develop really good habits or develop really bad habits. And depending on what you do in that demo environment, that's going to translate into what you do in the live environment, right? And so I think that's one of the things. And on top of that, it's kind of a safety net.
I agree. Yeah.
Yeah.
So realistic one. To me, it's like trading. Like trading as an industry is a performance sport, and we've done a few podcasts and mentioned this a couple times already. It's like, and to me, sim trading is like practice, and obviously there's a place for it. And through this episode, we're going to outline how you've overstayed your welcome on sim trading, how to actually use simulation mode properly in your development, and you're going to get a lot of value out of that. But to me, the big thing is, it's like you practice for 3 months and expect to get a paycheck when you suddenly start. It's like a professional sport, right? If you just sit there and you go to practice every single game and you never get played, eventually you're going to be off the team. And so I think we go into practice mode too much. And I would even say that it has disastrous effects on new traders, which could lead to blowing out accounts in live very quickly. All right. It could form some very destructive negative patterns and really take away your shot to succeed before you've even tried.
Yeah, that's the scariest part.
Yeah, and I think that all of that comes down to, what I wrote here in this part of the notes is that safety is the most dangerous, right? Because simulation at the end of the day is a great way of safely risking money, right? This is one of those industries where there is no safety. And we know that the benefit is we know what we're risking every single time. Imagine being able to have a number. If I'm going to cross the street at this point, what are my chances something's going to happen? We don't have those statistics in life.
The actuaries do, apparently.
But it's all still, it's a guess. But yeah, absolutely. Like they have it. So if you want to be an actuary, that's another career path. But it's like, safely risking money it sounds like a good concept. All right. But I think it puts too much focus on the planning, the preparation, the organization around trading. And none of that is actually what's going to make you money. What's going to make you money is how you execute. And so I find a lot of traders who are on simulation mode will experience the situation where they practice everything, they're good to go, they have good results that they take so personally. They're like, I made so much money on sim, this strategy is going to be great. And then when they go live, they don't really know how to execute the same way. Because when you're on sim, clicking the mouse is easy. There's literally no risk.
Yeah, that's a great point you make in the sense that there's no risk, and I think that's one of the dangers of sim, right? Especially when you're using your demo, like your sim results, and trying to replicate that, or having the idea that you're going to be able to replicate that in live, right? Because when you're in demo, I even did this when I started too. I make mistakes too, and very similar to George, I mentioned earlier in the episode that I was putting on, crazy lot sizes that I wouldn't be trading. And one of the things I found is in demo, it's easy to take every single trade, right? It's easy to take every single trade. And then, at the end of the day, let's say you take, 10, 15 trades or so that you would take on demo because, there's no emotional attachment. You're not emotionally invested to those trades because there's no actual live money on the line. Right.
Absolutely.
And so in demo, sure, you might, you can be down a streak of, 4 or 5 losses in a row. And then you would still, because it's demo, because there's no risk, you would take, trade number 6, trade number 7, trade number 8, which could be the ones that are putting you into the green for the day and giving you the results that you want. But if you think about it, would you still take trades number 5, 6, and 7 in a live account if your first 4 were losers? Right. There's that disattachment between the emotionality that you invest when there's live money on the line, and you disassociate yourself with that when there's no live money on the line, right? So using the results that you get in demo, let's say you do 3 months of demo and you absolutely kill it, right? You switch to live, maybe the market conditions change. Maybe we did a boot camp recently here and great market volatility. If you're trying to catch similar style of trades in this week so far, very challenging. Right. So sticking around for too long can definitely promote making some bad patterns in your trading, and that can really translate to when you go live.
And that's a phenomenal point. And to build it out a bit, I think what you're mentioning here is I agree with you. I think one of the biggest disadvantages is that when you trade in simulation mode or demo trade, when it's fake money on the line, you're trading from a stance of comfort.
Yeah.
Because no matter what happens, no matter how much money you lose, you can just go file, reset data, boom, you're back to flat.
That's
I've
another
yet
thing.
to find that button on my live account.
Yeah, that's another big one, right? And that's another one of the big pitfalls is let's say you start the session and the real issue with trading the demo is you can tell yourself, you know what, I'm going to treat this account like it's $100,000 account. And guess what? You mess around, you lose a couple of trades. You know what? Maybe I should just reset the thing. Maybe I should reset the trade data on the sim and start from fresh. Guess what? You can't really. I wish there was that on my down days where you can just refresh the account balance and nothing happens, right? And so that definitely helps promote bad habits, right? Because if you start messing around, you say you're going to treat this account like $100,000 account, and then there's no skin in the game, right? It comes. I think that's what it comes down to at the end of the day is there's no skin in the game. So you can't say that my demo, I'm going to be able to do what I did in demo because that attachment wasn't there. And that's really the whole purpose of this podcast, is to give you guys an insight into how important the psychology aspect of this is.
Yeah. And I think that when you start on sim and you're getting moments of comfort in your trading, I think you create an unrealistic expectation, right? Because if you anchor or create the expectation that trading is a comfortable type of thing, like if you're in your office working on a report for the boss in the 9-to-5 job, and there's no tight deadline, there's no pressure. We both know that you're going to be working on the report and then alt-tabbing between Facebook and other things that you want to do, right? And it sets that precedent that, hey, trading feels comfortable. And then when you actually start trading again, or when you start trading with live capital, it's anything but comfortable because now the pressure's on. And I think that once you expect it to be comfortable and you start live trading and it doesn't feel comfortable, it starts to activate the reticular activating system, the RAS, which is the animal brain. And then your animal brain panics because not only is it sensing danger because you're losing money and potentially your well-being and you're starting to panic, but it's also saying, oh my God, this is now risky because it wasn't before.
Yes.
But if you had started acknowledging the risk and saying, I'm okay with the risk, it would have never felt safe. Therefore, when the risk comes, it doesn't come as a surprise.
No, that's a really good point. It's a really great point that you make there. And I definitely agree with that. I mean, I can say I've never felt my heart start racing in demo.
Not at all.
Man,
what I did on sim when I started sim trading, I basically used it for all the wrong reasons. I was using like 100, 200 lots on that S&P, FX trading, all this stuff. And so it's not like it doesn't have a place in the development. It should. The last thing I'm telling new traders by this podcast is to say, forget demo trading. Let's skip it altogether and jump in to live trading. That's not what we're talking about. But we are saying there is a time period after which you've overstayed your welcome. And rather than using demo to pull out the results and start analyzing how long was I in trades, what's my win rate, rather than using it that way, you could use it to practice some of the behaviors. So I think that it promotes and creates bad habits that end up losing you live money, right? And there's a saying, practice makes perfect. We all hear that one.
Yep.
I think that saying is completely incorrect for performance sports. It's the right practice.
Yeah.
If LeBron James was practicing missing baskets, does that make him perfect? It makes him perfect at missing baskets.
Mm-hmm.
So as traders, if you're practicing not having rules and clicking 100 lots to rescue your one lot trade,
yeah. That's actually, man, we're chuckling, but I can tell you I've done that.
Me
And
too.
in fact, I'm going to give you an example of another thing that I was doing in demo that took me a really long time to kind of rewrite.
What's that?
So one of the things that I used to do in demo was, let's say I was already trading live at the time, but this was kind of around the time I just transitioned out of demo. So I was in live, and anytime there was a trade setup that I didn't really feel was like an A plus setup, I'd switch to demo and I took it.
Interesting.
Yeah.
So you would use that as like your grade B trade scratch pad, basically. It's like, hey, if it's not good enough for live, let me see how it would have played out.
Yeah.
And what was the purpose of that, Mark? Can we discuss this a little bit further? Because I think that's pretty fascinating.
Yeah.
Because I found that when I switch between sim and live, I mean, this is how I got the moniker Oops Trader. That's one of my biggest losing days in my entire career was doing that.
Yeah. So digging into it a little bit deeper, I think it's just natural curiosity to see if you're right or not.
To see how it would have played out.
To see how it would have played out.
Right.
Right. Like, I kind of relate this back to poker when you have, let's say you folded on the cards already and there's still a couple people with a hand on the table. And let's say it's before the river, the last card, the fifth card comes out. I'm talking about Texas Hold'em. Let's say everybody's folded except for two guys on the table. And let's say one of the last guy on the table folds and there's one more gentleman left on the table with cards. You don't see the river. That stuff hurts me. I want to know what that river card is. Right?
Yeah.
And I feel like that I kind of did the same thing with the trades. If I didn't feel like it was a super high quality trade, then I'd take it on demo. But how that translated into my live trading was I would do impulse trades as a result of that, right?
Right.
So I wouldn't wait for my actual A plus setup to form because I was taking those setups. And sometimes it worked, sometimes it didn't, and that just led to a lot more frustration and a lot of inconsistency.
So just to clarify for the listener, you don't do that anymore, do you?
No.
Okay, cool. But it's cool. The good part about this is that everyone's journey is different.
Yeah.
And like when Mark and I do these podcasts, we sometimes say stuff and laugh at it, say, "Oh, haha, sim traded with 100 lots," or like you shouldn't do that. And we're only saying it from experience. We've been there. You know what I mean? At the beginning, we know that this is an exciting industry. The ability to make money on your own schedule with a low amount of capital, not having to work for anyone, work from your home in your boxers if you want to. That's exciting stuff. And so that excitement translates to sometimes doing the wrong things in this business. And we're just trying to guide you through it. So here are some signs that you might be overstaying your welcome on sim. Let's chug this along. If any of these things are happening, there's a good chance. It's not like if you hear this, it's over. You should get out of sim and switch to live. I don't bear the responsibility for that, but some good signs that it might be time to reconsider your sim positions. I'll let you go with number one, Marky. Let's run through the list.
Sounds good. So number one, this kind of plays on the topic we were just on, and that's one of the signs you're overstaying your welcome in sim is if you are trading a way bigger contract size than you actually plan to use when you go live. And, we kind of already spoke on this a little bit, so I'm not going to dive into it too deep, but the idea here being, you want to have consistency, right? It's all about consistency. If you plan on going live with, really you should be going live with one or two contracts, right? You have to earn the right to scale up on your contracts, right? So if you're going to be trading with a one lot in demo, if you're trading with one lots and you take a streak of losses and then you scale up to say 10 lots on one trade just to get back to green to make it look nice, for those that have OCD like myself, I like seeing those, right? That's one of the signs that you're overstaying your welcome and it's likely time to move into actual live trading.
Yeah, if you're trading more size in your sim account than you have money for, you're just creating, number one, bad habits. Number two, you're not trading, you're playing a video game.
Yeah.
And it's okay if you want to play a video game, but I think it's a total waste of time if you trade massive contract sizes for the fun of it. Because it's at the end of the day, you don't want to treat this like a hobby. This has to be treated like a business. And so I think this goes in line with number two, the second sign that you may be overstaying your welcome on sim. But first,
yeah, I just wanted to add to that, right? With regards to the consistency part of it, if you're trading, way bigger contracts than you're actually planning on in demo, you actually might get discouraged when you do go live with your actual smaller account size, right? Because if you're used to seeing demo profits, I don't know, let's say $500 to $1,000 a day on demo, and then you open up your account with $1,000 and your daily profits now, whatever, $50 to $100, right? You might look at that and be, I'm kind of discouraged because I was seeing $500 before and now I'm doing the exact same amount of work for $50.
Exactly.
You know what I mean? So this is one of the ways you can kind of shoot yourself in the foot before you even go live, right? Is you kind of discourage yourself based on the account size. So the idea is to build a consistency with the in demo with the contracts that you would normally that you're gonna be planning to fund your live account with, right? So that way, when you actually do switch over to the live account, you kind of know what to expect as far as what the profits look like and what the losses typically tend to look like.
Right. I 100% agree. Point number 2, or sign number 2 that you might be overstaying your welcome on Sim is that you don't have a strategy, checklist, or qualifiers. And, you might say, well, that's a head scratcher. Doesn't that mean that, I should be on Sim so I could develop that stuff? And the answer to that is, for Sim, you should be executing things based on a set list of rules. It's not your area to go in and click and see how things work out because you're just creating arbitrary data. Where Sim is really helpful is if you already have an idea or a strategy that you want to try to use, and now you're executing it on a Sim account in a live market setting. The money's fake, but the market's moving in real time.
Yeah.
Because now you're collecting information to maybe see how your strategy is doing, how you're doing. So if you don't have a strategy, checklist, or qualifier, and you're just in there clicking stuff and hoping for the best, that's a really big sign that you're either in Sim too long or you're using Sim the wrong way.
Yeah, that's a really great point. Not having a strategy and just kind of clicking a boat just because stuff looks good doesn't really make sense. The idea with Sim, we're going to get into in a little bit. However, the main idea with Sim is, like Georgie said, you should already have a strategy in place that you're going to be looking to test. Before you even get into demo, you're going to want to obviously learn about the markets, learn how they move, etc. Then you're going to want to spend a lot of time watching, just watching. You don't have to be doing anything. And this is, I think, where some traders, they kind of shoot themselves in the foot, is they don't really watch the markets enough to kind of see the strategies, or not see the strategies, but to see the patterns that they're looking for their setups, right? And then they jump into Sim and they click around until they find something that they think works.
Right.
So that's a huge one. And not having a strategy before you go into demos could really
hurt you.
Yeah, could really hurt you.
And the reason too is it's like you because you're doing this with the intention to succeed. I don't think anyone's ever started trading hoping to not prosper, right? And because you're doing this with the intention to succeed, if you don't have a strategy and you're just arbitrarily clicking things, you're going to tend to remember the things you did well more often, and you're going to erase the things you did wrong. So you're going to have an unrealistic or a boosted sense of accomplishment if you're just clicking around, because you can say, oh, this felt good. But it's sort of like going shopping, and it's, everything's in a dollar store, 99 cents, and you walk out with $300 worth of stuff. You're like, wow, this added up 99 cents at a time.
Yeah.
Same idea in Sim. Those small losses that you're like, okay, I learned. I'm not going to really put this in my mind. I'm going to move forward. Those ones add up, and you tend to over-evaluate yourself performance-wise and under-learn from the real mistakes you're making. And I think that's really one of the biggest dangers of this.
Yeah, exactly. And that kind of leads into this third point here. The third sign that you may be overstaying your welcome on Sim is actually something you'd be surprised to hear. And that's if you're winning most of your trades most of the time, right? If you've got a strike rate of like upwards of 70%, and let's say 90% of your days are green, likely a sign that you're overstaying your welcome on Sim, right? And this kind of goes further back to what we mentioned earlier, in the sense that it will give you, staying in Sim for too long will give you a false sense of confidence, right? Just like Georgie had mentioned, you're kind of going to overlook the losses because they're not real losses, and you're going to take away the things from the time that you won. But understand the fact that not every single winning trade is a good trade, right? And not every single losing trade is a bad trade, right? And so if you're winning all the time and you're winning most of your trades and you're winning most of the time, that's likely a sign that, there's something that you're not learning.
Yeah, agree. 100%. And that one might shock you. right? Because you're like, hey, this is good. But and another time you're overstaying your welcome, I think, going to that point, this is like 3 part B, is that you're losing all of your trades all the time. I think that's equally a sign that it's time for you to get out of sim. Because like, look, if I can't make money on sim, how am I going to do it live? You're not making money on sim. You're just making activity that's meaningless.
Yeah.
So it's like, if you're looking to make money on sim, it's an empty goal, because what does that matter? Making money on sim it's useless. And your mind knows that. And you're going to run into traders who tell you, I'm going to just trade sim like it's a live account. You've heard that statement before, Mark, right?
I've said that statement before.
Yeah, me too. In my development, like, I'm going to treat this sim account like it's live. And you're not kidding anyone. Your subconscious mind knows there's no real element of danger here. All right, you could be calm. And this reminds me of, I used to be really big I wanted to be a pilot. I mean, it's still something I'm going to pursue in my life.
I'm pretty sure we have the flight simulator joysticks and stuff somewhere in this office.
So I'm going to talk about that. Funny enough, that flight simulator, I have these joysticks, and I got pretty big into it at one point. I had a yoke, like the foot pedals, the rudder pedals at home.
Shaking my head.
Yeah, and I'm simulating a flight between, I think it was Toronto, Pearson, YYZ, and LAX. All right, and I'm flying through, and like the things on autopilot, I'm monitoring the controls, and on top of all that, I'm drinking like a can of 7-Up and a bag of Cheetos. I'm like, look, if this was a real flight, there's no way I would care this little.
Yeah.
And that's the problem with trading, is that no matter how you pretend to treat something, you don't really care about the ultimate outcome. Let's face it, because there's no money in the line. And anywhere where you look in your life where you've taken something that's free, that didn't have a cost, those are the things that I'm willing to bet cost you the most. Think back in some of your examples. And so why would sim trading be any different? Right? And I think this is one of the things that shocks a lot of traders. On to point number 4.
On to point number 4. I was going to hurry him up here. On to point number 4. Another sign that you might be overstaying your welcome in sim is if you are not journaling any of your trades. And again, this is a big one. If you don't know why journaling is important for yourself as a person, as a human being, and for yourself as a trader, make sure to check out the previous episode number 15. But this is a big one too. And I think this one has more so to do with accountability, right? Because the whole idea of demo, as it's taught, is to find consistency and then to go to live, right? And so you can't be consistent if you're not tracking data. Right? If you can't track it, you can't master it. And so if you're out there on sim and you're just, clicking that buy and sell button multiple times a day, if you actually have to go and manually journal those trades, guess what? You're probably not going to want to do it. And it's not going to be worth the time for you. Guess why? Because there's no money on the line. You didn't make any money with it and you didn't lose any money with it, right? So why would you journal those trades? But if you're actually planning on treating this like a business, right, then you're not going to be taking as many trades. You're not going to be as trigger happy, and you're going to be journaling because you're going to want to find, your A+ setups, what works best for me, right? And so while, there might not be emotions behind that, this is what you're doing with the journal. You're essentially finding those setups and making kind of a playbook, if you will, so that when you're actually in live in real time, your eyes naturally train in on the patterns that you're looking for in order to execute. All right.
Yeah. And if a trade is worth doing, it's worth reviewing. So really, yeah, you want to have a sense like you have a limited amount of ammo. Remember playing those games in the arcade where you'd shoot at birds that are flying around? It wasn't Duck Hunt, but
Duck Hunt?
Duck Hunt was one of them, but like in the arcade where it was like zombies and stuff.
Yeah, I remember.
And then you had to shoot off the screen to reload.
Yes, I remember that. Yeah.
So imagine this was real life. There's no shooting off the screen. You have an X amount of ammunition you could carry on your body, and now you're not shooting everywhere because you just shoot off the screen. You get more. You know that if you shoot one bullet and it doesn't go the right way and doesn't protect you, that one could be the reason you don't survive when you're left with none. Right. So it's like you got to value the bullets you have. And number 5. The 5th sign that you're staying or maybe overstaying your welcome on sim is that you reset your simulation data very often. If you've ever done that, if you do it often, that right there is telling you that, it's time to move on. Very clearly, you're resetting the data, and the data is the only valuable thing that you could really pull out of it anyway. So I see this often, right? This probably means you're doing bad trades, etc. And there should be an element of risk, right? If you think about life in general, what is one thing that you do that there's absolutely no risk on in life? I could let you guys think for 100 hours because I don't think there is anything. Everything has a risk, right? Even sitting at home, closing your doors and being safe for the rest of your life has a risk. The risk is you get depressed. You don't have any social interaction, right? There's risk to everything. So, we're not chasing eliminating risk, and that's what sim does. And I think that's one of my biggest sticking points is that if you're doing this for a living, if you're doing it for real, if you want to make this a career, you should have risk. There's no reason you shouldn't have risk. Everything great, every reward comes with a risk, and sim removes that. I think it builds some bad habits. So how to use it properly, Mark? Let's teach the good people here's a 6-step approach on how to apply simulation trading if you're new, or if you've been sim trading for a while and you said, hey, look, maybe I'm on this for too long, I'm ready to go live. What is the approach? How do you layer in simulation trading from the journey where it begins of learning up to going live?
Exactly.
The coffee's kicking in.
Oh, the coffee's kicking in. Probably too many coffees deep at this point of the day, but that's all right. So how to use simulation mode properly. Step number 1, learn how the price ladder moves. Learn how the trading interface works, right? Like we kind of mentioned at the beginning or kind of near the middle of the episode so far, when you're on demo, you already want to have a strategy. You already want to know what you're looking for, right? This is a time where you're getting to know the ins and outs of your platform, right? You want to learn how, like I said, step 1, how the price ladder works, how the whole trading interface works. Where do I have to go to find how to draw my zones? Where do I have to go to find how to do this? Where do I have to go? And really the whole idea of being on sim is to acclimate yourself with the platform.
Right. Learn how to
Step
use
1.
your environment.
Step 1. Exactly.
Step number 2, it goes in line with 1, is the sim is really good. Once you know your way around the platform, now it's important to know how to move orders, adjust orders, how to cancel them, move your stop losses, how to implement a stop loss and take profit bracket, right? When to use 5-8, when to go 9-18, do different stops and take profits for your multiple assets like NASDAQ, like oil, whatever you're trading. Very important. Sim is critical to this concept, is to be able to move orders around, adjust things, not pull stops, but move stops, pull take profits, to learn how to really execute these trades you're going to be doing. This is really important. This is one of the first things you want to do on sim. How do we usually use sim? We get access to the platform, like, now let's see if we can make some money.
Yeah. What's moving? Where's Tesla at?
Yeah, exactly. What's important is, let me figure out how to use this high-powered rifle I've been given, because I'm going to have to hunt with it. And that's where the sim environment's perfect. That's step 2. Once you figure that out, you can move to the next step.
Yeah. So yeah, I just wanted to speak on that point. In sim, as you're learning how to move, adjust, cancel, and fill orders, you want to use this time to kind of put yourself in any and all situations that might arise, throughout a regular operation of the market day, right? So there will be times where, on our platform on Sierra Chart, we have attached orders, for example. There may be times where you forgot to click that, and you put on the trade and you don't have the bracket on, and let's say the trade gets filled. You don't want to be experiencing that for the first time when you're in live, right? You don't want to experience getting filled without having your stop. The take profit's not as important, right? You don't want to have that experience the first time when you're on live and you're fumbling, you don't know what to do, and there's real money on the line, right? This is a time in sim is to learn all those things. Like I said, acclimate yourself with the trading interface and with the DOM, and most platforms will have a lot of the ability to move orders, etc. on the DOM, right? So really, really acclimate yourself with the price ladder, with the DOM, and learn how to move those orders around so that, when, I don't want to say when the worst case scenario happens, but if worst case happens, there's been times where I've been in a trade and our internet's gone down. There's been times where I tried to cancel a limit, it got filled, and the only thing that canceled was my bracket. So I got filled without a stop and without a take profit. So basically, you're getting filled with naked position, right? No protection. So being able to go in and put the bracket back on, or put the required buy stop if you're short, etc. That's really, really important. And with that being said, how to use simulation mode properly. Step number 3 is get a feel for the volatility in the markets and get a feel for experiencing the impact of high impact news events on the market. Has a lot of impact in one sense. But Sim is a good time to start experiencing some of the commonly scheduled volatility that we typically tend to see. Examples of that would be something like your crude oil reports on Wednesday afternoons, your non-farm payrolls on the first Friday of every new month, right? Being able to see what volatility looks like in the face of news announcements can help you see exactly what goes on, right? That will show you whether it's too volatile for your strategy or whether it's just the right fit for your strategy, right? So that is step number 3, is get a feel for the volatility and try to do your best to, try to experience the most market conditions, right? If you're sticking around in demo for, a week or 2, that's okay. But you generally want to have enough time to get a feel for what different conditions look like when the markets are trending, when the markets are consolidating, when the markets are selling off, etc. You kind of want to have a good understanding of what those scenarios look like, so that when you eventually do go live, does my strategy work best in this condition, or does it work best in this condition?
So it sounds like you just get some screen time and you give yourself the opportunity to see some of this stuff work, see the patterns, to recognize it.
Exactly. And so the idea here being that you don't want to stay in Sim for, several months. The idea here is that before you even go into Sim, you've kind of watched the markets and you have an idea of what they look like. And now when you're actually in Sim, you can see what the environment looks like, what volatility looks like around those high impact events.
Awesome. And step number 4 after that is you're going to move on to then learning the timing of how to enter your strategy. So the most important part is looking for the entry. So watch the chart until a point that you get an entry opportunity, and then focus on, as quickly as possible, being able to identify the level that you're going to get in. So flipping from analysis to execution. The exercise isn't get into the trade and see how the trade works out. The exercise is to go from analyzing the chart to getting on the ladder and putting your order in. That's really, it's not the automation, but it's the shift from watching and not doing anything to now taking action, that transition moment, and not thinking about it, just switching over and putting on the order. So I think that's really important to use it that way. It doesn't really matter the outcome. Whether you win or lose the trade, doesn't matter. What matters is that you know how to go from, hey, this looks like a good idea. This idea is now qualified. I have reasons that it could turn into a trade. Boom, do the trade.
Yeah, exactly. It's kind of like likening it to, let's call it a sniper with his rifle, right? Most snipers, before they pull the trigger, their hand will be somewhere on the rifle above the actual trigger. Then they'll shift it down once their spotter gives them the coordinates and all that fun stuff.
Have you been a sniper before?
I've watched a lot of videos. So I guess I'm the WebMD equivalent of a sniper. And so
YouTube certified sniper.
Yeah, YouTube certified sniper. And so that's kind of the point that I want to get across, is that you're learning to go from having your finger on the safety to taking the safety off and getting ready to fire that shot, right? That's what Sim should be for. You shouldn't be wondering, what am I looking for? You should already know what you're looking for. Now you're taking this time to identify it in real time and clean up your executions. And step number 5, to use Sim mode properly is basically concluded there. So the first 4 steps were how to use Sim mode properly. Once you've learned and are comfortable with the price ladder, once you've learned and are comfortable setting orders, moving them, adjusting them, canceling them, etc. Once you've got a feel for what volatility looks like on the assets you're trading, and once you've learned and are comfortable and are confident with the timing and execution of your strategy, then it's time to go live. And we're recording this in 2020 at the time, and there's never been a better time to start. All right. Oh. And the reason we say that is, especially in, the field that we're in futures, where we day trade futures, It's our primary niche here at Trade Pro Academy. It's become very, very accessible to the retail traders as of May 2019. And the reason for that is because the CME, the Chicago Mercantile Exchange, they created a new product, which is basically an e-micro contract. And so what that means is that the mini contracts, these micro contracts trade at 1/100th the value of the mini contracts. And so back when I started, for example, a $2,000-$3,000 account might not have been enough because you'd be risking around, $70 based on the brackets that we use, around $70 per trade, right? And so with these micros, you can now risk $7 for that same trade, all right? And so it's very, very accessible these days. And the reason why we suggest going to live and using the micros is because it's better than sim, number one. And the reason for that is because you're going to have skin in the game.
Right. You're actually practicing what it is you want to be doing versus practicing just one part of it. And I love the fact that the micros are out. They would have saved me a lot of money because I started on the full scale contract and each mistake costs more money. So now you're being so careful. Sometimes you're actually over careful. You're under trading. Yeah. And so I love this. Look, if you're going to be risking $7 a trade, commission in, right? And then you're doing 5 trades a day maximum, $35 a day. If you can't risk $35 a day, you're probably not at the point where you should be trading. You know what I mean? It's $35 a day is not a big risk. If you do the math, there's 20 days in a month. So that's about $600 a month in total.
That's quick math.
Right? Very quick math. Let's say $700 a month of capital. And you're saying, well, that's a lot of money. And so let's look at it this way. How much did you spend to get education, to go at school, to get the job you're working at now? Probably less or more than that, right?
How much did you spend on the phone you're likely listening to this podcast
How much spent on the phone? How many beers did you buy strangers at the bar because you got a little bit too intoxicated? So even if you just bought less drinks for less women or less men at the bar, you could save that money. So it's like, rather than looking to say this is too expensive, look at ways, how am I wasting money that I could reallocate to this that actually has the potential to make me money? How many times has Netflix made you money? How many times has your cell phone made you money, unless you're using it to make money, right? And so rather than looking to say this is too expensive, I'm going to go on sim, look to say this is the reality of this business. I have to have skin in the game. Can I reprioritize my expenses to have a little bit more cash flow to learn? Because at the beginning, there are no losses. There's only educations, tuition fees. The time it becomes true losses is if you continue to do the wrong things over and over and over again, and you just don't learn from it. You're very hard-headed. You're undisciplined. But guess what? Those type of habits are formed where? In sim.
In sim, exactly. Exactly. And guess what, guys? Tuition got a lot cheaper as of May 2019.
At
right?
$7 a trade at max risk, there's no reason you shouldn't be moving to sim quicker than ever before.
Exactly. And
from sim to live, sorry.
Yeah, from sim to live, right? And so now you guys know, the signs that you might be overstaying your welcome in sim, and now you know how to use sim mode properly, right? So how do I start out small without staying on sim for long, George?
Good question. But before we get into that, can I just mention one other point, number 6?
Only if you ask nice.
Please. So this is important. This is one way that you could use sim while you're still live. I think it's super important. If you have a day when you're live trading and you got a trade that you missed, one trade that you're like, oh man, I wanted to get it. I hesitated. This trade went in my favor. I feel bad for missing it. All right. What you could do is at the end of the day, replay the current day. So let's say today's a Thursday. So from Thursday morning all the way to the current moment, replay that day and get the trade that you missed. What you're doing is you're programming your automatic response to take advantage of these opportunities. If there was a trade that you did that you shouldn't have done and you knew it violated your rules, replay the day and avoid doing that trade and answer why should you have avoided it. Just because you're trading live and putting capital on the line doesn't mean you can't use the replay function with sim trading to train yourself. But what we're saying here is if you're going to put emphasis on your performance, do it on the micros. Get started. And I love using sim that way for a replay opportunity, especially if I have a bad day. If the market has done really well, but I traded bad for whatever reason. Those are the days I'll actually replay the day occasionally and be like, okay, George, let's do this the way we know we should have. That way the next day I'm ready for it versus remembering a day of just utter failure.
Yeah, I'm actually going to be doing that probably tonight, right? I didn't have the best session today, down, I think, 4.5 points,
I actually finished the day down today as well. A little bit, not much, but
Yeah. And so I finished the day down today, and I got chopped up in a level where I shouldn't have got chopped up. And so very similar to what happened yesterday. Yesterday I had a slightly greenish day, but I scratched myself out of trades I shouldn't have scratched myself out of. So I went home yesterday, did the same thing, caught those trades and kept them to how I should have done it. And I'll be doing the same thing tonight. Going back in and
so now you're using Sim as a post-game training tool rather than an evaluation of how good you're going to be in a game.
yeah,
That's
exactly.
never important. It's like, let's wrap the game up, take your shots. Now let's work to improve how we could do them better in the future.
Exactly. It's almost like how athletes, how professional teams, they use the post-game videos or
Right.
what's it called? The tapes.
Yeah, tape analysis.
Tape analysis, right? That's a big thing people will do. I know a lot of athletes, especially your higher caliber athletes, I'm thinking basketball here for some reason, just straight to basketball. Your LeBrons, your Steph Currys, your Klay Thompsons. They'll watch their game tapes, see what they were doing, and then they'll go practice it.
Now, how come you didn't say Kyle Lowry? Just curious.
Kyle Lowry,
Okay.
Pascal Siakam.
And you know what? It's important, right? If athletes are doing that, there's nobody that gets paid for performance like an athlete. Like, it is a true performance sport. And if they're watching tapes, the replay feature is able to help you while you're trading live. But for me, Mark asked the question here: How do you start out trading live quicker without spending too much time on Sim? The answer is you could do it sooner, but start trading smaller. So whatever it is that got you onto trading, there's probably a 90% chance. 99% of statistics are made up, including this one. But there's a high chance that I'm willing to bet that whoever got you excited about this business lied to you. All right? They said, hey, come trade. Look at my Lambo. All right? It's going to be easy. Trust me, bro. Just buy this indicator. And so it's okay to have gotten excited, to have found the industry that way, because that's what's out there. The way that you search for things is the reason that these kind of places exist. Right?
It's very true.
So you get excited. That's great. But if you could just say, look, in the short term, my goal is to learn and to generate enough information that I could use to adjust my approach. All right? That's going to be able to make you a lot more money than anyone you think or anyone that promised you that you could make. But it's going to take you a little bit longer. And this industry takes you longer to get to the point. It's going to take you longer than you think to get to the point where you're making small money. But from that point to the point, that you're making money beyond your wildest dreams is super quick. Because once you learn how to shoot, you can just shoot bigger bullets and, more often. You just have to learn how to get that initial consistency. And, you tend to think, oh, I'm going to be consistent in a month or 2 months. All right? If it takes you 6 months, if it takes you a year, that's okay. But what I'm here to tell you with this episode is it would take you less time if you skip the sim period people traditionally spend years on. Sometimes end up in sim for years. I'm not telling you to start right away and jump in your live account. That's dangerous. But apply it the way that we gave you the steps, use it, and then jump into live sooner than later. Do it sooner, but with smaller trading account size and smaller trade size individually. And you're going to do far better off. The micros are a godsend in this industry. And I think the CME every single day for that, the CME has made my gratuity list.
That's hilarious. Yeah, I would just add to that.
It's over.
Okay, cool.
No, just kidding.
The fact that the micros have been introduced, it's also very ideal for learning how to start with multiple lots, right?
Yeah.
Obviously, when you're starting off on a mini S&P mini contract, you're probably going to start off with a 1 lot, right? But this is another reason why these micros are great, because how we mentioned that you can test out new ideas, you can also test this stuff out on the micros. If you've been trading a 1 lot on the minis and you want to start scaling up to 2 or 3 lots, by all means, you can try the same. You can try 2 or 3 lots on the micros to get an idea of how that works, right? And then once you get comfortable executing on the micros, then you're essentially doing the exact same thing on the minis. You're just clicking on a different DOM.
Absolutely.
Right.
And then you learn how to scale up from there.
Exactly. And I think that's something really important to mention as well is, if you're going to be starting smaller, that's great, but I don't want you guys to let that discourage you, right? If you're starting smaller, you're going to be obviously making smaller profits, right? The idea here is, like Georgie said, once you can establish that consistency in your approach and you can start making money on that small contract, then it's just a matter of scaling. You're still going to be looking for the exact same moves, the exact same setup. Now, instead of having 1 contract on, you're going to have 2 or 3. And then as you get more experience with that, as you can tolerate that risk, then you're going to start doing 5, 6s, and 7s and still trading the exact same move, the exact same setup. You're not looking for home runs. And that's how it works.
You could scale horizontally. That's what we call scaling with size. Just add more as you're doing well, add more position size. But I'm going to wrap it up by saying this. This is my last piece of thought on this topic. So I think we did a really good job covering it. But I think that when you're in demo, you're looking for safety. But if you're looking for safety, you really have to ask yourself if trading is really the industry for you. And it's never going to be safe, right? What we're doing is inherently risky. We're taking risk to make money. But I'll tell you this, in any place in the world where there's business that makes money, all right, somebody's taking the risk. And the person taking the risk is getting paid. And so I want you to become that person in mind and body and spirit. Embody that belief and say to yourself, look, at the beginning, I'm not losing money. I'm paying tuition. I'm going to set aside $3,000, $4,000, $5,000 to learn. And if I lose $35 a day to my way to lose $5,000, all that was education anyways. So you have to set aside a realistic chunk of capital. You can say, I'm going to learn my way in this industry. And so Sim removes the risk. And I think that's the most detrimental part that really hurts traders. And I see it very regularly. And so jump onto the micro. All right. Get yourself exposed to a little bit more live trading. And if the heart's beating, good. That's what's supposed to happen. Because I think in Sim, we try to stay in a simulated or fake environment to the point that we get a sense of confidence, right? Like, I could do this. But I'm going to tell you this. To this day, I've been trading since 2001. I still can't confidently tell you what's going to happen in the market. I can't. You're never going to confidently know. Get comfortable being uncomfortable. Take the plunge. Right now with these small size contracts that literally lose you $7 a trade, it's never been better to get started. I wish this was available. Can't tell you how many thousands of dollars it would have saved me. That's it, guys. Happy non-sim trading out there. And don't make me rush you out of sim. I think that if you're comfortable doing it, do it a little bit longer, but do it with tact and purpose. Don't just do it for the sake of clicking the button around. Have a strategy, have an end game, and you're never going to feel comfortable. I've had questions on email saying, how do I know it's time to get out of sim? And I'm like, not yet if you're asking that question. But I've also had times like, how do I know it's time to get out of sim? Knowing the person, I'm like, you should have been there before. If you're asking that question, now's the time. So you know the right time for you. Pure and honest liability disclaimer there. I'm not pushing you into it. But I do consider trading sooner, but trading smaller.
Awesome. That was a great way to, a long approach to wrap up a last couple of words.
But I told you the coffee was kicking in. I think this is like the 4th coffee you should have declined.
Yeah.
When I asked.
I think that was great, Georgie. I think that was really good. So guys, that's all for today's episode. Really, really appreciate you guys for listening in here. George said it himself. He thinks we did a pretty good job. I'm curious to hear what you guys think. So please feel free to share your feedback, your thoughts, and your comments with us. You can reach us at info@tradeproacademy.com or hit us up with the live chats on the website at tradeproacademy.com. So again, guys, I want to thank you all for listening. As always, if you can think of one person in particular who would find today's message really, really helpful on their trading journey, please feel free to share it with them. Also, if you guys enjoy listening to this podcast and you feel that you're getting some value out of it, please go ahead and leave us a rating and a review on iTunes. That would really, really help us out, and it will help bring this podcast to a larger audience. Because when you guys win, so do we. So until next time, everyone, good luck and good trading. This has been your hosts, Mark
And George,
from Trade Pro Academy. Take care.
we love you.
Thanks for listening to the Mind Over Market podcast. You can find us at tradeproacademy.com. You're listening to Mind Over Markets, a podcast on trading psychology to help you build a bulletproof mindset. Here's your hosts, George Papazov and Mark Borscht.
What's going on, Trade Pros? Welcome back to another episode of Mind Over Markets with your hosts, myself, Mark Borscht, and
George Papazov.
awesome. Thanks, Georgie. In today's episode, we have got a very, very exciting topic planned, and that topic is going to be one that I'm sure a lot of traders can relate to. I know I would have loved to hear this advice when I initially started. And that topic is on bouncing back from a blown account. All right, so that's what we're going to be talking about today, guys. We're going to be sharing some of our own experiences with this. You know, I don't think I know of any trader that has found success that hasn't blown accounts in the past. And really the benefit of this episode is that we're going to give you guys a process, a structured process in order to help recover that account. All right, so before we actually dive into the topic, let's hear a quick message from the sponsor of this podcast, Trade Pro Academy.
Yeah, just a quick message. This episode is sponsored by the lovely folks at Trade Pro Academy. So you want to learn how to trade. I think one of the most important aspects of trading is psychology. A lot of traders say 90% of success is due to the fact that they're implementing their psychology or have their psychology set up properly. But how much time have you invested in working on yours? Trade Pro Academy has a full-fledged trading psychology course based on advanced techniques and methodologies proven to work and designed on the premise of neuro-linguistic programming adapted to trading. Very few people in this business, if any at all, provide this level of training on this level of deep psychology. We've had a lot of members that have started the program, those that have gone to become successful in trading with great results, credit the trading psychology course as the biggest reason or one of the best resources we have on our website. And so it's not surprising that the biggest difference maker is not a strategy tool or a template, but rather work into your own psychology. So check it out. We have a great full-fledged trading psychology course. And now back to the show.
Yeah, where can I get my hands on that? That sounds pretty interesting.
TradeProAcademy.com. It's part of our elite package, and we really believe in providing value. So we have a low monthly subscription package with access to all the tools. No upsells, no BS, no nothing. Join the team. Just pure gold.
There you go. There you go, ladies and gentlemen. There you have it from the sponsor himself. So, guys, let's go ahead and dive into this topic. I think before we actually introduce the process that you're going to want to follow to start recovering your account, the losses that you may have made, I think it'd be interesting for us to kind of share our own experiences on this topic. So, Georgie, let's start with you. I kind of know your story, the gold story, but if you don't mind just kind of sharing that with the audience and kind of going through what your experience was with that and kind of how you recovered, how you bounced back, and you know how you got yourself to where you are today.
Yeah, absolutely. So it's no secret I've blown accounts. And I'll tell you this story, but this isn't the only time. And to be honest with you guys, I don't know very many traders, if one, that has gone directly from starting out to not experiencing this situation. And I think the opportunity here is that if you're gonna have one of these moments, to do it when it's cheap. And it's cheap when you're first starting out and your account's at the lowest it'll ever be.
Yeah.
And so I had this story. So for me, it happened on gold. When I first started trading, I was trading currencies. And as part of the currency platform, they have something called contract for differences, where you could trade metals as well. So it's the dollar versus the gold versus the US dollar. So the pair is XAU USD. You probably know that one very well, Mark.
Mm-hmm.
So this is my introduction to gold. And so this story goes back quite a bit. All right. This was all the way. I'm actually pulling up a chart right now, so I give you exact dates.
Oh, wow.
It's been a very long time.
I'm not that prepared.
So, well, for me, all right, I'll just strip the dates out. But for me, it was when gold hit 1,000. It was somewhere around '08. All right, and so gold was trading upward, and to me, I started this strategy in around mid 2007. Gold was trading around $680 an ounce. Okay, so you gotta remember this is ridiculously long ago.
Can I still buy it at that?
Yeah, this was the first. I wish this was the first blown out account that I've had in history. So it was '07. It was beginning to work. I was on a 1 hour chart, and the goal was just pull back longs into gold. So what I would do is I just continue to add, and I held positions overnight. Then it broke $1,000 per ounce, and this was around March of 2008. All right, if you remember what happened around that time, stock markets were collapsing. So what I was doing is on the way down, I was doing the same thing: keep adding. This was in my younger years. I was much younger than I am now, and it was more significant money to me back then than it is today. And I took an account that I 10, 15, 20 times over in my success, and I lost it all down to every penny. I think I was left with something under $1 when I finally closed it all out.
Oh, nice.
Because you could scale on small amounts, right? You could do micro lots and all that. So I literally had nothing. I lost all my gains and my capital. It was devastating. And guess what happened? Gold turned around, and if I would have just held it, it would have worked out. But the point I'm making is that I was getting away with blindly doing something that I didn't really know what I was doing. Not on gold. I didn't know the market. I didn't know it that well. I just tried it out. It tended to work. I fluked it. And, they say don't confuse bulls for brains. When it was going up, it was great. The first sign of the downside, I annihilated the whole thing. And so what I learned from that is it's not really about where you get in, what market you're trading. What's more important is to know what your risk management approach is going to be. When will you, take profit? I mean, taking profit wasn't a consideration I had. I'm like, at this pace, I'm going to be a trillionaire. It was growing a lot very quickly. So I had a challenge there. Then I also, another account that I had trouble with, I started out when I quit my job to trade futures full time. I had a smaller account. So the first 3 months, I lost something like $20,000. It wasn't 3 months. It was about a month and a half, 6 weeks. Lost about $20,000 very quickly. It was a very, very bad start to what was then going to be my career, which is to this day. And then I went to a smaller account. I put $4,000 in, and I started doing really well, small amounts. And then I also blew that one out. My adjustment period was rough to full-time trading just because, to me, I had been successful before, but now that I relied on it completely, it was more of a psychological thing. I didn't have really psychology training at the time. So, I've been through this process. I know how it feels. In fact, I remember when I blew out the futures account, when I blew out gold, I wasn't really upset because I knew I was fluking the gains. But I blew out the futures account, Marky. I was laying on the ground, and my wife comes home. She's like, "What happened?" I'm like, "I just had a disastrous day." And I'll never forget what she told me. She's like, "Either get your ass up and try it again, or if you're laying down on the floor," she told me to keep moving around so at least I could sweep it or like mop the floor kind of thing. It's just like, it was good to have that accountability. So that's my story. I've done it twice. I've done it other times as well on small account challenges, but for the most part, this is not a unique experience to you. So if you're listening and it's happened, I want you to know that this is part of the journey for most people. What about you? When was your...
So I think the first one that I blew was during the initial marijuana boom in 2014. I think it was. I actually just found the chart, and the company was it was ticker FITX. It's called Creative Edge Nutrition.
Ooh.
And this thing had ran from basically zero, it was a penny stock essentially, and had ran up to 0.1.
10 cents.
10 cents.
Yeah.
It had ran up quite some ways, and I think it was on Twitter. This was really, really early on the career. I was on Twitter and I was seeing, people, buying houses and buying cars and all that kind of stuff on the back of, just buying these marijuana stocks and holding them. Right. So I see this move happening. I'm like, man, I want to have a house and I want to have a car and I want this and that. So I got long right near the top around, I don't remember where it was, around it was around 9 cents or 8 cents, something like that.
So you saw some upside though. at some point?
I saw
A little
some
bit.
upside, but it wasn't enough to get a car. It wasn't enough to get a house. And so I held and I held and I held until eventually I sold it off and closed out that account with basically nothing in it. That was the first time. And then after that little foray into penny stocks, I decided to try my hand at options. And so I was just doing outright options plays, just puts and calls. And I don't remember exactly when it was. This was probably around, I want to say 2015-ish. I was trading Amazon. And, excuse me, I decided to put on a good chunk of my account into an Amazon position. I'm thinking because Amazon was around, I think, 3 figures at the time. And I put my money into that option, and just as quickly as I put into that play, I didn't understand options at all at that time. I didn't know theta. I didn't know any of those things.
None of the Greeks.
At the time, yeah, none of the Greeks, the thetas, the betas, all of
Just
those,
Zambuca.
all of those fun things. And I basically got taken out on that, and that, it was a small account, but I shouldn't have put in that much in the position. But that was that blown account, right? And so that's pretty much been. I did blow another one. I think futures account a while back, and that was pretty much the same kind of thing. I had a plan, but I wasn't really trading the plan, and so it was kind of a me thing. And that was really the last time that I've blown an account. And it takes those lessons. Those I feel like that is kind of your initiation into this career. As unfortunate as it is, like we said at the beginning of this episode, Georgie can speak for himself, but I personally don't know anybody that has found success that hasn't blown accounts in the past.
I feel like it's almost a rite of passage to get to that point, to experience it. But I think it's also important that we notice, or we mention that when we talk about blowing an account, we're not saying blowing your life savings in an account.
Exactly.
Yeah, we're saying you put in a couple $1,000s and you're going to try something. You have this idea here. I'm going to do marijuana stocks. All right, that's one idea of a trading approach. Let me try it, and so you blow it out. Okay, great. You put some money in a futures. We're not saying that like I've ruined my life financially on any one trading account. I don't know one person that. Well, actually, sadly, I do know people who have done that, but we're also not endorsing here that you should be going like that. What we're saying is put in a couple $1,000s to start and you blow it out. That's what we're talking about here. I don't ever endorse anyone to put all the money that they have, especially money they're relying for, stability for survival with their family. I don't suggest you put any of that money or all the money you have into any one thing. That's a disaster, and it's a big no-no. Forbid you.
And I think both of us can speak just on the back of our own experiences, having worked in a brokerage. I've seen, back, I think it was October 2017. I saw one client there pretty much erase their whole. In Canada, we have RRSPs, kind of similar to the 401ks in the States. I saw a gentleman, a 6-figure account just dwindle down to 4 figures.
Wow.
Right. In the course of a month. Right. So we've seen stuff like that. And I don't know if George can speak on this, but on my end, having seen that and seen what it does to those individuals is enough to get me to not do that.
Yeah.
Right.
I've seen a guy go from 6 million on Apple options down to a couple 100,000.
Yeah. Like it can be devastating, especially if you put essentially your entire liquid net worth into these kinds of things. So that's not what we recommend to do. What we do recommend to do is, if you guys are going to be trading, is to fund it with money that, you don't rely on. You don't need to survive. You don't need for your retirement, whatever the case is. This should be money that you should be fine losing it all, if that's what it comes to.
And it won't change your lifestyle.
Exactly, and it won't change your lifestyle.
Love it. So, I mean, how do we recover an account, Mark? So I know that we've had this similar experience, and like, what is the procedure we're going to go through? Because I think we've planned a 5-step process to help you guys recover your account and your psychology, which is more important than the account. And there are two parts to the same equation. So, what do you think here, Mark? What's the number one thing we could do? Step number one.
Step number one, ladies and gentlemen. This is honestly the most important step. That's why it's step number one, and that is accepting your responsibility for the losses. All right. why is this extremely important? Well, because if you accept responsibility for those losses, it gives you the control required to make a change. And this idea kind of goes back to the concept of living at cause versus living at effect. And, you know, if you're hearing this, living at cause, living at effect, what does that mean? This is new to you. Make sure to check out literally the first episode of this podcast, which was called Unlocking the User Manual for Your Brain. All right. Living at cause is a huge, huge concept. And if you live at cause, you're essentially taking control of, you know, everything that happens in your life. You're taking accountability for that. And that gives you the control to make the changes required, you know, to get you where you want to be. All right. So step number 1, accept that you've lost. Any amount of money that you lost in previous trades, in previous years, that is all done in the past. All right, guys, those are mistakes you've made back then. You can't change anything about that other than accepting it for what it is. Now, think about today. Think about the now. Think about this moment, this exact moment in time. Opportunity is in the future, and you have got to let go of the past.
I love that. Yeah, it's, you know, this is a very important step, Mark. I think this is where it all begins, because you're accepting responsibility for the loss itself. You're accepting that you created this result. It wasn't somebody's system. It wasn't someone's indicators. It was the person who clicked the mouse. And so unless your cat was like dancing on the table and clicking your mouse doing trades for you, you can't even blame the cat, because you shouldn't have let your cat be up there. So it's 100% your responsibility. And with that comes an emotional kind of drain as well. I know that feeling. I know the feeling you blow out an account and you go home and just like everything feels heavy. Like your mind is like, you try to eat, you try to watch some Netflix, play some video games, whatever you try to do. And all you could think of is that thing just jumps right back in your brain, right? You're like, oh my God, I blew up my account today. So I think on those days, you got to emotionally bring yourself to the point where you just accept it. If you haven't accepted the fact yet that it's happened, it's not time to even like start step 1 here. You know, you just haven't accepted the responsibility. So I think it's like, allow that emotion to sink in, allow the reality to set in, and there's going to come a day. It might take you a day, it might take you an hour, it might take you a week, it could even take you a month. Depends on how much capital is on the line, how much it means to you, and to what extent you're accepting that it's your responsibility. But, you know, there comes a point where you're just going to say, you know what, screw it. What's done is done. Let's move on. You got to be at that point. And, and to me, that's the important part.
Yeah, I would agree with that. And I would add one more thing. I know that, you know, in those moments when, you know, the first 2 times I blew the account, I wasn't really into psychology work, anything like that. So it was a little bit of a different journey. But the last time that I did, I was already in the psychology thing. And so I think for me, what accepting your responsibility for the losses does is, for me personally, it's kind of a trigger to kind of just let go.
Right.
It's almost like the monkey off your back. It's like, all right, man, like that crap's in the past. Like, what do I have to do to go forward? And the longer that you kind of, you know, especially if you're not a person that lives at cause and you're somebody that lives in effect, you really can't make change towards the better if you don't accept it, right? It's very easy to say, oh, you know what, man, whatever, my strategy didn't work, or, you know, if you're following any trade alerts, trade signals, anything like that, it's very easy to put the blame on, you know what, the person that called the signal, it was a bad signal and I lost money as a result of that. I don't have to do anything. I'll just refund the account and, you know, try again with a different signal service.
Right.
Something like that. And when you're not taking responsibility for that, you really can't make any change from it. So until you actually sit down, you know, clear your head, accept what you've done, and just focus and tell yourself, you know, I'm going to be moving forward. You kind of want to look at those numbers in your account, you know, whatever the result is. If it's a big loss on the account or if it's a completely blown up account, you want to say something like, this negative amount that I've lost has been an educational lesson that I have learned from. And the only way to recover is to sit down, clamp in, and do something for the future.
Absolutely. Like, people go to school for 4 years, make $20 an hour. And it's like, how much education have you paid to start trading? And it's like, the ability to earn an income on your own pace, your own schedule, be your own boss, comes with the responsibility of, you're going to have to pay some education costs. And it's like tuition, like Mark said. This amount of money I'm down, have I learned from it? I think as long as you've learned from it, you're not down, you're progressing. But if you make some mistakes, blow out an account, refund it the next morning, and continue to do the same thing, that's a loss. And that's not an acceptable loss. That's not a business loss. It's it's kind of like, how do we say it? It should be illegal to do that. You should come up with some kind of system, process, strategy, because if you're just refunding and doing the same thing over again, you're sending good money after bad. And, what that's saying is you might have blown out $500 you put in, but if you have 10,000 in your account, you're going to continue to refund it till you blow out to the point you're like, okay, something's got to change.
Yeah, exactly. And so that there, guys, is step one. As simple as that sounds, unless you can accept it, there's really no point of going forward with the remaining 4 steps. All right, so accept responsibility for those losses. And before we switch over to the second step in this process, we've got a quote.
Oh, I was hoping you would have missed that. I love that quote.
How can I miss this quote? This is actually, I would say, probably my absolutely favorite quote.
Of all time?
Of all time.
Wow.
And this is from Mr. Winston Churchill. And the quote is, "Success is going from failure to failure without a loss of enthusiasm."
Wow.
Yeah. Wow. Let that one sink in. Let me repeat that. Success is going from failure to failure without a loss of enthusiasm.
You know why you don't lose your enthusiasm? Because you're probably learning along the way.
Exactly.
But if you're not and just repeating the same mistakes, you're going to lose enthusiasm real quick.
Real quick.
I know that as well firsthand.
Yeah. And so let's move on to step number 2, guys. Step number 2 of the 5-step process to recover your account. And I'll let Georgie say this one.
Analyze your results. In this case, losses. That's what you've generated.
Exactly. And so imagine this. You are actually directly responsible for your results. And this is not something for majority of people that are, used to the 9-to-5 life, the corporate jobs. This is not very commonplace in a corporate jobs. All right. Oftentimes in corporate jobs, whenever we do a project, etc., we're not the ones that are analyzing it. We send it off to who? To the boss. The boss analyzes it, and then the boss provides feedback, right? And that's why, especially when you think about keeping things like a trading journal, giving yourself honest feedback, it's very difficult for the majority of people because they're not used to doing it. They're used to having a boss that, gives them the feedback. You did a good job. You did a bad job, etc. Right? So what you have to do is you have to be honest with yourself when analyzing your results. What was the cause of those losses? And so you can essentially break this down into 2 separate categories when you're doing this analysis of your results. The first category is you. It's a you thing. All right. So you fall into this category if, let's say, you have a strategy, but you're not following it. Or let's say you have a lack of discipline. You can't wait for the trade. You get FOMO. You start chasing. You get too emotional while you're in a trade. If that sounds like something that you can relate to, it's likely a you thing. You put that into the you category of the analysis. The other side, the other category, or the other bucket, if you will, is strategy. All right. So if you don't have a or let's say if you do have a strategy and you can say that you're honestly following it with discipline, with diligence, and with patience, and you're able to do that, but you're still losing trades, then it's likely that the strategy is an issue. All right.
Much less likely. I just think that if you have a strategy and you're following it, it would take you so long to blow out an account that somewhere along the way you would have said, look, the strategy is not working. Let me see if I can adjust it. I don't think following a strategy disciplinedly leads to a lot of account blowouts. It can, but that's not the fastest way to do it.
Yeah, exactly. And so when you kind of look at these 2 categories, the you side of it and the strategy side of it, it's really quite simple. Is it the machine or the operator that's the issue? All right. If it's the machine, that's a relatively easy fix, as Georgie would say. With the strategy, if it's a strategy that's broken down and you're implementing it and still taking those losses, it's just a simple tweak that you got to make. All right, with the strategies. Whereas it becomes a little bit more difficult and there's a little bit more work required if it's you, right? If it's something that has to do with lack of discipline, if you can't wait to get into the trade, if you're revenge trading, if you're getting emotional while you're in a trade, right? That's psychology work that has to be addressed really before you keep on trading live or before your next live trade.
I love that. It's like, especially the operator machine market. I think that I use this analogy often. I might have even used it on a podcast already, but it's hard to write original material these days. So, what I usually like to think of it is, if you went into Lewis Hamilton's Mercedes car, and you had a chance to drive that car, Marky, and he had I don't know what you drive, but let's say for the listener, let's say you have a Honda. It's a pretty reasonable car. I had a Honda before in the Accord. And so if you let Lewis Hamilton drive your Honda, I guarantee you he'll put in a better lap time than you will with Lewis Hamilton. I bet you couldn't even take the car for like the first turn. He'll be in the grass and be laughing at you because it's not the vehicle, it's the operator. The operator will drive the crap out of that Honda. In fact, I remember there being was it David Letterman, I think? No, it wasn't. The guy with the big long beard.
Oh man,
he's got a Netflix show now.
Yeah, I know exactly who you're talking about. Was it not Letterman?
It might be, but
it might be Letterman.
Who? No, it's not.
It's definitely not Jay Leno.
It's not Jay Leno. But anywho, he was in the car. David Letterman, yeah,
it is David. Letterman,
yeah, David Letterman was in a car with Lewis Hamilton, and he was like driving the crap out of this Mercedes, like to the point that he's looking at David Letterman, he's laughing. He's like, look, the brakes just went out. And David Letterman looks scared. He's like, oh my God. And Lewis is like just throwing it through the corners with no brakes. It's like, it's not the machine, believe me. It's the operator. A good operator could do well with an average machine. And same thing with trading. It's how you're executing the strategy is more than likely to be the problem here. If you're following your strategy and you're blowing out your account, that's fantastic because you could use that information to improve your strategy.
Exactly. And this is kind of, a layup into the importance of keeping a trading journal. And I believe that was our previous episode on this podcast, the importance of keeping a trading journal, right? And so this step becomes, it's very crucial to have a trading journal because if you don't have a journal, how can you analyze results? There's nothing to analyze. There's no data. And this kind of leads into that next quote. Told you guys we're going to have some quotes today.
I love quotes.
And this quote is from W. Edwards Deming. And this quote is, without data, you're just another person with an opinion.
I love it. I love that you chose this one. This is such a you quote. It's a great quote.
Right. And so first step, we'll just summarize so far. First step is you've got to accept responsibility for those losses. All right. You're going to feel, I can't promise you'll feel a sigh of relief, but you'll be at peace knowing that, going forward, you've learned your lesson and that you're going to be putting in the right processes going forward so that you can prevent that from happening and so that you can continue to progress towards consistent profitability.
And be empowered to change. When you decide to be responsible, you have the ability and power to make changes.
That's a good word, empowered. You're going to feel a lot more empowered once you accept responsibility for that. And second step, again, analyzing those results. Really, really be honest with yourself, guys. Trading is an industry that it's very, I don't want to say secluded, but it's very difficult to talk about trading and, your results with other people. And this is one of the reasons why community is so important. And this isn't to plug anything, but honestly, with a community, it's a lot easier to kind of go through these things, to accept them and to analyze them, because if you're sitting there in the bedroom by yourself, it's very easy to go down a dark wormhole, especially when you're hitting losses, right? It's very easy to say, this wasn't me, this was whoever's call. Maybe the market's just not trading the right way. Maybe this, maybe that. And that's not going to help you get to where, it's not going to empower you to get to where you want to. All right. So make sure that You are honest with yourself. You don't keep this away, because the longer that you keep it hidden and you keep it, away from the world, if you will, if you don't speak it out loud, speak it out to yourself, then it's just gonna sit there, and it's just gonna build and build until you take the mother of all losses at one point. So,
and then you're out for good.
and then you're out for good. Exactly.
I love it. So
there's
step number
yeah,
3, Marky.
exactly.
What do we do after that? So we accept the responsibility. All right, we analyze our results. And then where are we at with step number 3?
We are at the step where we make a plan. All right. So after you guys have accepted responsibility for those losses, you have gone ahead and analyzed the results. Now you got to make a plan. All right. And we're going to liken this back to the 9-to-5 corporate lifestyle. All right. Trading is not a business where you can fly by the seat of your pants. All right. In a 9-to-5 job, I can't say I've ever done this, but in a 9-to-5 job, there are some jobs where you can go in, you can fall asleep for a little bit, do this and that, and you still get paid. In trading, if you do a bad job, you're losing money. That money is out of your pocket. So now imagine showing up to work, doing a crappy job, and at the end of the day, your boss actually comes to you and say, you know what? You didn't add any value today, George, and for that, I'm actually going to charge you for today. You're going to be getting a negative salary on today's date.
That's never happened in my 9-to-5 job. Yeah. But it has happened in trading. But 100% though, I agree with you, Marky, here. It's it's very important that you understand that if you're doing performance pay, it can go either way.
Exactly. And so you need a plan to execute. All right? You need a plan to execute. And the traders that are closest to breaking through and finding success are those that are disciplined, emotionally sound, have trading experience, but don't necessarily have a concrete plan. And so what is a concrete plan? Well, a concrete plan is going to have everything, and I mean everything, laid out in this plan. For example, something like when you will get in, what hours you're going to be trading, when you will get out, how much you can lose in a day and still keep trading. How about how much you can lose in a week and still keep trading? What about a month and still keep trading? At which point do you walk away for the day? At which point do you add risk to trades? At which point do you, size up on trades? At which point do you reduce size on trades, et cetera, et cetera? So making a plan is going to be crucial. And especially if you've done step 2, where you've analyzed your results and you found where your weaknesses lie, this plan, as you're developing it, you already know what your weaknesses are. So this is where you effectively input safeguards against, those behaviors that are sabotaging your results, especially from a psychological standpoint.
I feel like this is like a business plan, right? Like
effectively, yeah.
You're starting a business, and so this is your business plan. And if you're doing any business, you're going to have to do, first of all, a feasibility study. Before you put in any money, is this even the right business for you to be in? You have the skill set, you have the capital. But then once you decide that, hey, I'm going in full force with this, you're going to want to spend your money efficiently, right? If you're going to have a shot. They say a lot of businesses fail. Well, they fail because there's a lack of planning. How are you going to succeed when you don't know what you are currently going to do, and when you don't know when something happens, what that means you're going to adjust, how you're going to change, so things change. And so I think that transpires directly into trading. Without a plan, what are you planning to do? Nothing. You're planning to just look for any opportunity. And the thing with the market is, that's different than business. At any given day, you could see dozens of opportunities. They could suck you in. And if you don't know what you're looking for, anything looks great. But if you think about life, if I asked you what kind of car you want, what's your dream car, what's your dream house, you're going to know. What's your dream setup? I just want the money for the car. But, you gotta have, that's why it's important to have a plan. And before you even start, if you blow an out account, if you start again without a plan, you're probably going to blow that one out too. I know that from firsthand experience.
Probably even faster than the prior one.
Exactly. Because now you're revenge trading.
Exactly. And so, guys, really this one's pretty simple. Make a plan, test it, tweak it, and then trade it. All right? Forget about wishing, have a plan, and execute it. And we're going to sign off on step number 3 with another quote. And this one is unnamed, but I really do like this quote. It takes as much energy to wish as it does to plan. All right. So
I like
forget
that.
about wishing, have a plan and execute it. All right. And so that is step number 3. Now we'll lead into step number 4, and we'll just do a quick summary of what we have covered so far. So step number 1, we accepted our losses and the results. Step number 2, we've identified and analyzed those results and what we have to work on. In step number 3, we developed a plan. And so what comes next? What comes next, guys? What do you think comes next? Once you've done all of that.
Oh my gosh. Take action.
Take action. Exactly. So now that you have a plan, you trade your strategy in demo. All right. And so you're not going to be sticking around in demo, until you feel confident enough to get back into live. That's not the plan here. The plan here is you've got your plan. You want to test it out in a simulated environment first. So you'll get into demo. You'll spend a week or 2 in demo. And the one thing that we kind of want you to consider while you're in that process is for every single trade that you take, you have to place it with the intention that you're going to look back and ask yourself, if I was hiring this person to trade my money for me, would this be a good trade? All right. If you can answer yes to that, if it's part of your plan, great, take the trade. This is still in demo. Right? If you can say no to that at the time of execution, then it's likely a bad trade and one that you should not be taking. All right. So that one question, ask yourself that one question in that period while you're in demo for that week or 2 after you've accepted your results, you've analyzed them, and you've put together the plan. If I was hiring this person to trade for me, is this a good trade? All right. That one question, if you answer yes, perfect, take it. If you answer no, it's not a good trade. That is not an operation cost if it's a loss. That's just a dumb loss.
I just thought of something here, Mark. Do you think that do you think that sometimes people, because at work and any job that you do, you share your results with other people so they know who generated this report. So because it's your name on it, you put this extra effort to do work you're proud of. I don't care if you do it the night before, you stay up till 4 a.m. People don't know that. They just see the report.
Mm-hmm.
So do you think that putting your name on things is what makes people work extra hard in the corporate world because they know it's going to be scrutinized and it's going to be tied to them? Whereas in trading, you don't necessarily have to do trades you're proud of because most people don't show it to anyone. They're not part of a community. So they're like, what does this really matter? I could get away with this.
Yeah, exactly. I think it's an accountability thing, and I'm happy you brought that point up because I know for myself personally, I really tend to do the best when I'm actually sharing my screen in the day rooms with we run live day trading rooms each morning from 9 till 11. And I will say this, that when I'm doing it live with my screen really showing everybody, I know that I'm a lot more patient and I adhere to my rule set a lot more stringently than when I'm not doing it.
Because you're playing in front of an audience, right? You have spectators and they're watching the game.
And you can't really get away with stuff, right? Like you'll say, oh man, I'm not going to trade unless it gets above this level or below this level. And then you fall off the mic and you've taken a trade within those zones that you said you're not going to do. And then while you're on there, it's easy to say, all right, I'm going to look to take a trade here when it happens. And then when it does come, you want to jump on that, right? Because that's what the plan is. So yeah, to answer your question, yeah, I think it's an accountability thing. And I know, even looking back at my experience working in corporate, anytime my name in specific wasn't like the main person that this is going to go back to, my name wasn't on it, then I wouldn't put as much emphasis and really try to make it as good and kind of have the work speak for myself as it did when it was just myself on there.
Yeah, because now now people know your name. It's accountable. It's tied to you. And I think that's important, right? Because in trading, you have to replicate that environment somehow. The best way to do it is to be part of a community, to be accountable to somebody. We have a community we trade with on a daily basis. The most dangerous thing you can do is take a lot of this money you've worked so hard to save up, and then go in the corner of your bedroom and blow out your account. Nobody knows. You start getting upset about it. You can't talk to anyone, and that's how you create trauma. I'm not even kidding. You could literally create trauma in this business if you approach it the exact opposite way of what we've dedicated our life to creating. It's nuts. This is all we do for you guys, and I'm very, very thankful for the community, and I'm seeing a lot of success within it just because of that one factor.
Yeah, exactly. So there, guys, that is how you take action. All right. Get into demo for a week or two. You really got to take every single trade with that intention that you're going to be asking yourself as a boss. You got to play both the employee and the boss. And at the end of the day, if you go back in and you show that boss, i.e. yourself, those trades, and those aren't good trades, those really shouldn't have been taken. Right?
Two trades you're proud of.
Exactly. You want to take trades that you're proud of. And you're going to do that for a week or two. After you build up your confidence in demo, another suggestion would be is to fund the account, all right, with a small amount, no greater than $1,000. You really don't need much more than $1,000 these days. And you're going to be trading the micros, all right? Not as sexy as the minis. They're a hundredth the size of them, but a tenth the size of them. And it's going to get skin in the game, all right? And so once you've gotten out of this demo, you've gone through that week or two in demo, you've traded, you've taken each trade, you've qualified each trade, and you're happy with each of those trades. Now you funded the account with $1,000. Now you're off to micros. The process remains literally the same. Now you've just got a little bit of skin in the game, and you're going to be placing live trades to build up your confidence. All right? You want to do this for maybe another 2 or 3 weeks or so in the micros, build up the account, build up your confidence in the strategy, build up your confidence in your execution. And then at that point, you can transition over to the minis and keep trading your plan. All right? If you normally trade, 3s, 4s, 5s, whatever it is in the minis, start with 1 or 2. Start small. Get your confidence up by winning a couple of trades, getting a couple of green sessions under your belt, and then start scaling back up to what the regular size was.
I love that. So start small and scale up with success.
Exactly.
Some of the most successful businesses, billions worth, have started that way. That's almost the only way to start a business and successfully do it with some kind of probability rate, because you want to start small as it's working, add some more money in. If you're starting out because you sold a business and you have cash, you're coming in with a little bit of pocket money.
Billions.
Yeah, you're coming in with beans. It's a liability to you, because you might have been really great to the point that you built up a business and exited it and you made a lot of money. But now you're starting a new job at an entry level and coming in with $1 million. I'm not kidding you. I had a guy say, I wanted to put $1 million in my futures account. Like, are you nuts? $1 million? Like, you have to earn the right to control that trading size account. How do you do it? You start with one lot or $1,000. When you're being successful, add some money in the account. When you get consistent, add some more money in the account and then build it up that way, rather than I don't care how much cash you have. You don't need it. Put that aside, put it to work in other ways. Start small. It's the only way to start. And that's a very important factor. I think we do a whole episode on starting small.
Yeah, that's a great point. And, just to kind of echo what Georgia was saying, is that when you're starting, a large account can actually be a hindrance to your development, as opposed to starting small. Like you said, a lot of people that have found great success in their respective industries, they're used to a certain amount of income.
Exactly.
Right? And so, coming in from an industry or a career where, that's what that's all and you've had great success in that, and then coming into a new industry and expecting to hit that same or equivalent or even greater success right off the bat, that's kind of a recipe for destruction. So at the start small. Whether you have $1 million bankroll or you have $1,000, probably not 1,000, like $5,000 to $10,000 bankroll, and then start small, scale up with profits, with house money, and then you're off to the races. All right, guys. So that is step number 4. Take action, and we're gonna finish this step off with another lovely little quote. And again, I don't know who said this one. We'll just call it anonymous, but the distance between your dreams and reality is called Action.
Love it.
All right, that's action. So that is the 4 steps, and our final step here, guys, which we've kind of touched on already, but it's always great to finish off with a nice little summary. So step number 5, guys, is absorb. All right, you want to absorb. You want to become a part of a successful trading community, and you want to absorb as much knowledge as possible. You want to be a sponge, right? SpongeBob SquarePants, no trademark.
I think it is trademark.
All right, so
We'll ask them for permission. I'll write it into
we'll
the
delete
SpongeBob
that.
team.
We'll delete that. So that's what you guys want to do. You want to absorb. All right. You always want to be. I mean, you want to be part of a successful community of traders, because at the end of the day, each trader is individual. All right. Each trader has their own personality. They have things that they prefer, and you can learn from that. All right. There's a lot of things that I've taken, not only from Victorio or from George. You know, I work with them in the office every single day. But there's also members that I've taken things from.
100% on a daily basis.
On a daily basis. You know, Dave, who's now a coach, you guys will hear something interesting with him in a bit of time. But he's a student turned trade pro coach. And, you know, he's taught me one of the things, which was, I can tell you what this one was. It was to try to disqualify a trade. And if you can't disqualify it, it's probably a good trade to take. Right, that was one
the opposite end of the approach.
Exactly,
I love that, yeah.
A different type of approach, and it's little nuances like this. As you build throughout your career and you start to apply these little things here and there, these are the little tweaks that are going to really refine your edge as a trader.
I wonder if that works for trades you're in as well. You know, sometimes when you get to the point where you're consistent on the initial trade, you start to wonder, how could I trail this? How could I run it so I make more? You know, I think that could be applied there too. So if you're in a trade, if you can't disqualify it, stay in it.
There you go.
That's a good little tip. So I've just learned something here now, a different way of seeing this stuff after being in this business for 20 years.
There you go. So always look for things other traders are doing that you might not be. All right. The goal here is that as long as you remain a trader and you're in this industry, you're going to be a forever student of the markets, and you're going to try to constantly refine your trading edge. Right? So seek to discover new things. It's a constantly evolving scope. You know, for example, if you're an equities trader and maybe somebody in the community is a bond trader, well, guess what? They're inversely correlated. So when the bond trader is going to be looking to buy, it's likely a good time to start looking to sell equities. So little things like this really, really help add towards your own personal edge. All right. And, you know, trading in itself it's a dream to everyone, especially once you find success with it. You know, you're able to have really your time back, financial freedom, etc. But it is not a social thing. All right. Trading is not a social thing, especially if you do it by yourself. You do it by yourself. Yes, you might find success, but inevitably you're going to peak in your results and you're going to peak in happiness. Right? If you can't share your success with anybody, what good is that success? Yeah. Right? You can have all the money in the bank, but if you're not really doing if you're not really doing anything with it or anything with somebody else, what does that really mean? You know what I mean? So what does that really mean?
Well, I look at it this way, Mark, because when you take a trade, let's say you're going to buy something. In order for you to be able to buy it, what's going to need to happen? It's not a trick question.
Someone's got to sell it.
Yeah, right? So somebody's got to sell it to you. So look at this. You're trading against someone. So if you're trading against someone, doesn't it make sense to trade with someone? Do you really want to go up against people by yourself? Or would you rather make this a team approach? And I kind of wonder about this. You know, it's isolated because we sit there and we look at a monitor and we think our success is me against this monitor. But the monitor is just showing the battle and what other people are doing. Why would you want to go to battle alone? And to me, that was one of the biggest differentiators. When I first started trading futures, I joined Anthony Drager's community. So I was part of a community.
Yeah, shout out to Mr. Drager, by the way.
Yeah, Drager's been, you know, he's really propelled this industry forward a lot. And so I joined his community. At the time, I was still trading options quite a bit, and I had, you know, option strategies running that worked well. But I saw the volatility increase in the market, and I'm like, I need to get in on this like day trading app.
I actually didn't know that.
Yeah.
Is that how you met him?
That's how I met Drager.
No
yeah.
way.
So I traded in his room, And then I just typing smart ass things on there. You know me, I just
Yeah.
say some funny stuff occasionally. Like 1 out of 100 jokes is good, but it's so good that the 99 are forgiven. And so that's how I started. I traded in his room. I chatted with him. That's how I met him. And then I was looking at footprints before. I was like, what is this footprint thing? So I was with Trevor's platform back then. What was it called? It was on Investor RT, but it was called Market Delta Charts. It was just white labeled.
Mm-hmm.
And so I was looking at these things, looking for education, and then he was explaining the footprint in a way that I knew made sense in a way that he knew it.
The baby bird.
Yeah, like the
The
baby
baby
bird
bird
stuff.
story.
And I was like, look, I got to look into this tool more. I'm missing something here. And the more I looked into it, the more I picked up on it. I'm kind of an independent learner. I like to source things from people, but when I kind of get it,
You get it.
I like
yeah.
to isolate.
I think
and
we're
just
the same.
perfect it, you know?
Yeah, we're quite similar in
by
that
myself. So it started out with Draggers Community. So I was part of a community. If I had not been part of a community and couldn't talk to people and get other people's perspectives, who knows? Maybe I would have been trading options. I was doing options pretty successfully, but I was part of a community then too. It was my own because there wasn't a big options community. I didn't like the approach people took with day trading options. You know, it's kind of silly. But anywho, that's a whole other topic. So community is important. I started one as well. And then I created one. And, you know, I say I, but really it's everyone here. Mark, Victorio, all of you guys part of Trade Pro Academy. We created a community. And I love waking up and playing on a team. Trading is a team sport. But at the end of the day, the performance is individual. You know, you could win a Stanley Cup in hockey and your contract might not get renewed next year. You might not have met the expectations that you were signed for.
Mm-hmm.
So the team wins, but it's still an individual's performance and individual pay.
Yeah, that's a great point Georgie brings up, and I know the community's also been huge help from me personally, my trading, and like I said at the beginning, if you join a successful trading community, feel free to choose whichever one you want. Obviously, if you're listening to this podcast, we have our community, the Trade Pro community, and it's really grown really since I joined the team, and it's actually crazy to see the amount of awesome traders that we have in the community. Everybody shares. Everybody's willing to share their successes. Everybody's willing to share their drawdowns, even the tough days. And I was actually sitting in on a call, in a group coaching call, and one of the members that had gone through the coaching and has really found success in his approach to the markets said that one thing. He said, a lot of the traders, I feel that the people that will get the most success or they'll get the most benefit from these coachings are the people that are honest with their successes, but are even more honest and open about their losses, because you can't progress without sharing that stuff. And that's the power of a community. Imagine being able to ask somebody that's been doing this in the trenches, like George since 01, like myself since 2013, 2014, like Vic from around the same time, right? We're in the trenches every single day, and that's the benefit of being in the community. You can ask questions real time. You can get those answers real time. You can see what other traders are seeing. And we have a great diversity in the room as well. Not everybody trades equities, right? We've got gold bugs. We've got oil bugs, right? And so whatever you trade, we've got the community for you guys. And as we're starting to wrap up this episode, I just want to leave you guys kind of with this. When you're about to give up, you are always the closest you will be to success. So, if you guys have lost money and you're considering quitting, go back to your why. Why did you get into this industry in the first place? If you do that and you still want to trade, realize that you're turning away at the highest probability moment for your success.
And if your why is away motivated, you might want to work on the why a little bit. I think that if you want something bad enough, that usually it's because you have a purpose for it. If you don't have a purpose for it, you're kind of indifferent whether you get it or not. You want it until you see the next shiny thing.
Mm-hmm.
You know what I mean? But if this is your life mission, if you think that you should control your own schedule, if you think that you should have freedom, if you think that you deserve financial abundance without having to put in, crazy hours and overtime and not work for anyone, then it should be worth the sacrifice. It should be worth a blown out account. None of this should be discouraging enough to you. If you feel discouraged enough that you're like, you know what, trading is not for me, go back to your why first before you leave. Why are you doing this? Can this help you get there? Do you want it bad enough? And if you do, all these 5 steps are going to be something you're going to do with eagerness. You're going to be excited to do it like I was. I'll tell you one thing. Like I wrote it in the book, my book, Path to Profit. You guys should check it out. But in there, I remember my mom will ask me when I was deciding, should I trade full time or school? She said, "What if this doesn't work out?" And she stunned me.
I remember this.
Never considered in my life the potential that this would not work out. I had considered it wouldn't now, it wouldn't this way. I had considered I'd have to do other things, more sacrifices to make it work. Not once did it cross my mind it would never work out. And since then, I haven't thought about it ever again. It's like there's never doubt. I'm the kind of person, if I want it, how do I make it happen? And you have to be that kind of person or become that person to succeed in this business. Because guess what? If you find something that works for you today and you're making money, tomorrow the market's going to change. And
As it has this week.
Exactly.
As it has this week.
And so it's on you to constantly develop, absorb, come up with new things, innovate, try new things. The day that you say, that's it, I'm a successful trader, I'm done, I don't have to learn anything new, is the day that, it's the beginning of the end. It's going to start to go down. You're constantly growing. You're constantly fighting. There's no easy day, but my God, they're all rewarding in their own way.
Oh, yeah. Oh, yeah. And that's it, guys. That's what we've got for today's episode, Trade Pros. So, again, I want to thank you guys for listening. Thank you for taking the time out of your schedules. Whether you're listening to this on your way to work, on your way back home from work, whatever you may be doing, thank you guys so much for taking the time and being here with us. What we ask of you in return is if you can think of one person in particular that might find today's message really helpful on their trading journey, please share this episode with them. And also, if you guys enjoy listening to this podcast, we work pretty hard to put this thing together for you guys, and it is free. So in return, if you guys can just do us a quick favor, pop on over to iTunes, leave us a rating and a review. That would be really greatly appreciated. Until the next episode, everyone, good luck and good trading. Take care.
Thanks for listening to the Mind Over Market podcast. You can find us at tradeproacademy.com.
Hello, Trade Pros. Welcome back. Welcome back, guys, to another episode of Mind Over Markets with your hosts, myself, Mark Borsch, and
George Papazov.
Welcome back, Georgie.
Thanks for having me, Mark.
For another episode.
This is going to be great fun.
This is going to be good fun. We always have fun when we record these guys. So, guys, thank you so much for tuning in. We've got a really exciting episode planned for you all today. Before we take a look at today's topic, if you guys missed the last week's episode, it's a big one. Make sure to check that one out. It's on bouncing back from a blown account, where we gave you guys a 5-step process to bounce back from a blown account. That is episode number 17. In today's episode, however, we're going to be focusing on the issue of over trading. This one comes highly requested. It's a very highly requested topic from our community members and from our YouTube channel. All right. And so in this episode, we're going to identify some of the most common reasons that traders fall into the habit of over trading. And we're also going to offer you guys some actionable solutions on how to prevent yourself from getting sucked into taking bad trades. Now, before we dive into this topic, before we get that deep dive going, let's hear a quick message from the sponsor of this podcast, Trade Pro Academy.
All right, Trade Pros, are you tired of just looking for education? In trading, we assume that we could take a magic pill, a magic course, some kind of solution to take us from where we're currently at to this dream life where we're floating around in big boats, billion-dollar yachts, Lamborghinis.
Neon Lamborghinis
to match every single color of shoes we own. While that's not the reality, we do know that what's most important about trading is not education. Where other businesses stop, we start. It's not about education. It's all about our community. In our community, you could trade with other professionals on a daily basis and see how we, on a 60% or greater basis, on a daily, in our daily trading room, are successful and make money with our community together. So join the winning team, join Trade Pro Academy, And thank you for listening to this podcast.
Awesome. That's a great message there from the sponsor, guys. Make sure to check us out at tradeproacademy.com. Sure, you'll find something that you would enjoy. So let's jump into today's topic. What is overtrading? All right. So first and foremost, we're going to introduce what overtrading is. We're going to talk about what the true costs of overtrading are, how it affects both your account and your psychology. Then we're going to take a look at some of the most common reasons why traders fall into the habit of overtrading. And as always, we're going to give you guys free actionable solutions or tips to implement in your own trading plans so that you guys can mitigate the chances of any of these psychological effects happening in your trading. All right, that is the real goal of this podcast, is to get you guys to work on that psychology and to get you guys in a better mindset so that you're prepared for success. So without further ado, what is overtrading and what are its true costs? What does overtrading mean to you, George?
Well, overtrading is an interesting topic because I think that we've all done it. And, in this podcast, sometimes we say certain things like, once you do this, you could move a step closer to, being a consistently profitable trader, et cetera. Whereas I think overtrading is a daily potential occurrence. Overtrading's got the ability to come up at any point in your career, and I think it does, right? Because I think overtrading can't be counted with just a numerical number. You can't say if you do more than 5 trades, you're overtrading, all right?
It's relative.
It's very relative, yeah, and it's relative to what? To the market condition. So I think when the market serves you opportunity, you should be trading more, all right? And then when the market is quieter, you should be trading less. So in essence, overtrading is taking more trades for the sake of trying to accomplish a goal without having the opportunity of the market to support it. And that's, to me, what we're really getting into here, because at a super volatile market, you've done 12 trades, great. Volatility is there, go for it. For a 4-point range in any market for a whole day and you've done 30 trades, not so great. You've overtraded. And so that's what it means to me. And, it's odd because I tend to do this and I'll usually know the feeling of it. When you overtrade a couple times, you know how you're supposed to trade, you intuitively get a feeling of, oh my gosh, I'm overtrading here.
Yeah, I'm doing not this again.
Exactly, yeah. I've learned my lesson so many times with this. Here we go again.
Yeah, no, that's completely true. And, I guess my definition of overtrading is just simply dividing the word overtrading into the two words that are in it, over and trading. You're taking more trades than you should. And what does more trades than you should be taking mean? It means that you should have a general idea of how many trades you're going to be taking on a single session with regards to market conditions. So, I think George and myself are kind of in a similar neighborhood, if you will, on the amount of trades we typically take throughout the session. And that's right around my sweet spot is around 3 to 5 trades.
I love that too. I like 3 to 5, and even on super volatile days, I go up to like 8, sometimes 9. I'm only trading 2 hours, no matter how volatile it is. I'd probably stay within 5 to 6 or so. But if I'm doing a full session, up to 10, I think.
Yeah, exactly. So 3 to 5 is a sweet spot. These last couple of weeks have been pretty volatile. There's been a lot more opportunity. And so, for myself, I've been doing a little bit more than that. I've been doing around 5 to 10 on average. But like we said, it's all relative, right? So you've got to be doing these things in the right market conditions. And we're going to discuss that in just a little bit.
Would you say that you're spending longer time looking at the charts than me to find those 10 charts? Because sometimes I find you looking at it in the afternoon as well, and you're doing trades. So for those larger trade quantities you're doing, you're probably putting in more time.
Thanks. I guess. I mean, I have the strategies recently has kind of been just really pick sore thumb levels and just wait for those to get traded. So I'd say I'm a lot more patient,
right?
As far as waiting for the trade to set up.
I've seen that in you last couple of almost weeks. I gotta say, is you've been a lot more patient, even though the markets move faster. You waited longer for better levels, and it's worked really well.
Yeah. Well, I mean, that comes with my experience, right? I know volatility hasn't served me well in the past, and I know why, because I was chasing it.
Yeah.
Right? And so now, you see the opportunities flashing in front of your eyes, and you kind of got to understand what your lane is, Right?
Yeah. And I know this isn't a chasing podcast, but I'm trying to think of an example where I've chased something in my life that's something good. I think every time I've chased something, it's brought me to a dark, cold, wet, and scary corner of this planet. But anywho,
Wet.
I don't know. I just felt like that.
The one word I took from all of that.
Yeah, I feel like that would be the most uncomfortable type of environment I could think of. But anyway, what are the costs of overtrading, Mark? I have a really interesting question. What are the costs of
What are the costs of overtrading?
the true costs?
The true cost of overtrading. So we kind of categorize this into two categories. So number one, the first category is obviously the financial cost of overtrading, right? The second category is with regards to psychology, the psychological effect of overtrading. So let's cover the first one first. Overtrading, the true cost of overtrading as far as a financial standpoint is concerned is the extra commissions that you pay. All right. As day traders, we're primarily day traders here. We do some swing trading, but a majority of our transactions in the markets are day trading. All right. And so as day traders, we are the most sensitive to commissions, right? Because we're not looking for as big of a move as a swing trader or a position trader might be looking for. And we're also going to be taking more trades on average. So commissions play a big role in our overall success, right? And so a lot of time in this industry, there's this big misconception that we see where, new traders, even somewhat experienced traders, they believe that you've always got to be in the market. You always have to be in a trade in order to make money. All right. This really couldn't be further from the truth because more trades doesn't necessarily mean more profits. Right. And
do I know that well?
Right. And, like I said, as day traders, we are very sensitive to those commissions. So a heavy trigger finger will likely keep your broker happy, but your account in a drawdown. All right. And that's not what we want. And what we typically tend to see, even in our community, is that a lot of members, when they join us and they join our trading room, they're often really surprised at how little we actually trade during any given session.
Right.
Why do you think that's the case, George?
Well, because the association is that the more trades you have, the more opportunity. You don't feel like a trader unless you're doing a trade.
Mm-hmm.
And I think that our job is looking for trades. Our job is not to take trades, it's to take good trades. And so if you eliminate the average trades to the poor trades, you know what I mean by those that you didn't qualify, that you did more on a whim than some kind of edge or part of your strategy. If you eliminate those trades, you're left with the good ones. And if you're left with good trades, whether they're losers or winners in the long run, I think they're going to bring the results that we're looking for. But for some reason, when you join this business trading, you think more action, more trades results in more success. But really, the action is the analysis. Good analysis leads to a good trade, and you shouldn't have so much. It's almost like, that game. It's not really a game, but how like you put your finger or your hand down, palm down on a table, and you just open up your fingers, kind of like move the knife between your fingers really quickly.
Yeah.
It's like hitting your finger each time and continuing to do it. It's like at some point you just got to realize, look, if I'm doing every time I do something, it leads to a loss. Why would I continue to do more of it? And I think this is what overtrading is about. You're not overtrading good trades. You're just, you're overcompensating. You're trying. It's like sports. We bring it back to sports so much. It's like you haven't had a goal in 10 games, so you skate extra hard. What happens? The puck just skips over your stick. When you're trying so hard, it never happens. When you sit back in and let the flow kind of take you over, you do the right things at the right time.
Yeah, that's exactly the point I was trying to make there is, they're surprised at how little we trade during a given session because we're only looking for the high probability setups. And, given that markets tend to exhibit, random price action, a majority of the time, there's only going to be a handful of opportunities, a handful of quality opportunities to take advantage of.
Right.
And that's really the end goal, is to take advantage of those opportunities and to skip everything else. And in doing so, guess what we also skip out on? Paying a whole S-load of commissions. Right?
Yeah.
So that's one of the true costs of overtrading, is that it can drain your account very quickly, especially if you're going to be day trading.
Man, one of those days where like you fought all day to get back. Like, let's say you start really bad. You're having a bad day. For whatever reason, you think you shake it off and you just make it worse. And now you're down some big money.
Man, I've been there. I think a couple episodes back, we talked about patience.
Yeah.
And I talked on the day that I had around 60 trades or so. I think it was 62.
Holy moly, donut shop.
Or something like that. Yeah. And so guess what? I ended that day green in profit, or rather in points. But after all said and done, net, I was down. Guess who was happy? The broker.
That's where I was going with this.
Yeah.
That's exactly what
I
I was going.
didn't make any money on that day. In fact, I huffed and I puffed and I worked hard and hard. And the only person making a paycheck that day was my broker.
Yeah, and I think it's important to mention that like there's two costs in this business. And I don't know if we cover this in the next section. No, we don't. But let's just very quickly skip over this. There's two costs. There's fixed costs, right? The fixed costs in a business are the platform fees, the software you're going to use to trade. All right, your internet bill. All right, your
These
power.
are your operating costs.
Exactly, your operating costs. So electricity, the pen and paper you write on, every single thing that you consume in operation. Great. Then your variable costs are per trade. And so this is where each time you put a trade on, there's a cost to it. And the commission is one of those things.
Mm-hmm.
And guess what? Before you eat in this industry, everyone else before you in the lineup eats. You got to create enough of an opportunity for everyone else to thrive, and then you get paid last. And so this is why, for me, it's like, the broker is going to get paid right away as soon as you click the button. Right? The exchange gets paid from that. The broker gets split between so many different factors. If there's some left over, you get to keep it. And this is why when you're taking shots, got to remember there's a variable cost. And I hate those days. Nothing for me is worse than coming back from a big day and then seeing my commission, seeing like, oh, hey, I was still down $500 and that's just commission. That's why I stopped counting commission. It's part of my trade. It's a very controversial topic.
It's a highly controversial
In the
topic in
community.
our community.
Yes.
But kind of to that point, I had a similar day. I think it was last Tuesday or Wednesday. There was opportunity there. I think I took something like 18 trades.
Yeah.
Outside of my normal sweet spot, and I finished the day green, baby green. But I think after commissions, it was like a cup of coffee.
So here's the thing, Mark. I don't necessarily think that's Amp's fault, right? A lot of times we're like, oh, Amp is the person that made the money. But guess what? If you're screwing in a screw into furniture with a drill and it gets in there and you keep torquing it, and the screw head snaps off, you can't be mad at the screw. You're just giving her. There's no, she's already.
You're just giving her, guys.
That's going to be the quotable of the episode. So it's the same thing. You can't be mad at the screw or the drill. You got to be mad at yourself, the operator. And I think trading is the exact same thing. So, that's the first thing. Of the true cost is commissions paid. The per transaction cost. It makes sense if you have less transactions, you have less commission, which means more money in your account.
Exactly. Ideally, more money in the account. And so the second category here of the true costs of overtrading, this one has more to do with psychology, the psychological impact of overtrading. And I'm going to let George take this one on.
Oh, man, I shouldn't have talked so much.
You shouldn't have talked so much, man.
Common problem. Man, oh, man. I yap a lot. All right, so I think this one's more costly than the first one. And I see that as part of the show notes. Every single thing that you think and every action that you take creates a habit. And I don't think we realize that, right? Because we give so much importance to our logical thinking. We think that the things we can control are what's responsible for our outcome. The logical thought. If it's in my mind and I'm thinking about how to change things, I will change things. But the reality of the situation is, if you guys just revisit episode number 1, right? Only 0.006% of all the decisions being made are done on a logical level. That means you're only aware of 0.004% decisions you make. Other 99.94, all right? 99.94 decisions that are being made on a daily basis are done without your awareness, by your unconscious mind. Think about that. So what you think you control is just the tip of the iceberg. So how is this important? And so if you continue to trade and you're generating losses, you're not just generating losses for one day, you're generating habits. You're generating repeatable programs. And so I'll give you an example. Have you ever been burned with a lighter before? Have you ever been burned with anything? Have you burned yourself?
I may have happened to do that once or twice, yes.
Do you remember the story or no?
I have a story. I have multiple stories,
Yeah,
but I
please tell
can
me,
definitely do a story, yeah.
Yeah. When was the first time in your life you can remember where you got burned by something? Fire. Like hot. Ouch.
I don't know. Probably when I was a kid messing around in the kitchen. My mom was cooking something. I think it was something with probably pasta or something like that. It was water. I just remember it was
It was water?
It was water, yeah.
And so before you did whatever you did, Mark, you probably weren't aware that water burns. Or maybe you were, but you didn't know how badly.
I think it was probably a bit more of the latter.
Yeah, you didn't know how badly, right? You know that it hurts, but you don't know it directly. You know that your parents told you. So what I'm getting at is I have a story like that too. My grandmother said, don't touch the stovetop. 2 hands, whack, right on top, super hot. So it's like once you get burned, now you know when you see fire, what do you think? Oh my gosh, I'm going to get burned, right? And this is what you're doing in your trading account. It's like you generate all these trades, and then you're creating the pattern that trades equals loss, right? Getting close to fire equals getting burned. And you might say, oh, well, I'm not generating that habit, but you are, because your unconscious mind knows that the losses you're creating means that they're going to affect your lifestyle. So as you're busy creating these trading habits, what you're telling your mind is, I'm not good at being around fire. But fire is a useful tool, especially if you're cold. And so what's going to end up happening is you're doing these trades and you're creating a self-sabotage cycle that'll eventually take you out of this industry. Unfortunately, it takes a lot of people out of it that we see before they've even had a shot, right? And so this is what I'm going to tell you. There's a saying in sports and in performance psychology that practice makes perfect, right? I got a different quote here. I think you know what it is.
I'm not going to ruin your surprise.
Okay. Practice makes permanent. All right. It is the things that you do consistently that you create habits out of. And the most dangerous part about a habit is that you only could change it while it's on a conscious level, right? Once you do it enough times, that if A, then B. If you trade, then you overtrade and lose. Trade, overtrade, lose. Now you associate trade equals loss. Once you do it enough times, you move it from your logical control back into your unconscious mind. Now it becomes a program that as soon as you trade, as soon as you experience the trigger, the rest of the events are automated. And that's the point at which a lot of traders get. And this is why overtrading creates a bad sequence of habits that unfortunately repeat and repeat and repeat until you lose your money. So the best time to nip this in the bud is while you're doing it. Don't write that habit to begin with, right? Overtrading is a very dangerous way to create habits. And I think the true cost of a bad habit is way more than commission.
100%.
I would pay AMP $90 a trade to get out of this habit if I had to. In fact, it's actually good, right? At the beginning in a business, everyone wants the cheapest cost for everything. But I don't think that should be the case. I think new traders should pay $20 a contract. All right? Because now let's see if you're going to do some trades. All right?
Yep.
You're not in business as long as pros. Why should your variable cost be that low? Right? And so I think, unfortunately, commissions hurt traders when they find the cheapest ones, but more importantly, these great and bad habits could really cost you a lot more than commission.
Well, there it is, guys. That's why I made him take that one. Good job, Georgie.
Thanks. There was like 3 notes.
Yeah, there was literally like 2 sentences of notes, and he just kind of ran with it. But I just wanted to kind of add, on top of what George said, if you're going to be over trading, it's also going to drain your mental capital. And that's going to affect your psyche and your psychology throughout the session as well. And so if you guys aren't really familiar with what mental capital means, it's simply your state of mind as as you sit down in the trade station, you open up your platform, and what your mindset is like throughout the whole session. Are you tired before you even start trading? Did you get enough sleep? Did you have any arguments that could be affecting you, et cetera, et cetera? You want to make sure your mental capital meter is topped up when you're sitting in front of the station, right? And so as you start over trading, that mental the first trade that you take, that mental capital is going to start to run out. And so as you commit to more and more trades, you're throwing more mental capital at that. All right. So it could very well be the case that you're throwing, good money after bad money. And then when the real opportunity comes, you don't have any more bullets left, nor do you have any more mental capital left. And that's where a lot of traders struggle. All right. So that's basically, that's my 2 cents on that bit. I just wanted to add that. So in summary, those are your 2 true costs of overtrading, being extra commissions paid, paying extra commissions, and the most costly one being ingraining bad trading habits. All right. And so now we have covered some of the costs of overtrading. Let's now take a look at some of the most common reasons that we see which day traders tend to overtrade their accounts. And I'll start off with this one. First one's really a no-brainer. It's not having a strategy. All right, it's not having a strategy. Call it gambling, call it entertainment, call it whatever you want to. Not having a strategy, not having a plan is planning to fail. You've heard that. You've heard us say that so many times, right? If you don't have a strategy, then you can look at really any chart that's moving, and you can easily argue why there's a potential setup there, which looks good or might even feel good, might even feel like it should go in a certain direction. Until guess what? Until you get in, right? And then it reverses and goes the opposite way. All right. And so anything really that moves can tempt you to take a trade. And this is where a lot of newer traders end up. Or rather, this is where they start. A lot of newer traders will start. This is kind of the process that they start with. They're either on YouTube or they get a friend of a friend tells them that they made a quick buck in the stock market. It's super easy. You should give this a shot. They open up an account. They fund the account. We see this all the time on Reddit. Wall Street Bets. They go open a Robinhood account, open different accounts, no commission platforms, and then they make crazy wild bets, lose their shirts, and now day trading is gambling. Day trading is gambling, right? It is gambling if that's what you're doing. If you don't have any strategy.
Look, the market gives us what we want.
Exactly.
Right? There's a quote about that.
Ed Sequoia, one of the original market wizards, basically said something along those lines that the market essentially gives you what you're looking for.
Yeah, you want to gamble? Guess what? It could be a casino, but you ain't going to be doing it for long.
Exactly. And so not having a strategy puts you at risk of chasing the markets and leaves you the most prone to feeling like the markets are against you. You've been in that situation where you don't have a strategy and you're seeing something moving up, you buy it because it looks good, looks like it's going to keep going. You start seeing images of Lamborghinis and stuff in the back of your head, and then bam, the market reverses lower, takes you out and puts you in a big loss. Or the opposite. The market starts tanking as it has these last couple of days. Guess what? If you missed a train early, it's starting to look like it can keep going down now. You take a short, the market reverses. Bam. Does that sound familiar?
Oh, yes.
Market's against me. Everything's against me. Right? So this is one of the common reasons, one of the most common reasons that we find day traders tend to overtrade their accounts. And the solution to this one, really pretty simple. If you don't have a strategy, what do you guys think the solution to this one might be?
Pick me.
Go ahead, Georgie.
Make a trading plan.
Great. That's exactly the answer that I was looking for. And so we're not going to go into all the complexities of a trading plan. We've got some great videos on our YouTube channel to that regard. So if you guys want to check that out, check out Trade Pro Academy on YouTube and Trade Pro Academy Trading Plan. I think we have a series.
Yeah.
I think we actually have a couple videos on that. So
I just want to add 2 sentences before we move on. Very, very quick. You need a trading plan. It has to be on paper. It can't be in your mind. In your mind, too many things change in real time. It needs to be on paper, visible, on your trading desk. It needs to have a trigger. It needs to have what you're going to do with the response and how you're going to manage your risk. Those are the key components of it, because if you don't know what you're looking for, how will you know when it's time to take action? You don't, right? And then if you don't know when it's time to take action, any time is a great time to take action. And that's how you overtrade. No strategy.
Exactly. And that leads us beautifully into the next reason, or rather the next common reason why day traders tend to overtrade their accounts, and that is due to boredom and a lack of patience. So this kind of goes back to what we mentioned earlier on in the episode with regards to that general, really industry-wide misconception that you always have to be in a trade to make money.
Yeah.
All right. And, I typically, in my experience, I've experienced this myself when markets have they've transitioned from volatile environments to slower environments.
Like summer markets is one example. Not
summer
always.
Markets is a good example. When markets shift, when market volatility shifts it's especially dangerous when it goes from high vol to low vol, as opposed to going from low vol to high vol. That transition's a little bit easier. But when the market conditions transition from high volatility to low volatility, it's very easy to get stuck trading momentum strategies in a market that's not moving.
Wouldn't you think, isn't that a crazy thing to think of? That when things are moving fast and they slow down, it's actually harder? For me, it's harder that way than slow to fast. Because when markets are slow and they start going faster, I can adjust because there's more opportunities. But when you go from seeing more opportunities to knowing that you have to be patient for the good ones, this is where the boredom kicks in.
this is exactly where the boredom kicks in. And this is also something that a lot of newer traders will kind of experience when they start out. Because like we said, that there's that misconception that you always have to be in the markets. You've got to be active in order to make money. And so, when the markets are quieter, you don't get as many setups for them. It's very easy as you're staring at the screen, you're watching the blink or the tickers blink green to red, green to red. All right, there might be something to do. Sometimes you'll just take a trade just because you're bored.
Yeah.
I know I've done that before.
Me too.
I've nipped that in the butt these days. I'm a lot more patient now. But I know when I started in my journey, that was one of the things. I had my strategy, I had my plan. But you know what? Sometimes things get slow. You feel like you need to make a trade, you need to hit a target, etc., and you put on that trade.
Look, I get this because when I worked a 9-to-5 job, when I was in the sales side, the brokerage I worked at in the past, if you weren't doing anything, you were bad employee, bad. You should always look busy, even if you're doing absolute squat and alt tabbing as soon as the boss left. You had to look busy.
You know what's actually hilarious is when I was going out of university, I had a colleague that's probably 4 or 5 years older than me.
Yeah.
Kind of similar to us right now. And he was working in a bank at the time. And I was asking him some questions about it. And he was like, honestly, the best piece of advice I can give you is just to walk really quick and look like you're busy all the time. Like walk quickly around the office with papers, shuffle papers, walk around the office, look like you're busy, and you won't get bothered.
Well, if you think about Scotia Plaza, where we worked, if you go down the ground floor, you'll see that. People are just scurrying around doing absolutely nothing. But anywho, for me, I used to suffer with this. I used to be bored. So for me, I don't know, are we jumping the solution? I got a really good solution for you.
Yeah, you go ahead, man.
My solution that helped me with this when markets were slow is, believe it or not, on one of my monitors, I just have probably like 80% of that one monitor is just an internet terminal. On there, I check emails, I plan things. But I figured if I trade out of boredom, I could lose $500 to $600 a day. And that's according to my strategy. I have a certain amount I could risk on a daily basis. Once I hit that, I got to stop. Like if I'm going to be losing $500, $1,000 a day, let me go on the Louis Vuitton website, just chill out a bit and buy a pair of new shoes. Or let me go in and research my washer and dryer had broken a couple of weeks ago. And it was a little bit slower before this volatility kicked in. I was sitting there looking for washers, dryers, learning about stuff, researching, read about psychology, watch some YouTube videos. It could be whatever you want. It could be trading related or non-trading related. And that one tip I could have here is if you're, I stay focused. I could look at a lot of information at the same time, but if you're watching TV, playing video games or something, have an alert. I don't think you get that distracted, but I think at your trading station, have a magazine, have something to do, something to read for those slow times because, thinking you could force a trade is the worst way to deal with boredom and lack of patience. Do anything else, whatever it is. Just don't force trades because forced trades are the ones who force losers. I haven't forced winners consistently ever in my life.
Yeah, I think that's exactly true. And that kind of just brought me back to a memory I had when I was trading and the market wasn't really moving. And I remember this day because it was one of my worst days. And it was honestly a slow grinding market that it was grinding higher slowly. And I kept trying to fade it. Just kept trying to fade it, kept trying to fade it, kept trying to go. And my thinking was, now I'm in this trade, it's got to go.
Yeah.
Right? Like now I'm in this trade as if me getting into the trade is suddenly going to make the market move and fill me into profit.
Yeah.
Right? And so it was kind of one of those things where it was more so a lack of patience, but I guess it was also boredom. Right? And so little things like that can definitely affect your account and your psyche. And George gave you guys a great solution. I've got a couple of other ones. One of those solutions is to ask yourself a certain question. All right. You can ask yourself a question before placing a trade, such as, am I taking this trade because I'm bored or am I taking this trade to make money?
Great question. This is something great to print and put on your workstation during slow market volatilities.
Yeah, exactly. There's other great tips. George kind of briefly summarized alerts. Right? So a majority of platforms these days will have the capability to set alerts. And so if you know that you tend to overtrade before a market trades into your level, right? Then guess what? Set an alert at that level and then you can, focus on other things. Once you get the alert that the market has hit your level, bam, you're back in front of the trade station. You're ready to qualify your trade, and you likely have the highest probability of a winning setup there because you've waited patiently for where the probabilities are highest and they're in your favor. So that's another one. One from one of our coaches here, Dave. He likes to eat cupcakes. All right.
Yeah.
That is legitimately his solution to boredom and lack of patience.
We still got to send him some cupcakes.
Yeah, we do have to send him some cupcakes. He literally gets away from the screen and just goes and eats cupcakes when he's bored. All right.
I hope he goes to the gym after.
Yeah.
We're going to have to talk to Dave.
Yeah. He's from a nice sunny part of the state, so I'm sure he gets some exercise in.
That extra sun keeps the metabolism churning and
Yeah.
burning all week.
I sure hope so. Right? So it doesn't have to be anything complicated, right? As humans, we tend to overcomplicate things. Simple things work, right? KISS, KISS, keep it simple, silly. Things like that work. So you got to find what works best for you to help prevent you guys from, taking trades out of boredom and taking trades because of lack of patience, right? Boredom more so, you're not really knowing what you're looking for. Patience is pretty much the exact same thing. You don't know what you're looking for. So as soon as you have a strategy, you know what you're looking for, and that should help you out with the patience. A couple of these other solutions as well should help you out. Price alerts, cupcakes, asking yourself questions, even Georgie's solutions as well. That's common reason number 2. So jumping into the common reason number 3, why a lot of day traders tend to overtrade their accounts is because they put themselves in a desperate situation where they have to or they need to make money to survive.
This one is so dangerous, Mark. You could really hurt yourself and your family with this one.
Why don't you expand on that?
Well, since I cut you off, I got excited because this one is, I think, of all the other ones, this one has the potential to ruin you emotionally and financially. Honestly.
Yeah, you can get to a pretty dark place.
100%. Like, if you need to make money, that probably needing to make money depends for what. If you need it to pay rent, if you need it for food, you need it for your family, you're not even trading to begin with. You need to start trading with capital that if it absolutely perishes, it's not going to affect your lifestyle. I mean, sure, you wouldn't be able to spend it on some nice vacations, etc. But when I mean affect your lifestyle, I wouldn't put you in any risk or danger. When you're trading with money that you need to double or whatever it is for your survival, like survival money, your unconscious mind knows that, and it knows you're taking risk with things you shouldn't be, and it's going to get you to get out as quickly as possible. Even if it's a small loss, it's thinking, let's keep the rest of the money. And if you keep fighting it, it's going to keep generating small losses until you eventually blow it out. I would not start trading, especially in a world where you could start with so little, right? I think that if you're in a situation where you need to make money, you've made other decisions that have led to this moment. And I don't think you could right your other wrongs with trading. This is a business where you got to be disciplined, focused, etc. If you need money, because you have it here with capital letters, that really screams at me from the screen. There are other solutions. I would say you're better off creating a financial plan and creating a date at which you'll jump in the industry with more savings in a better place. I would not get into this to make money. I've had people message us on social media platforms, I had $100,000. I'm not going to mention this guy's name, but let's call him Guy. All right?
Guy.
So Guy had $100,000. He was down to 10K. He said, I've lost $90,000 in the markets, but I've lost it at other places. I know you guys are the real deal. I'm going to sign up. Can I use this 10K? I need it, or else I'm going to be in a very dire situation. He listed his dire situation. I don't want to get into it. You know what I told him? I told him no. I'm like, if you sign up, I will cancel your membership.
That's probably why I didn't see a Guy.
Yeah, Guy.
In the members list.
That's exactly why I didn't see. I said, if you sign up, I'm going to cancel your membership. I don't believe this is going to work. I can't support this. This is a dangerous decision that impacts more than just you. You're going to hurt other people other than yourself while you're doing this. No. Bad timing. So that's my piece. I know I went in a little bit more detail, but I feel strongly about this because I've been there. I've risked money that I needed, and then through that, it put me in a lack mindset. You don't want to trade from lack. You want to trade from abundance. You want to think about what are your towards motivations. I want to trade for more freedom, be my own boss, spend more time with my family, You don't want to trade because you need to get away from a financial disaster. It's not going to work. It's a performance sport. All right? Most athletes don't play to not lose. Most athletes play to win.
That's what I would say too. That's why Georgie took that one. The only thing I really can add to this one is really along the lines of we had an episode. I'm just trying to remember which one it was at this point, where we talked about focusing on the process instead of the results.
Shoot, I think we mentioned that in almost every episode. We found a way to plug that in.
Yeah.
There's some recurring themes you guys are probably starting to notice.
There's definitely some recurring themes, but this kind of goes in line with that desperate situation where you need to make money. When you're in that kind of a situation where you need to make money, first and foremost, as Georgie mentioned, you're going to be in that lack mindset. All right, that's not a place that you want to be in. You want to be in an opportunity mindset. And, if you're going to be in a lack mindset, what you tend to do is you tend to focus more so on the results of your actions, more so than the actual process, right? So if you're in a situation where you absolutely need to make money with your trading account, you're going to be focused so much on the results, right? Whether this trade is a winner, whether this trade is a loser, whether you get filled into a trade and, if you start taking heat right away and then you flatten it out and it can go, to your profit. These are all the little things that combined can either make or break you as a trader. And so that's really my 2 cents on that part, is that if you put yourself in that situation, you're kind of making it's kind of like an uphill struggle.
Yeah.
Right.
It's like a do or die.
It's exactly, it's a do or die situation. And, sure, there are some exceptional cases where, people do find success out of that, but the majority of cases are that it doesn't go so well.
Yeah. And I found that every time I've needed, Mark, to make money, I've actually needed to do 3 things, and none of them had to do with money. You want to hear what they are?
I'd love to.
Get your credit card out. Let me see it. Let me see the plastic on the table. So I've needed to do 3 things. If I need to make money, I need to stop and think about, first of all, what am I doing? That's the first thing I usually do. I don't really need money. I need to think about what it is I really need. That's more important. What am I going to do with the money? And more importantly than that, I either need more options. All right. So I don't need the money. I need more options, or I need to make better decisions. And almost always, I need to do all 3. Those will lead to money. I think what you said, Mark, is very important. Money is a result of past decisions, past opportunities. Chasing an amount just makes today's opportunity and decisions bad. You're sending good money after bad. I forbid you from doing that.
Exactly. And so let's move on to number 4. So just to quickly summarize so far, the most common reasons: number 1 being not having a strategy, number 2, trading out of boredom and lack of patience, number 3, putting yourself in a desperate situation where you need to make money, and number 4, this one is primarily for those newer traders out there, and that's enthusiasm. All right. Enthusiasm, you might be hearing me say this, you're like, what's wrong with being enthusiastic about trading? Right? This is kind of a double-edged sword. All right. Having enthusiasm for starting trading, a lot of people started out, like I said, the typical journey for a lot of people is you either hear about this from a friend or you see YouTube videos on it. You see somebody out there making, a couple $100, couple thousand, whatever it is that makes you feel like, man, that's a good chunk of money, right? You see that, you get, I don't know, you start learning about technical analysis, you learn about indicators, you think that's the holy grail. I got to go out there. This thing's going to make me a whole $1 million, right? That enthusiasm is good, but at the same time, it might be misdirected, right? And so when it's misdirected, when you're so enthusiastic that, you don't want to be patient, you see the markets moving, you have that need to kind of get in the markets, get your skin in the game, that's where it can kind of become dangerous.
Yeah, this is almost like some people under risk, and these are the people that sort of over risk in the name of enthusiasm, because it's like you're seeking this like utopia, and you're like, wow, this is so great. Whether win or lose, who cares? Because I'm gonna do this. And then when you kind of mix that with not having a plan, oh boy, that could go just as wrong as any other ones. Over trading.
Yeah, it can really lead to some reckless behavior.
I suffer from this to this day. I get enthusiastic a lot. I'm like, it's just the market. I've done this before. This kind of goes on and off for me in my career. I've gone from like, I want to do this for the money to, I want to do this for the love of trading, back to, I want to do this for the money, back to, I want to help other people. So it's like, I'm enthusiastic about this industry so much that it sometimes forces me into trades that are too early. It's not a chase, but it's too early.
Yeah,
Yeah.
I mean, I've been there. I've been there.
Yeah, I think this one's just as dangerous as any other one. And it sounds odd. I gotta be honest with you, when I was reading this, I was like, wait, what? I'm like, wait, yeah.
That's it. You know who makes the show notes now.
And
So-
you do a great job, Mark.
Oh, thanks, man.
Keep this discussion so on point.
Hey,
that
thanks, man.
This
Hopefully-
podcast is nothing if it's not with you.
Hopefully the audience feels the same. Let us know if you do. Right, so that's enthusiasm, guys. And really, the solution to this one is to, there's no real concrete solution we can give you rather than saying to try to redirect that enthusiasm towards, redirect that enthusiasm towards applying patience.
Yes.
Right, instead of being like, man, I gotta get in, I gotta make this money. Be enthusiastic about accomplishing patience.
Yep.
Right, one thing you can do, especially as a newer trader, this is something that we kind of advise in our futures course, which is to give yourself a certain time range. Whether it's a single day or a week or a month of just watching the charts. Just sit down in front of the trading station and make it a goal to just sit in front of the charts, not to do anything, but just to watch and observe. All right? And I can guarantee you, if you can go through a full session watching just one session, if you can go through one full session just watching the market, not taking any trades, you're going to see that enthusiasm of being patient. You're patient, you're allowing yourself to build more data, and I can guarantee, in hindsight, as you go through that kind of a situation where you're just watching price action throughout the day and not actually taking any trades, you can do it as if you were taking trades and say, all right, I'd be looking to take a trade here. If you're not actually putting live money on the table and you're focusing on just watching and observing, more often than not, you're going to start to see things more clearly, and you're going to see those setups, those low-hanging fruit setups develop. Whereas if you sat down in front of your screen with the intention to trade, you might not have the patience to let price action develop and form those setups. You might already be in a trade before the real opportunity comes. So giving yourself this kind of an exercise where you focus on being patient, you focus on observing, you focus on watching and learning, and then you celebrate the fact that today was a great day. I didn't take any trades, but I learned so much.
That's a fantastic reframe. Good way to reframe yourself and look at this, right? Be enthusiastic about the process and the actions. But I'm a firm believer that no amount of enthusiasm is too much in life. You should be enthusiastic, but I think if you're overly enthusiastic about trading, you can redirect that to other areas of your life. Be enthusiastic about your relationships, about your aspirations, your goals, how you're going to give back and help change the world. By all means, be enthusiastic. But in trading, be enthusiastic about the process, not the results, and stay patient, because at the end of the day, that's what's important. So don't curb your enthusiasm. Take it up a notch. Just redirect it to the other areas of your life.
Exactly. Redirect it. I think that's the biggest solution in this one here. And we have come to the final of the common reasons why a lot of day traders typically tend to overtrade their accounts. And can you guess what this one is, George?
Without checking the notes?
Without checking the notes.
I've already checked.
Yeah, this is your moniker on Discord.
In revenge.
In revenge.
Revenge trades.
Exactly.
All right? Fat finger mistakes. Oops trades.
Oops, that's exactly what I was hoping for.
Yeah. Oops trade
Oops
is like
trade.
when you make an oops trade. And I've done that before. Mistakes happen. You can't beat yourself up for mistakes that happen. If you wouldn't do it again and you weren't even aware that you did it, if you did it accidentally, you can't beat yourself up. But doesn't mean you should revenge trade. Doesn't mean you need to now make this loss up. If you did it by mistake, it's like a business expense, a write-off. Like you start a product, you start a new idea, new line, new clothing, whatever it is that you want to start, new brand. Doesn't work. You try it. You exit, you say, screw it, I'm going to move forward with my life. Same thing with a trade. Make a mistake trade, just move forward and proceed, because revenge is getting even. All right. And I'm here to tell you that getting even is an elusive concept. You'll never get even with anything. All right. Because the thing you need to get even with the most in life is yourself. All right. I think revenge, remember, perception is reflection. Anything you're trying to revenge, you're actually vulnerable to repeating. Because if you want to get revenge and get even with it, you're mad at it or you're emotional towards it. If you're emotional towards it, it means you have conflict. That conflict will continue to repeat till you deal with it. And so I know I went further than just the oops trade concept, but I think revenge trading is one of those things we know how it feels like. We've all done it, especially at the beginning of our career. And, fortunately, you have to sort out this conflict before you move forward, because I don't think traders who revenge trade make it to the next step of their journey. It's unfortunate a lot of people end here and guess what? What could be worse, Mark, than going in this industry, trading for 6 months, losing a ton of money, looking back on that and saying, damn it, I never even had a plan. What did I learn from this? Nothing. That's probably the most frustrating concept. If I trade for 6 months, I'm following a plan. At least I've learned something. I'm paying education with this loss. If I'm just revenge trading, I've wasted 6 months of my life. And it's not even the money that matters. You could always make money back.
That's exactly what I was going to say. It's the lost
time.
opportunity cost for
Yeah,
the time.
exactly.
That's exactly what I was going to say. It's not so much the financial loss as it is the time and the opportunity cost that, you used revenge trading for 6 months, whereas you could have done something else and maybe have made money out of that.
And probably done well at it and had more happiness. Like, revenge trading sucks. It feels like crap.
Yeah.
Very emotionally draining. It gives you white hair quickly. It's a very negative process. So, how do you catch yourself in revenge trades? If you ever say, oh, I lost trade, let me get this back. If you ever said to yourself, let me just make this back and then I'll stop for the day. You know what my advice is? Stop for the day. Pretend you've already gotten it back.
I mean, you know that I've said that before, and obviously I took the next trade and I didn't stop for the day.
And then you look back and said, damn it, I shouldn't have taken that last
and
trade.
then yeah.
And then what do you say? I'm going to take one more so I can make that up.
Yeah. And so that kind of leads to the point that I wanted to make was that
Sorry. Stole your point.
No, that's a good point. Was that traders that tend to chase losses are kind of going to be skewed towards taking any trade that looks good more so than taking a trade that fits their process and their plan.
Right.
Right. And so when you stop, this kind of goes back to, focusing on the result versus the process, right? If you're focusing on the result, you're likely going to be looking for things that can get you back as quickly, right? I just lost money. Does this trade fit my strategy? No, but it looks like it can make money. All right, I'm in.
I'll make this one exception.
Exactly. I'll make this one exception, and then you know how that story goes.
And then you revenge trade that one. You're like, okay, I'll just make the second exception. And before you know it, you look at your results. I had 5 trades today, 5 exceptions, and none following the rules.
Exactly.
Terrible.
And so that's one of the main ones here, guys. Revenge trading is a really big one. And what are some solutions? What are some of the ways that you prevent yourself from revenge trading, Georgie?
It goes back to the plan, because I had difficulties with this. It's if you don't know, like, having a plan keeps you within a certain boundary. If you imagine just being inside of like this hypothetical box, you're not in a box, but you're in this box, and then it has invisible borders. So if you step outside of the box a little bit, you wouldn't really know until you turn around or look down and see the invisible line. It's the same thing with trading. That plan keeps me within those boundaries. And if I start overstepping them and stretching the rules a bit, ouch? Oh, yeah. If you find yourself stepping out of the boundaries, then you're getting into that danger zone, because that box of boundaries you've created is your safety zone. And if you're not in your safety zone, you're in your unsafety zone. And to me, I need to be very aware of where I'm at. And if I'm starting to stretch the rules of the plan a little bit, taking some looser trades, I'm getting close to that area where I generate a loss. Then I get pissed off and I revenge trade. You don't just start the day by revenge trading. You start the day with looking for everything that's right, doing the wrong trade, and now trying to revenge that one. And then that's the beginning of the end. So if I could catch that initial wrong trade and accept it and just nix it before it even happens, then I don't even need a revenge trade in response because I don't have nothing to revenge.
That's a great tip there. I would say for myself personally, I think we kind of spoke on this in prior episodes, but I've kind of enforced sort of, I guess you can call it a timeout rule, or even basically after I take a trade, especially if it's a losing trade, and this is going to be, I have criteria for certain trades. Yeah, exactly. I have criteria for certain trades, right? So if I take a trade that I've qualified as an A plus setup and it takes me out for a loss, that's fine. That is the cost of doing business. That is a trade that I will take over and over again because there is a statistical edge in that.
Right.
When I find myself taking trades that are lesser quality, maybe I don't have all of my qualifiers, maybe it hasn't hit my level yet, and I take a loss on those, that's kind of what starts to trigger it for me. So what I've done myself is kind of enforce the timeout rule, go outside for a couple of minutes, grab a breath of fresh air. For those trade pros, who knows what that means. Or you can even do something like doing a immediate post-trade review to prevent yourself from getting into another trade right away. I think we've had one of the members from our community, Chris, actually had some really great advice. He actually uses a physical kitchen timer. Uses a physical kitchen timer when he's he's got his rules as well. Physical kitchen timer when he feels like he's over trading, sets the timer on the kitchen fridge, and until that thing goes off, he can't trade.
How much time does he put in?
I don't remember. I don't know how much time.
You put a microwave on there.
Yeah, it's
put your cupcake in the microwave for 2 minutes.
It's probably 5 minutes or something like that. But that one I found was pretty insightful. It's as simple as using an old school timer, right? Give yourself a little timeout. The other thing interesting that he had mentioned is that, again, this kind of goes back to asking yourself a question before you place the trade. Am I taking this trade to revenge a previous loss? Right? If the answer to that is yes, probably means you shouldn't be taking that trade.
Yeah,
right.
Exactly.
It's probably a lesser quality trade. All right. And so, unless Georgie, you've got anything else to chime in on that?
We have this light in the office that spins, and it fell, and it stopped spinning, and it turned off. And with that, I think my ideas sort of got turned off. It's really odd, but I think you covered it beautifully. Revenge trading is dangerous.
Great. So there you go, guys. That is the common reasons why day traders tend to overtrade their accounts. And we'll summarize this shortly. Here's the final little bit of the episode, how to reduce overtrading. All right, so we've already kind of summarized a bunch of the solutions in the previous section of this episode. You've got making a trading plan. You've got asking yourself questions before you place trades. You've got the timeout rule. You've got making sure, with regards to the desperate situation where you need to make money, making sure you're not putting money that you require to live basically at risk. I would say less than 10% of your net worth. That could be a number that give or take a rule of thumb. And then for revenge trading, to enforce a timeout rule. So those are all some of the solutions. Another option or another solution that I would encourage you guys to check out as well is to review your trading journal. All right, we keep harping on the importance of trading journals. We actually did an episode on the importance of trading journals, and there's a reason why we speak on trading journals so much, because they are crucial, absolutely crucial in your development, and rather in your development as a trader. Right through your journey, you're gonna have you're gonna have strengths and weaknesses when you start your journey, and a trading journal can help you identify those. Trading journal will help you identify, if there are certain times, maybe certain times of the day where you tend to find yourself slipping out of control and over trading. Maybe it's certain scenarios where you find yourself being more prone to over trading. I've identified my own. When I take trades that I haven't fully qualified and they stop me out, I know that's one of my triggers to start revenge trading, which leads to over trading.
Right.
So I've built out a safeguard to protect myself from myself. Right?
Yeah,
And that's really what it is at the end of the day, is to prevent yourself from overtrading, is to have safeguards like this in place. Know what triggers you, know what triggers, that moment of overtrading. George shared his, right? I've shared mine. And, now it's time for you guys to really put in the work yourselves, right? Nobody can do this for you. We can give you as much information as possible, but at the end of the day, it's action that's going to get you to where you want to be, right? And so keeping that trading journal is going to be super important. Making a note of when your risk of overtrading is the highest, and simply having a plan in place to handle each of these situations should they occur.
I love it. That's beautiful. I really enjoyed this podcast episode. I think it's going to help you a lot, and I'd love to hear from you guys, the listeners. What are some of the safeguards that you've implemented as a result of listening to this? How would you prevent yourself from overtrading? And if you want to share, what are some of the common pitfalls that led you to overtrade? Would love to get some discussion going here.
Exactly. And so, guys, that's all. That's all for today's episode. I hope you guys enjoyed this one. Thank you so much for taking the time to listen and to allow us a couple of moments, a little bit more than a moment or two in your lives. And thank you guys so much for taking the time to listen. So, as usual, if you guys can think of one person in particular that might find today's message particularly helpful on their trading journey, please share this episode with them. In fact, if you know any traders that are on at any point in their journeys and you think that this podcast can help them out, please share this with them. All right. Also, if you're enjoying listening to the podcast, we put in some considerable work and effort into producing these and bringing them towards you guys. So we'd really appreciate if you guys can pop onto iTunes and leave us a rating and a review, which would be really greatly appreciated. Until next time, everyone, this has been Mark and
George Papsov
from Trade Pro Academy. Good luck and good trading. Take care, everyone.
You're listening to Mind Over Markets, a podcast on trading psychology to help you build a bulletproof mindset. Here's your hosts, George Papazov and Mark Borscht.
All right, everyone, welcome to our podcast, Mind Over Markets, episode 19. This is a special one, really exciting one. This is our first interview. And so, we're honored and happy to have a guest on the show. You guys have probably heard from him or may know him in the industry, but we're going to get some time to sit down and ask him some really important questions and have a great discussion. His name is Anthony Dreger, and we're really happy to have him on the show. Anthony, welcome. How are you doing today?
Great to be here, guys. I appreciate you guys having me, too.
Yeah, absolutely. It's going to be fun. So we want to ask you a few questions, Anthony. And to kick it off, I've known you for a long time, unfortunately. We go back and forth. We razz each other. We have great fun. But I think you're one of the most knowledgeable kind of futures traders out there in the industry. So it's happy to have you on the show and to bring you on and share some of your expertise and insights. So Mark and I have a few questions for you that we prepared to get the audience to know you a little bit more and to learn through your journey, because we understand you've had quite a journey. Like, you started at the beginning of the futures industry, and you've transitioned through a lot of these phases that it's gone through itself. You've lived through it personally also. So we'd love to get a little bit more about your background and how you got started with trading.
I think that's awesome. Let's go.
So how did you first get started with trading, Anthony? I'd love to ask you, what was your first introduction with the industry itself?
Well, first of all, I'm in Chicago. So Chicago Mercantile Exchange, the CBOT, are Chicago exchanges, and it's kind of like the where futures is and began and everything. But I was simply watching business channels at night over dinner because my dad owned stocks. So I kind of understood people owned stocks, and not many people did in the 80s, but he owned this stock and that stock. And so I remember a stock, something on Coca-Cola was coming out. And I told my dad to buy it. And he says, no, it's not that easy. I said, what do you mean not that easy? It's Coca-Cola. So I took a piece of paper, George, and I started putting on the Sunday papers the close. And what I was doing was making a chart and not realizing it, right? So every week I'd plot a point, and I hide the piece of paper under the sofa cushion and brought it out to my dad after a few months and said, see, it was 42, went to 34, and then up to 48. And I told him, You could have made money. I told you at 42. And he says, yeah, but it went to 34. I said, well, that's where I would have bought it. And he laughed. And he says, that's what I mean. It's not that easy. But that made him kind of understand I was interested. And like I said at the beginning, because the CME and the Chicago Board of Trade were in Chicago, they had friends whose son was a pit trader in the late 1980s. So they asked them for, the pits and the exchanges, George, back then were pretty political. It was a private exchange, and it was always who you knew to get in. That's generally how you got hired. So he got me a summer job as a 17-year-old as a runner on the floor of the Chicago Mercantile Exchange. Now, remember, in 1991, there is no computers or no thought of computers taking over the business. It was all the yelling and the screaming and the open outcry. So imagine that. I'm 17, walking on the floor, and after about a week or two of getting over the intimidation, I fell in love with it, and I said, this is what I'm doing for a living.
That's awesome. So when you started out in the pit at 17 years old, that's where you get your start. Everyone's yelling at you and things are flying around. Like, how do you adjust to that environment? Like, what's the mind state and psychology you had to develop? Because I understand you started out and then you settled into it and started to do a little bit better. What was that adjustment period like? Like, what were the challenges with the psychology starting out, being the young buck, and then adjusting to this new job?
Well, you know what? As a 17-year-old, anybody that talks about their first experience on the floor always has a similar story, that you're intimidated. If you've seen videos of how the floor was. And I think for me, every step, and I think a lot of people could relate to this, every time you get into something new, you think, how am I going to learn to do that? For me, just as a runner, I had to learn which pit to run the order to, which side of the pit, and who to hand it to. And there were 4 pits. I was running in the meats, the pork bellies, live cattle, feeder cattle, and live hogs. I remember them. There were 4 pits, each one. You get an order, you got to know the acronym, the month, and you had to remember where to run it to, and you had to do it in a timely fashion because it had to get there. And you're thinking on day one, how am I going to learn that? And you know what?
Yeah.
You get it, right? You learn it. And it just gives you a little confidence that after a few days, you start to soak it in, and you're over the intimidation, and you start to just become and feel at ease. But I was just between junior and senior high school, so I had to go back to high school for my senior year, and then I graduate, and I call to get the job back because I'm sold on this is what I'm doing, and there was no job available for me. So I go to college at night. I take night school. That was my plan, and I was going to work in the city at the exchange. But because that job wasn't available, my brother hired me to do electrical work. So I'm doing that, and and this is an important part of my story. And I think a lot of people have these moments in their life where the trajectory of your life changes because of something someone says. I'm with my other brother, and I said, you know what? Our other 2 brothers did good doing electrical work. Our dad was did well as an electrician. I think I'm just going to be an electrician. I was like 22. He said, throw those blank tools in the lake. Go downtown and do what you've always wanted to do. And he said something that I remember to this day. He says, you'll regret not doing it, not trying it. All right? A lot more than you'll regret trying it and maybe failing. If you never do it, you'll regret it. If you do it and you fail, you won't regret that nearly as much. And that truly changed my path. And I did something that had an ulterior motive. I get a hold of my parents' friends and said, hey, your son coaches baseball. Yeah, I said, could you tell him I'd like to help him? I didn't want to help him coach baseball. I just wanted to help. I wanted to meet him so I get a job again. And this was like 1996. Ends up, I meet him. To this day, is a dear friend of mine. He gets me that job, though, in 1996. I get back on the floor. And again, George, I'm intimidated because now I got a clerk with all the hand signals. And I look up at the guys doing it, same feeling. How am I going to learn to do all that stuff? And it's like you do a little bit at a time and you break it all down. And then you become one of those guys that you looked at and didn't think you could do. So these little steps build confidence. Anytime you start to build on things you never thought you could do and now you're doing it, is just small pieces, like small boxes. And the next thing you are on top and you're much higher than you were because of all those little accomplishments. And to me, an accomplishment is doing something you never thought you could do. And so that was my step as a clerk, right? And I'm clerking in the pit. And it really was a tough job because you're getting yelled at. You're getting paid okay, but it's a thankless job. And I went down there to be a trader. So I get my trading, I did some trading classes, so I knew what to look for. And I get my membership at the other exchange in 1999, right? Which means you get your jacket, your badge, and now you could trade. When you were a member back then, that meant you were a trader. So I start in 1999, George, and I'm like, this is, I'm going to make my $1 million. I get in the pit and I can't raise my arm. Completely fearful. And I couldn't figure out why. It ended up being, and then I'll get into your next question because I don't want to go on, and I want people to kind of get the most of this, kind of walking everyone through how it's gone for me. But I couldn't figure out why I couldn't raise my arm. I knew how to bid and offer, but it was random to me. And it happens to so many people. I didn't know if price was going to go from 40 to 80 or from 40 to 20. So if it's random, I always thought then if something's random, it's also fearful. Those two things come at the same time. And that's what it was for me. And that was right at the moment I was ready to quit.
Right. And so what happens after that? So I know that, for the traders who are listening to this, raising your hand would be like synonymous with trying to take a position. So you get in there and you have that, fear to raise your hand and to put a trade on the floor because what you see as randomness, right, as noise at the very beginning. So how do you get to the point where you feel like, hey, I'm going to quit? Like, what's the next step from there in your career? I'm just very curious because that's the very same thing on electronic markets, right? You start out and there's that fear factor at the beginning. So how do you walk through that, Anthony, and then get yourself to the next step of your career?
Well, you keep showing up and you get, for me, I kept coming. I wasn't taking days off. Stand in the pit and I would I'd stand in the pit and I'd put myself in a position where this is becoming demoralizing. If I'm not trading, I'm watching all these other guys do something I want to do, right?
Right.
They're trading. Why can't I trade? Because by nature, I'm a pretty aggressive guy. And I figured out it was random. Doubt becomes the word. I can't do this. I'm wasting time. And it's an opportunity cost. And I'm also around people I don't like. That's the other thing. We had a small office that we would go to hang out. And it's not like I disliked them. It's just that they didn't have any kind of ambition or drive. They come in late. They would leave early. They didn't care. And I was just in a bad spot. I really was. But I just talked it over about going back doing electrical work. And it was my girlfriend, now my wife, who bought me the most precious commodity of all. I tell people this all the time. That was time. She said, stick with it. I could support you. Listen, we're in our early mid-20s at this point. Still living at home. Right? So the doubt was creeping in, but she's seen something in me other than my pretty eyes and nice hair. And she thought I could do this. She goes, you could do this. So she got me that time. And in that time, I'm going to move from, if it wasn't for that, and if it wasn't for electronic trading, all right, because at this time, for people listening, trading on a computer started to the floor started transitioning on a computer. And it was happening in Europe first, all right? So had it not been for that, I would not have probably been a trader. That pit wasn't going to be, I don't think there would have been a turnaround. But the time that she bought me by sticking to it got me an introduction to a guy who worked at what's called a proprietary firm. And now I'm in the business, right, George? I didn't know what a prop firm was. But what it was and what it is today is truly the venue of professional day traders. Now, you don't have to go and work at one to be successful, but that is the venue of professional day traders. I go out to one. You want me to tell you the story, how it goes with the interview?
Yeah, absolutely.
So I go out to see what one is like. And the guy's a risk manager. It's noon, and he's showing me the office, computer desk, computer station after workstation type of thing. It's noon and nobody's there. And I said, where is everybody? And he says, well, we only trade the European session. They're done by 10:30, 11. And so I thought, well, they start at 1 in the morning? He says, no, they roll in about 6 or 7. I said, so they're here at 6 or 7. They leave at 10:30. Yep. We trade the second half of Europeans business day. He says, but listen, I can't hire you. I'm not the owner. Come back next week and you do an interview. So I never even thought of an interview or a job opportunity. I really didn't. And I'm like, sure, I'll come back. What do I have to lose? So I go home, tell my dad about the job. I said, what do you think? He said, what time did you say that they leave? I go, I don't know, 10:30, 11. He says, get your butt there before 10:30 and look at the cars in the parking lot. If they're nice cars, take the job. They're making money.
And were they nice cars?
They were nice. I got there before 10:30. They were really nice cars. And it was kind of like ingenious, simple advice. And it was the simplicity of everything. But that's not the whole thing. Now you got to get the job, right?
Right. Yeah.
And the interview is all part of the psychology that we talk about. The interview was the back and forth. I think every interview has this. I never had a lot of interviews, but there's probably always one question in every interview that's important that gets you hired or not. He says, I got one last question for you. What makes you think you could do this? And that's what I want your listeners to think about at some point. What makes you think you could do this? What do you constantly work at to find the answer to why you think you could do this? My answer was because I'm putting myself around people doing it. He stands up, puts my resume on the desk, and he says, don't even check his references. You got the job if you want it. He says, but it's not just about putting yourself around people doing it. It's also about putting yourself around people trying to do it. If you're just around people doing it, you might be jealous and discouraged and envious. But if you are around other people that are trying to do it, it's that push and pull. You become immersed in the work. You become immersed in the process. And that was eye-opening to me. He says, you start Monday. That was almost 20 years to the month. April of 2000 is when that interview on my first day started. So it was the psychology, that group dynamic, and that answer that stayed with me through today. Being around people doing it and being around people trying to do it is what got me that job.
That's awesome. That's a fascinating transition to the electronic side. So when you start out, how many people did you start out with in your training? And like, what was the journey of, learning in this environment to the point where you sit down and you become profitable and then find a thing that is no longer random? Like, what took you to that next step of your journey?
Right. So when you're taking trading classes back before when I was trying to be a pit trader, there were classes you were paying for, and the classes were kind of neat because you were in the pit after hours, and they would quote, or the traders were the students and the brokers were the educators, and you would learn some things, and that's fine. Didn't prepare you for the pit. Then you go in the pit, and people aren't really interested in your success, right? So you're not really trading with anybody else, so you don't get that dynamic. Now you go into the office environment, and now it's a group dynamic of small things like desk-to-desk banter. You learn so much by people's one-word, three-word phrase answers, swearing, if it's something they're mad about, something they're happy about. Just that in and of itself was helpful. Then you take on having a really smart guy who is part economic, analyst, part trader, would do a 10-minute briefing every morning, put out a wire. You wouldn't read the whole wire, George, but all of a sudden I'm familiar with what affects the market, what drives the market, whether it's numbers, events, central bank policy. And to the point where when you talk to other people about this, they think you're an economist, but I knew it as a trader. And so I learned that. Then after the trading session, George, you have impromptu meetings. They had lunch that was there every day. Why? Because they wanted people to sit next to each other, eat lunch, and talk about that market. You'd have meetings again, impromptu, once a week, every day, sit around a round table and talk about your runs, meaning you had 3 or 4 winners in a row, talk about it. You had 3 losers in a row, talk about it. And so the randomness fell for me when I had people around me telling me what they were doing that was working, telling me what they were doing that wasn't working. Didn't have that in the pit, right? I understood 2 things above and beyond everything else when I got to the office, prop firm: order flow and intermarket correlations. Wasn't explained that much in the pit, especially the relationships. But I was explaining it and showing it right away in a prop firm. And it was funny, George, because I'm sitting in the pit in my 8 months as trying to be a pit trader. and I'm looking on the other side of the pit, and I see everybody's head looking at the boards up
Right,
in the
yeah.
air. And it never dawned on me that they were watching the S&P 500 trading at the Merc and what that price was doing, because we were trading Dow futures. And obviously the Dow is going to react to the S&P, correct?
Right, yeah.
And it never dawned on me what they were looking at, even though I'd been in the business for 4 or 5 years. But when I get to the prop firm, all the relationships mattered, what was affecting what, that cause and effect. There wasn't always a leader and a lagger, but sometimes there was. News came out, drove us, got us bullish, and everybody's worried about a trend. The trend's not your friend, because by the time you see it, it's over with. How about predicting when the beginning of a trend is? When there's news that comes out that changes what the market was thinking is the beginning of a trend, right? All those things had randomness go straight down. And when randomness falls, fear falls. And the psychology ends up becoming easier. It's like you could read less trading psychology books when you understand how to reduce fear and how to actually know what you're doing. Everything else takes care of itself. Like, you got to learn to manage your risk, no doubt. But if you know what you're doing, risk management's easier. Yeah, you have to learn how to control your emotions. But if you know what you're doing, controlling your emotions are easier. Everything is easier as long as you know what it takes to value price. And everybody listening to this, we're trading price, but what we're actually doing is coming up with an idea on how to value it. When is it cheap? Because then it'll go up. When's it expensive? And it'll go down. And you know what? When I'm wrong, I don't care, because I could get out and I'm supposed to be wrong. But that process, you actually learn a process. And you trade a process, George, instead of the actual money. Because you trade the money, you ain't going to make any of it. But you trade a process, you're comfortable taking losers, more comfortable taking losers, and you're okay with taking profits, even though there were going to be greater profits. You're not as fearful to be wrong, because it's okay. You're supposed to be. And all those things start to help. So I always tell people, you want to really manage and understand psychology, first know how to trade. Because if you don't know what you're doing, all the psychology books in the world aren't going to make you a good trader. You got to know what you're doing first. Does that make sense?
Yeah, absolutely.
Hey, Anthony, I had a quick question for you. You mentioned something that a lot of people might find a little bit controversial, as far as why the trend isn't your friend. A lot of education in this industry will tell you that the trend is your friend. Can you kind of talk about the psychology behind that? Why the trend isn't your friend?
There's a lot more controversial things I could tell you than that, but we'll leave this a family show. The trend is your friend because it rhymes, honestly, and it's like a pattern, and it gets people all into. There are patterns that are good to look for and see, but you have to predict what the pattern's going to look like. The trend is your friend generally when it's too late, because that's when you notice it. That's the problem with the trend is your friend. In order to profit from it, you have to predict that it's going to be a trend and get in earlier, and then have your risk and your outs as far as being wrong in place as well. But for instance, if I put a room full of people that really didn't know much about trading, and I had a price just go up, from 0 to 20, just go up, no trend, just went up. 10 out of 10 of those people in the room would all want to be buyers. Why would they all want to be buyers? Because they see it go up.
Yeah.
But they'd all be late, right? So that's the thing. As humans, we want to do something we already see work. So you got to be patient. And if you're going to be, someone, is the trend maybe over? The trend is only your friend if you're early, but you have to make sure that you're not the one that's buying it from someone who already bought it 2 hours before you, and they're getting out for a profit. You know what I mean? Yeah. You don't want to become their liquidity, because they actually traded a trend predicting it. You're trading a trend after you've seen it. All right. So you got to be disciplined. You got to know how long the trend went on for. And it's not just a pattern thing. Is it a trend behind strong fundamentals? Is it a trend just from a pattern? So there's so much more than just a pattern. And that's why I don't like the trend is your friend, because I think that it's the same kind of friend that would sleep with your wife after you died.
That's not a good friend at all.
That's not a good friend, no.
No.
Not a good friend.
I want people to remember that the trend is not your friend. I think they will now.
Yeah, absolutely. I think that by the time the trend develops, you're looking at that point the highest risk probably, right? Like it should still feel risky when you're getting in, and you should be getting paid as the trend develops. So I really like that discussion, Anthony. That's fascinating. And I wanted to kind of ask you one more question. So transitioning from the floor to the prop firm, would you say that one of the catalysts of success there was the fact that when you kind of go into the pit, it's every man for himself? There isn't that guidance and mentorship, unless obviously you were in a position to get that from somebody you knew before. But as a kid coming in that didn't really have anyone, would you say like that was one of the pitfalls of it, pardon the pun? And then when you go in the prop firm, you go in and you're surrounded by people who are willing to help you because first of all, they get a cut out of it. Second of all, it's the environment that they want to like create and improve.
Right. It is every man for themselves, and they're actually jealous in a pit environment. They don't want to see you make money. There's a ton of jealousy in a trading pit because there's some competition, going for the same order at times. And so you got to be in a real liquid pit for everybody in there to be successful, and they don't care about you, and that's fine, and so you're not going to get that community and that kind of response. You really have to be in a great pit, and a great pit back in the day, because there's none anymore, was a pit that had a lot of outside paper, which is a lot of outside orders that came in. So it didn't seem like a lot of pelican or a lot of pigeons and few breadcrumbs, because there are pits like that, and those are crappy. So you had to have a lot of liquidity come in. And even if you had that, George, you would still have people competing, and they didn't want to see you do better than they did, right? And so if you traded good, they're probably jealous. If you traded bad, you're not going to go to them for help. Prop firm turned that around, and you hit the nail on the head. First of all, they get a cut, but not all the guys get a cut. They're also on splits as you are because they're traders, but they erect and they outline, or structure is a better word, everybody to be given the best chance at making money. And I think that's all anybody who listens to this, and maybe sometimes it's a book you could read, but anytime you put yourself around other people, the one thing you want is, are they giving me a better chance to be successful? And if the answer is yes, then it's always worth it. So they would structure things in a prop firm that gave everybody a better chance. Again, having lunch there wasn't done because he wanted people to be healthy. It was done to keep people around just to talk.
Right.
He didn't care if you went home by noon, but he wanted you to talk first. And even when we had review sessions, we didn't make them long. We understood, and he understood, that these guys just traded for a few hours. They're not going to review for a few hours. They're going to be dead tomorrow. Keep it efficient, right? So the structure was done that was kind of dotting the right I's, crossing the right T's to get guys successful and to keep them and to get them or keep them successful. And that's sometimes, two different things. But night and day, from a pit with kind of group dynamics to help you, and an office environment. Now,
right.
With that being said, there's a lot of guys in an office that aren't going to, you're going to get along with real well, but it's like anything else. You're going to find good personalities that mesh better. And so it was just, it was exactly night and day to really address where your problems were.
Yeah, it sounds like the pit environment's more like an individual sport, whereas at the prop firm, you're more on a team, and you guys are trying to combat the market together. Granted, you're all getting paid different splits, different profit you take home, but it's a common goal. So one of the other things that I find fascinating about the transition from a pit to an electronic environment that you could speak on is the volume. So like, how do you go from a place where you could literally hear the volume, people yelling at you? When it gets loud, there's more activity. When they're more quiet, there's less activity. How do you go to losing that, like, fifth sense, almost sixth sense, if you will? It is one of the five, but it becomes a sixth sense in the pit. How do you go from losing that ability to transitioning to the screen and still keeping some of the dynamic from there?
Fibonacci. No, I'm just joking. The only thing I like about Fibonacci is that he was Italian. I had to get that joke in.
I knew it. There's a quota that we got to meet here for your jokes, so slip them in where you can.
I ain't gonna tell you how many more there are left. The Yeah, so you do lose that, but there is the banter. So it's not the yelling that you might hear, and it's not to the decimal level as a floor, but there is desk to desk banter. Like look at the bonds, watch look at oil. They just come in selling the Bund, things like that. We'd have a guy squawking the S&P pit when that was still open, so you had that noise of what that market was doing, and so it wasn't quiet, and that's why today's environment is too quiet.
Right.
They're even if someone's in a trading room, it's still there's still too much time during the course of each person's day, most of the people that are out there, where it becomes too lonely too quickly. Silence is not golden. You begin to really regress. And when you're going good, there's no one to share it with. When you're going bad, there's no one to share it with, and it really gets worse faster. So I always say to people, George, that there aren't many things in life that are created by yourself, right? We didn't send a man to the moon because one guy had an idea. It was thousands of people working together and something fascinating like that. And I'm not saying trading successfully is like sending a guy to the moon, but for that individual, getting over a hump feels like that. And to do it alone, or to do it because you watch some YouTube videos or read some books, it's probably not going to happen. It's a tough business. Make it easier, not harder. And you do it by putting yourself around quality people. Now you do an internet search and you get a lot of people. You got to sift through the quality people. 80-90% of any industry has people that aren't probably really good at trying to help you, even though they say they are. But that's any business. So it's the job. I had to sift through that. I had to go through educating myself and paying $2,000 back in 1998 money, pay $1,200 for a membership application fee, pay $200 for a jacket, which I could have got for $50, but I wanted to go big because I was going to make $1 million. I still got that $200 jacket, and you spend all this money, and it's like, well, you get nothing for it, and people everybody went through that. I failed first. I think Google has a book, Fail Fast, but you don't have to fail big. I'll add to fail fast, fail small. You know what I mean? Make any kind of barrier bumps instead of having to be big mountains to get over. But to do that alone, you just oftentimes will. Here, I worked on, when I was in the pit, George, I printed out all the time in sales. And I spent all this time trying to figure out when the price came 15 ticks off the high or the low, was at the reversal. And I printed time and sales for like a month. So I had this big stack of paper. And I took my mom to the doctor and because she didn't drive. And I'm waiting in the parking lot and I'm circling, coming up with all these stats. A lot of time and then I tried to execute that strategy, right, in the pit. I was on the wrong path thinking I was on the right path. That's dangerous. And that was because I was doing it myself. Had someone said, "What are you doing?" that knew what they were doing. "What are you doing?" And I told them, they'd say, "Throw those papers in the garbage. You're wasting your time. But try this." You know what I mean? They would have known what I was after, but they would have pointed me to a path that was the way to get after that, right? A moment on a chart to see where they fail highs and they might fail and get cheap and bounce and the lows are in. Not by how I was doing it. So that's what group dynamics do for you, is if you're on the wrong path, they get you off it quicker. And if you're on the right path, they keep you on it. Because there are guys that are on the right path, and what do? They don't know it, so they jump off it. And that sucks. That's dangerous. And that becomes a waste of time and everything else. So you want to have confidence you're on the right path. And you don't want to blame your strategy. Generally, people fail their strategy well before their strategy fails them.
Love that. That's a tweetable right there.
Yeah. And it's because you're caught up in the emotion. And if you don't have a check, which means conversation with people who know what they're doing daily or weekly, you're going to blame your strategy. But it's you're the one failing. You're not even trading the strategy. It's innocent. It's your emotions you're trading. It's the avenge trade. Yeah. I went through it with a guy. I wouldn't have believed it unless I seen it. He was ready to say this strategy. He was saying it. This is terrible. I said, well, show me what you did. He shows me the 3 trades. None of them was the idea he was trying to trade.
Right.
And yet he was blaming it. And then he came to that realization. So, man, there's just a massive amount of psychology that you actually get, not from words on a page, but live interaction.
And I think that's super important because, like, you mentioned when you started on the floor, there was like a randomness to it, right? And I think in today's age, people start online, never being able to be in the environment. Starting out these days doesn't mean you start in like an environment surrounded by traders. You could do it just by yourself at home with like $100 on the micros, right? And I think that gives them a sense of randomness too, and they really don't try anything for long enough to even have any results. Like, whether it's a good result or a bad result, they're not doing anything consistently enough to make any result at all. And I think,
Yes, you're right.
yeah, it's important to be in that environment. So it's awesome that you mentioned that too.
You kick over Legos, and that's what it is. You got to
Yeah.
have some of those pieces put together. Someone will help you so you could kind of make sense out of it. And randomness wasn't at all because, and I know you know this, but for listeners who might not know this, randomness in the pit for me wasn't not knowing what the yelling and screaming was. Randomness was didn't know where price was going to go next. So when
Right.
people come to the screen, randomness is, what is this chart telling me? What is this price ladder telling me? What are these numbers about? You could use randomness to anything you don't know about. It's random when a carpenter is building a deck because I don't know how to build a deck. It's not random to him, but it's random
Right.
to me when an artist is painting. Looks like he's screwing up the painting. So it's like you have to know what. And here's another saying that's helped me help people, and that is, all I try to do, George, is make basic to them what's basic to me. That's
Right.
first and the most important step.
That's amazing. That's another tweetable. We're gonna blow up the Twitter account
Yeah.
after this stuff.
How about the trend is your friend one with the wife? Not that one?
Yeah, that's gonna be the first one that we don't tweet.
Yeah, we'll put that on the explicit friendly channel.
We're
Yeah,
gonna get
exactly.
blocked from Twitter.
That's awesome, man. So that's a really good like explanation so far about your journey, and honestly, I thank you for sharing it openly because some people wouldn't, right? A lot of people are private and closed off about this, but you're trying to make things basic for people like it is to you, and that you're succeeding with it in your journey. Yeah, Mark, go ahead.
All right, Anthony. So I remember stumbling across your YouTube channel and seeing a video that you had done. I think it was a review with regards to a trade where the Fed cut interest rates 50 basis points, and you had kind of recorded it. I think you were trading the Euro stocks at the time. Can you kind of speak on that? And you were recording and reviewing those trades, and I'd like you to speak on that trade in itself, maybe what you learned from that, and the reason why you were recording it.
Yeah, the reason why is that, back then they didn't have Camtasia, right? Something simply to record. So I had an external camera on my desk, short tripod. And what I was trying to do was record my session, go home and listen to it. One thing I remember is that I couldn't go through a whole session. It was not efficient to just listen to your whole session. So I would just try to go through, fast forward to important moments. What I learned, number one, and I'll get to that specific day and what had happened. But number one, what I had learned is how emotional Tony was trading when Anthony was watching him. So I would tell Tony, why aren't you getting out there? Why aren't you getting out? And I could hear Tony swearing and using bad language and thinking, he isn't seeing what I'm seeing. Now, I was still trading decent and I was making money, but I was missing certain things because I'm yelling or I'm mad or whatever. So what I learned is how too emotional. It was all right to be emotional, but I was too emotional. So that was number one. And then kind of what you miss and how easily distracted you are when money is on the line, right? And it has to be the opposite. So in that particular session, the guy squawks out. And remember this progression. Like when I started there, I told you we'd get a morning wire. The guy would do a briefing. We were ready for knowing what to do when something happened. So when the guy squawked out, Fed cuts 50 basis points. Number one, we knew it was a surprise. And number two, we knew that was to buy stocks. I was trading Euro stocks, which is stock index in Europe. I knew right away what to do. And I bought 16 Euro stocks, which is big size because that market was really thin back then. But I knew right away what to do. I didn't have to think about it. I would have bought more, but the guy next to me says, our Fed? And that distracted me and made me think, well, right, maybe it isn't. And I got mad because I might have bought 32 or 48. And so, but the point is that you could easily get distracted when you either let yourself get distracted or you don't realize how easy it is to get distracted sometimes. So I did really well on that trade. But if I had to wait, stop, and think like that guy did, I would have missed it. It was a diligent reaction. And that's what I learned that was a skill of mine, and what needs to be a skill of everybody else that is doing this and trying to do this, is to be someone who could not have to think about where the brake pedal is when the guy in front of him stops. He has to be aware enough that he just checked his mirrors and no one's in his blind spot. Scoot over to the right. You don't even have to stop. Big difference between that guy and a guy who has to slam on his brakes and everybody gets jolted forward. Same thing when he didn't make any money next to me because he didn't know how to react. I did. Another thing in that video is the professionalism. If you listen to the background, some of the technology froze. Remember, this is 2001. And
Yeah,
I didn't panic.
I was watching that. Yeah.
My orders were getting filled, didn't know it because my size stayed the same. As far as I was plus 16, and I knew I should have been getting filled. And one guy walks in, other guys were getting locked up, but we weren't. Our hair wasn't on fire. One of the guys says, "What do you need?" I'm long 100. He said, "I sold you 100," and it was just calm. Everybody knew what to do. And the guy next to me says, "Hey, you're getting your fills," and then I traded out of the rest. So you can't let your hair get on fire, but that has everything to do with the fact that you have a skill. So it should never be about the problem, only about the solution. And one of the things that trading has taught me for doing it so long is when I get hit with a problem, no matter what it is, my mind is quickly looking for a solution. I'm not panicking to the problem. I'm looking for a solution. And I'm not, sometimes my wife will get mad because she thinks I'm diminishing the problem. I'm not. I'm just trying to figure out what we can do here. And so trading has, I think any trader who's lasted has that quality, has that skill where it's not about the problem, it's about the solution. All right, your front end froze. Now what? You should have a plan B, C, and D, even now in this electronic environment. So, I mean, that was a big learning kind of exercise that could come from that video. But knowing how to react, knowing what it meant, not having to think it through, even today when they do it, being able to jump on certain tape bombs, we call them, and I still call them today, things that hit the wires that the market was not expecting or different than the market was expecting. But you have to know all that stuff. And when I say what's basic to me needs to be basic to you, it's because the basic, especially in trading, and you guys know this, but the basic is missing. Everybody skips to what they think is the most important stuff, whatever that is. And it's probably because they're inundated with all this information online. It's not their fault. But the reason why the basic stuff is also the advanced stuff in this industry is because everybody skips it. And so that video, if you go back and listen to that video, there's a lot of stuff that might seem advanced, but it was all taught through just understanding what was happening and why on a very basic level.
Well, we're going to actually add the link to that video in the show notes so people can watch it on YouTube and just get a sense for it. Because I think it's fascinating. Number one, I think it's fascinating because you're literally recording a screen with a camera. Like, just experience a moment of technology from the past. But then also like the reaction to it and how you handle those situations. So we're going to add that link to your YouTube channel in our show notes. And I think that's actually pretty awesome. I love to actually watch that myself too. And then on last Tuesday when the Fed announcement passed, they're like, they cut 50 basis points. And then as a joke here in the room, we're like, our Fed?
Yeah.
We're just laughing. Mark's like, text Anthony. Ask him
I
if
was
it's
like,
our
we'll
Fed.
text Traeger if that was our Fed. Yeah,
that was even more baked in. That was less of a surprise last week than it was in 2001. Nobody knew that was coming, so it even had a bigger effect into the market. But so, yeah, it's just knowing. There's another phrase I started using: anticipate before you participate. So you got to anticipate a lot of stuff, and so you're not surprised when it comes out, whether it was that Fed cut a couple weeks ago, or if it's like what's going to turn this market around now. And I know when people listen to this video, it could be 6 months from now, but when markets are real volatile and they're being driven by some sort of event, what's going to change that? What's going to make it turn? What's going to make it even more bearish? And not ask so many whys. You need to know why, but you can't be asking, why did this happen? Why did that happen? Why did this happen? It means you're missing a lot. You got to minimize the whys that you ask during the session. You should know and react to the why, and that's about being prepared, which is anticipating what could happen next.
Right.
Yeah, that's a great point you bring up, and I think that's something that a lot of newer traders kind of ask us. They're, whenever a report comes out, they're like, "Oh, how did you know it was gonna go this way or that way?" And you don't, right? It's just like you said, you have the skill set and you react to it, and then you figure out the why afterwards. Whereas a lot of newer traders, they typically tend to look for that why. Why is the market moving? Why is this happening? And by the time they actually find the reason, that trade's gone.
It's gone.
Yeah, the why is the ego, right?
It's a lot. It's like just have an idea and then know. A lot of times people don't like to either have an idea or trade an idea because they're more worried about being wrong. And you're supposed to be wrong. Just know where you're wrong at. So when I did a presentation in the morning and then I had one later in the afternoon not too long ago. And in the morning session, we were down a ton. And it was a lock limit down in the stocks, in the S&Ps, right? And so the bond market, which was at that moment opposite, stocks would go down, bonds would go up. Well, the stocks are on lock limit, and the bond market come off their highs. They weakened up, which means, and I told the group, I said, by our afternoon session, the stocks are going to come off and they're going to have a substantial rally. And there is when the trend is your friend. The prediction of the probability that a trend is going to start. And sure enough, at the 1 o'clock session, we had rallied 100 handles. Now, that doesn't mean life is good. You would have bought it there and sold it there, but you knew why strength came in. And it was based on a correlation, and it was based on a probability, and it was based on here's where I'd be wrong. And it wasn't based on a guess, and it wasn't based on emotion. It was based on real factors that move price. And so it's like the right saw to use for a carpenter cutting certain wood. It's not random anymore. And if you're afraid to be wrong, then you'll never trade. You'll get out of winners quick. You hold on to losers, and everything will kind of snowball in the wrong direction. You got to be confident. And so when we came back to the afternoon session, guys, I didn't bring it up. Guys said, man, you were dead right about that. I said, no, I wasn't right about it. I just had an idea that the probabilities filled out. I said, I'm not, look at me, take a victory lap, because to me, most of the education I like giving is when I'm wrong. That's where most people are going to get really the meat of people's successes. And that's from, hey, he's okay with being wrong because he wasn't wrong for long, and this is where he was wrong, but the idea was good, and he was supposed to take that trade. So don't avoid being wrong. You got to embrace it, and that's important. Hey, there's a quote that I heard. I got to tell you guys because it fits into this, and it's a guy, Maxwell, and he says, the wise person is someone who learns from their mistakes, and we know that. The wiser person is someone that learns from other people's mistakes, and we've heard that. But the wisest person is one who learns from other people's successes. And so think about that. You put yourself around people who are successful, you learn from how and why. And to me, the successful people that I've been around early and then through all my successes have all been understanding the basic.
Hey, you're heating up with these quotes here. The wife one started out a little weak, but now it's picking up. I like it.
Yeah, no problem. I got more.
Yeah, that's fascinating. Good stuff.
Awesome. Anthony, I really like what you said there about not being proud about being right. It's just being, focusing on the probabilities, focusing on the facts, and just taking it based on what it is. So I kind of wanted to, transition this talk over to your time outside of the prop firm, right? So it seems like your time at the prop firm kind of got you established in the industry. It's kind of where you found your footing, where you started finding success, and you built up a lot of the right habits in order to get that success. And so I'm kind of curious, how you left the prop firm, and what was kind of the decision behind going independent, making the move to becoming an independent trader, and maybe what was going through your mind at that time, and how you're going through that transition.
Well, a couple other people left before me, so I didn't want to do it because you have that superstition. Well, if I leave and I'm not around these walls and that person and this, all that kind of stuff comes into play. But about 3 guys had left before me, and they moved out to California. they were going to hire guys and train them. The only problem they had was the work ethic isn't so strong out west, and people want to surf instead of wake up and learn something. So they were successful still, but they couldn't hire guys and get successful. But all I cared about is that they were still able to be as successful, if not more, outside the prop firm, and they had left. So that gave me the encouragement and the confidence really to say, wait a second, when I make $1, why not keep $1? And I think I've got what I needed from this group, and I could recreate a community. So I left in the beginning of 2007, and it was the best decision professionally I made, because 2007 was the beginning of the financial crisis, and markets were busy for a strong 2-year period. Now I'm keeping everything I make instead of having to give 25% up at that point to a firm. And I was able to replace what was important, like news that was coming across the wire. Or I was in an office with other traders. They were all trading their own account and everything else, but I had that banter, and I had that ability to connect, right, and talk with people that were actual traders. I often say, when you're a trader, George, you know this, Mark, you know this, you can't talk to plumbers about trading. You could talk to plumbers, they could talk to you about plumbing. We know a thing or two about it, but we can't talk to them and expect input about, hey, we missed this trade, and I wanted to get long because the bonds were weak, and they look at you like you had 3 eyes. So you have to be around people that do it, and I was able to replicate that. But the fact that I was able to keep $1 when I made $1 made the transition much more fruitful. It wasn't easy, but it was easier when I seen other guys do it. That's what flipped the switch for me. And then I quickly went into making money right away, so that confirmed that I was on the right path. Then another funny thing happened. I was on the train. Everything kind of happens sometimes coincidentally, and it just happens. But I had an office that was on a train line that came out of Chicago. And there was a guy that I knew that I took classes with back in the late 90s who would have people pay him to spend a few days, walk around the Chicago Board of Trade when the floors were still active, okay? And he said to me, he knew that I was trading. He says, can I send these guys out on the train and spend like a few hours with you and tell them what you do and everything else like that? I said, sure. I said, but tell them they're not going to be multimillionaires because they spent 3 hours with me. Don't have that expectation. Make sure they understand that. And he says, no, of course not. They just, want to get a sense of who's doing what. So they would come on the train line, get off, walk to my office. And it was enjoyable for them and for me. I mean, I learned by teaching them, even though they knew nothing. There were things that I learned by teaching. And so I kind of backed into the value of helping people in a genuine, it's got to always be a genuine way, but genuinely helping people kind of dot the I's and cross the T's as to what they didn't know. And I was shocked at how little people knew and how much money they were risking with how little they knew. Because, at that point in 2009, 2010, it was becoming, pretty easy to open up a trading account and trade futures, And so it was, that was the transition or how I got introduced to education, and then building a community of people who I think have, close to 0% chance of making it in this business if they think they're just going to read books and watch YouTube videos. Or do it by themselves. That's when I realized there has to be, some semblance of a community around it. But yeah, my transition first from the prop firm to being on my own, I never was, quote, on my own, because I always surrounded myself with other people.
Yeah, I think that's such an important point that you bring out. The fact that you might have left the prop firm, but you stayed within a community of traders. Right? And I think that's, kind of echoing your points from earlier on in the episode with regards to how important it is to be part of a community and to always be constantly adapting and learning from other people, things that you might not be applying to your approach, and maybe, picking off one or two things from each of these traders and kind of really refining your edge. So I'm really happy to hear that you kind of brought that point up. I did have another question for you, though. When you made that transition from the prop firm to doing it independently, you kind of mentioned that you had success early on when you made the transition. Were there any points after the transition that you kind of experienced any challenges, especially any challenges that kind of played with your mind, and how you overcame those?
The challenges after I left the firm going on my own?
Yeah. So any time that after you had left the firm and you started trading on your own independently, you had mentioned that you found some success, but I was curious if there was any challenges or any specific things that you might have ran across that, kind of played with your
Yes,
mindset.
yes.
And,
There
yeah.
was
Awesome.
accountability.
And if you don't, yeah. Okay.
Accountability. Not that I always was consistent. Accountability of not that I would work less hard, but I didn't have the, I guess, opportunity or the push to work harder. Like everybody needs to make sure that if they're just working, um, and working like not just 8 hours, but their work ethic sideways, it might as well be going down. It's going to drift. So that was a challenge, and I needed more of a drive because I truly then became my own boss. Even though at a prop firm it doesn't seem like you have a boss, but you do. You have other people, and you see a lot more other people that might be working harder, and maybe it was a little bit more of a competition, which in a sense is good to help drive you. And so there would be times that I wouldn't feel like I was working as hard as I should, right? And that was a challenge that at least I recognized it, so I didn't drift. The worst thing that could happen is to put it in a neutral and get to settle for, you're making money every day. Well, why don't you trade bigger? Well, why, slowly increase your size. You've got to push yourself as you've got your skills working for you. And so I had to catch that, or else that would have slipped. And I'm not one to take days off or things like that. So that didn't happen. But maybe you leave a little earlier than you would have, or not went to that meeting that you could have. So those things you got to watch out for when you're by yourself or isolate yourself sometimes.
Yeah, I really like that you said the accountability part, and especially the fact that you always want to challenge yourself to grow, and not to find yourself getting complacent. Because I think we had an episode a couple of weeks back where we said when a trader thinks that they know everything, that's kind of the start of their demise, right? They're not consistently pushing themselves towards progressing, towards a higher goal, and that's kind of where the demise comes in. So I'm happy you mentioned that. I think Georgie's got a question for you.
Yeah, I just wanted to ask you, Anthony. So how do you go from being at home, independent trading, and you have a bit of a challenge? Let's say you have some of those days that are challenging, and we know that you could bounce back with it, because I think if there's one thing I know about you, you got a lot of discipline, so you're able to bounce back. You control your losses. I think that's instilled into you through the training you've received at the prop firm. But what about like pushing yourself to succeed? So how would you deal with that? So let's say you're home, you're trading a certain size, and like you mentioned, you don't want to be neutral. What are some strategies or tips that you could give some of the listeners how to push themselves to that next step? Because I think one interesting thing is that you mentioned about the plumber, right? Like a plumber could tell you about plumbing, but we can't really tell them about our business. I find that when we tell people that we trade, we always hear the negative thing first. How risky, like how are you going to build a career of that? What a terrible job. That would be equivalent to a plumber coming to your house saying, I'm going to change the piping in your bathroom. Like, what if they explode? What if I die? I'm going to drown. Because it's like we deal with so much doubt in our circle. Like when you're independent and by yourself, how do you motivate yourself to hit the next level and break through any plateaus?
Well, because I put myself around other people, or they go through filters almost that I set up, so I get past their doubt. But for instance, like, because you're exactly right, and that's where when someone doubts what you do, then they're going to look for reasons why they can't do it. Blaming someone, well, if I can't do it, it's impossible. That'll be where the path of least resistance of their thought. But with the education that I built is I put up filters of, I don't get a lot of people that are really super negative, even though sometimes they come around. There's generally, the drive I have is the drive of them succeeding. And every time, and it happens, that someone says, they can't do it. They couldn't, they tried this, they tried that. A little piece of me goes away because I want to see everybody succeed, but that's not realistic. And then when people come unsolicited, say that how great they're doing, they give me credit or not, just how great they're doing, going through my education. That's where all the pride and the energy kind of comes from, because maybe I was a part of that, and maybe they even told me that, especially when it's unsolicited. When you don't ask someone how they're doing, they're telling you, they're not fluffing it up. And so when you ask me, how do I stay from being in neutral, it's seeing all the effort being put in by the people I've surrounded myself with. Like, I take from a guy I heard said that I don't try to motivate anyone. The only person I try to motivate is me. I try to make sure I have a trading room. Every morning at 8 Central, people know where I'm at. I don't miss. If I miss, someone else takes the room for that day or two. If I go on vacation, someone spells. I don't miss. Every morning at 8 o'clock, you know where I'm at. Every Tuesday at 11 o'clock for our inner circle, we have weekly meetings. You know where I'm at, and I don't miss those. If you want to motivate someone, motivate yourself first, right? Put yourself at a very high level. And if people see that around you, you've already motivated them. And if that doesn't motivate them, well, then you're not going to motivate them any other way anyway. So it's just like where you're at in your life. What are your expectations? What are your goals? And are you doing things to continuing to hit that goal and beyond, right? And you can't just hit a goal, stop. And I'm not a write your goals down kind of guy, but I want to be always thinking about where I want to be. It's like, this guy said it, Jim Valvano, another quote you could tweet. He said, if where you are is where you want to be, that's as far as you go. So I always think of that quote. He was a college basketball. He died 25 years ago. And he said that in the middle 80s. He was a motivational speaker. He also said, I don't motivate anybody. I motivate myself. And I keep myself at a high level. And if I'm at that level, maybe other people will come. He says, but if where you are is where you want to be, that's as far as you go. So I always think where I want to go, where do I want to go? And am I at least on the way to doing that? And that cannot be your P&L or your size, because you'll get really frustrated. It has to be just, success is, are you doing what you say you're going to do? It starts with, okay, you have a service that starts at 8. Are you there every single day? The little things. If you're going to work out 4 days a week, did you work out one day and eat chocolate cake 4 days the other day? I mean, it's like, I often think that it's not that people don't do what they say they're going to do. That wouldn't be a problem. It's that they do the opposite, right? If you're going to work out, they don't work out and they eat chocolate cake. So it's like double. Be fine if they did one. So it's like, that's where I get my drive, is through other people and their successes. And a mission statement I have is, hey, I can't promise people are going to make millions of dollars because they learn from me, but I could give them their best chance at it. That's all. As long as you give people a better chance than they otherwise would have had, you're valuable to them. And if you're valuable to other people, man, that's a drive. You got to have, that's purpose, right? You're important to other people. And that's the other thing I say with what I do. Important people are important because they're available. So when George asked me to do this, I said, hell yeah, I'll do this. Because again, I think that there's very few people that really don't have a lot of time. Most everybody else says, oh, they don't have time and I'm doing this. And then they watch 4 hours of YouTube videos with potato chip crumbs on their stomach. Everybody has time to be purposeful or important enough to other people. So I hope that answered your question, but that's how I, keep a drive that doesn't have to be trading bigger necessarily. It's always just making sure that you're up at a high level.
Yeah, that's awesome. Thanks so much for that answer, Anthony. And I just kind of wanted to transition this into the last bit of this interview here, and that's kind of your experience educating while trading. So you've kind of spoken it on the topic already, how being the leader of a community and teaching others is what's giving you a sense of purpose. And I'm kind of curious to understand how your trading in itself has kind of changed now that you've taken kind of more of a role as an educator. And also kind of curious to hear, based on your experience with teaching traders, how can they best prepare themselves for the mental toughness that's really required to succeed in these markets?
Well, the first answer is smaller. So some people might be able to do what I do and trade, the size that I used to trade, but I don't have an S on my chest, right? I'm not going to do everything great. So if I trade 20 or 50 lots in the S&P, which is really big size, I ain't going to have time to answer an email about the difference between a bid and an offer. Or I'm not going to want to talk to someone that might have an elementary question. Now, I don't get questions that elementary, but you know the point. If someone's trading 50 contracts or 100 contracts, that's where their alliances are, and that's where their alliances should be. So I have skin in the game and I trade, but I keep my size lower so I don't have days where people are expecting me to help them and I can't. And I often tell people, if you want the right help, it's going to be hard to get it from the guy that's swinging along big size because he has no time and energy for you, and he really shouldn't, right? Yeah. And so you got to catch people at the right time in their life where they're dedicated to their own business, but also the business of trying to help you. That's being genuine. If people think that the better educators are the bigger traders, it's opposite, right? And so you gotta make sure that you're keeping yourself dialed in and having a compass that isn't going to go and have huge swings. And the other thing is, I could also put myself in a position to do better when markets are moving. Like in this environment, markets are moving. I'm supposed to do better, and I generally do. Or put myself in a position, if I want to trade bigger, do it when there's a news event that I might be able to catch and things like that. And so I've adjusted that way, size-wise, in order to still be able to be mindful of other people. They expect me to be objective. And I, right? And if you got 50 on, you might be right, but you might not be objective either, especially if you're not trading well. So you got to be, that's all people expect you to be, is objective. And so that's my whole thing with them. To your other point about, what was your other question, by the way?
The other question was on.
It was a good
you
one.
did good on that one. The other question was on how can new traders best prepare themselves for the mental toughness that's required to succeed in the market.
Yeah. Listen, I'm not the smartest guy in the world, but I'm smart enough to know that. That's my saying, by the way. So that's why I couldn't remember two questions in one.
Another quotable.
And by the way, I did a seminar over the weekend, and I felt like I was the president in a press conference, and people were yelling me, and I'd call them out. And I thought that was made me feel important for about 5 seconds.
Celebrity that you are.
Yeah, it was a 7-second good feeling. But anyway, how do you get people with that struggle? Well, first of all, they have to be around other people. They have to have the expectation there's going to be a challenge. They come in thinking this is going to be, something they could do with their feet. They could trade with their feet clicking the mouse. And a lot of people come in with the wrong expectations. So you got to set their expectations. If you got a trade call service, then they need to know that. If you don't, which I don't, they need to know that. And I tell people, there might be rooms like that, but why join them? Just give the guy your money and hit the snooze when the alarm clock goes off, and meet with him once a quarter and see how you do with your money. You want the fish or the fishing pole? And they have to have an expectation that if I hand you the fishing pole, there's a little bit of learning, but understanding that comes with it. Because the skill that I have to help people is not that I've done this for 20 years and not that I could articulate pretty well, but that I could do both, right? There are guys that articulate really well. They can't trade their way out of a paper bag. And then there are guys that make $1 million a month, and you think if you talk to them that they were a plumber because they can't explain why they do what they do, right? So you got to have both. You get the overlap is where there's value to actually understand what this guy's talking about. The mental challenges have to be expected. There has to be an expectation for them, so you're not surprised. I didn't think it was this hard. Sometimes it's easy, sometimes it's hard. But a lot of times you always make it easier. And it's always better to be around other people who tell you you suck because they want you to get better. Not because they hate you or they're jealous. They tell you you suck because they want you to get better. And when you have that relationship with one guy, 3 guys, or a group, now all of a sudden the mental challenges become bumps instead of these big giant walls or barriers that most people find themselves in. And in the end of any session or any month or any life, we're all going to be dust someday. So the things we worry about are really small in comparison to, you know what? You lost $2,000 today. That sucks. Well, when you die, you're going to leave your kids $2,000 less. Big deal. and that just tries to give people diminish the everything's a big deal. Yeah, there's a mental challenge, but you got people to help you through it. And maybe it's not as big of a challenge as you think, but you have to have an expectation to work through it, and not try to work through it alone. Because all you're trying to do is be a master at the simple, master at the basic. Sellers come in, it can't go up, maybe I want to sell it. The Fed comes in with some nifty QE tomorrow, and they weren't even supposed to do anything till maybe Wednesday, and we rally 300 handles, right? Because it was not only a surprise, but it was kind of cool. Not when I say cool, kind of ingenious, or hey, this will work. The markets need that. So it's like, anticipate that. Get over things that sometimes your mental challenges could be solved with one good trade. You know what I mean?
Love
with
it.
one good trade.
It's absolutely true. I find that one of the things of doing the room and the education and then also trading for yourself that I thought that I would run into would be the hardest for me was having a really big down day, or not a down day, but like even a bad stretch. Like, look, I have down days. It happens, you know? And it's like when I have a bad down day, how do I keep it positive enough to still run the room? What I actually found is those days end up being the most educational for everyone, which lifts me up. And then there's days where I'd be down and the community is up on average 60% in our trade room. And I look at that, I'm like, wow, this is great. You know, the optimism, just seeing people propel forward kind of lifted me off the low. So I actually, you know, I traded much bigger and did much better before starting Trade Pro Academy. But in all honesty, I'm much happier nowadays, much more fulfilled because I have people to trade with. And to me, that's worth a lot more than any money. And so that community aspect.
And you're right about losing teaches more than you're winning. So anybody part of a room where a guy feels, and it's an insecurity thing, that it's just winners he talks about. He's like, doesn't the guys have losers? It's because he's insecure about having them. I would tend to tell people more about losers because that's where you're going to do more learning. Because it's real. It's real. And being wrong is good, but being wrong not too long is where all the money is. I'll tell you. You want me to tell you a story that makes me it makes me laugh. Maybe it'll make you laugh. My wife.
Go for it.
Yeah, my wife drives. She's not around. That's why I'm gonna tell this joke. She drives, and even with GPS, I mean, the hood ornament could have a finger pointing her what direction to go, and she'd still get lost. And so I'm driving one time, and she's in the passenger seat, and I make a wrong turn, and a block later I make a U-turn, and she goes, "Oh, you make a wrong turn too?" I says, "Yeah, but when I do it, I'm not wrong for long. If you did it, we wouldn't have known it until we ran into the lake." And she called me a 2-syllable word that started with ASS, and we laughed and we went on. But that's trading, not
hilarious.
being wrong for long. That's what's key. You like that one?
Yeah, that absolutely. That's great, man. That's you know, it's an interesting business, right? It's everything we've been taught about in life tends to make us a worse trader. It's a lot of unlearning these habits as we start. So I think it's a fascinating journey, and I love that, you know, you're putting out yourself as much as you are trying to trade for yourself as well. Because I know you still trade size to some new traders. You know, they would look at that and say, well, I can't believe it doesn't call that size. But to be able to balance these two things, you know, I know we've had chats about this, right? It's like, you know, whenever you need to do the biggest trades that could make you the most money, that's when your community needs you the most too, right? And I've experienced that even just lately, even today, you know, the market was moving a lot. And I'm out there like chasing a big trade. I'm trying to make bank. Then I look at the questions box. There's 27 of them. So it's like there's a constant sort of, you know, balance that we got to play. And to me, it's fascinating. It was harder to adjust to it than I thought. But once I did, you know, it actually makes my trading a lot easier.
And
Accountability factor, the
yes.
community. So
It's another skill that you learn, and it becomes easier
Right.
for you to do as you do it. And you use the right word, balance. You know, I felt bad. I had to do this expo, and then you know what hit the fan Sunday night into Monday, and I wasn't going to be there for my guys, but I had the right guy filling in, so I didn't feel that bad. And I was out there actually for them long term, and they knew that. But that's when you know that you care about the people that are investing in you, and you're investing in them. When you feel bad if you're not around. That's why I don't miss. I don't miss unless
Right.
it's a scheduled vacation or something like that. And I know you're the same because they know where to find us every Monday, Tuesday, Wednesday.
We're there every day.
Every day. We're there every day. And you think that sometimes I guy told me that. He goes, man, you're here every day. And I go, well, isn't everybody that has a room? He goes, are you kidding? You'd be surprised. The guys will come in an hour late, a half hour, cancel last minute, 4 days a week, 3 days a week. And you know what, George? That's people being people. 80% of people who do what they do it poorly.
For sure. And I think it's because they don't have the right motives, right? People started this business with the expectation, like you did and I did. Like, I'd be crazy to say that I started for any other reason than the money of it. But what I've discovered is when I got to the point where I was making money, it's so much more of a fulfilling journey than just the money part of it. Like, the money part now almost feels like a secondary thing. It makes you such a different human being to be a successful trader that it's actually wild. So you were saying, Anthony, that you're there every single day. So I'd love to ask you, where is that you are? Where can people find you? And what do you do with Edge Trading Group?
EdgeTradingGroup.com, and it's got two different, and I always give people the opportunity to learn about me inexpensively. And then there's a one-time fuller educational, like comprehensive education, everything you need to know about trading. And those products you'll find online at EdgeTradingGroup.com. The trading room is daily, but YouTube, search Edge Trading Group on YouTube, and every day, 5 days a week, there's a 5 or 6 minute video of the highlight of the room. And it's what I was talking about in real time to the group. So people will get a real good sense of what goes on in the room. And there's hundreds of videos of those 5 or 6 minute clips. So when people say they want to take a trial to the room, this is better than it. This is a trial on steroids, because you could kind of learn a lot of different things that he's talking about in real time when it happened real time. And so that's a service that they can go online and kind of leg into a relationship. And I think everybody, when they invest in something, if you could leg into it, even better. And that's the thing. And then the other service I have, which I think is really unique, is I introduce those people to other people who invest in it. And we have a different room, and we call it a team room, where they actually talk and listen to each other, not just typing. And in that room, people are like in a virtual office, desk-to-desk banter. Generally, they're all day. Those guys are lifelong friends. They vacation together, and they've become, their families know each other. And that's one of the things I'm most proud of, is the community built from people talking to each other every day, right? And so that's on an elite level. But I don't get into saying, give me this money right now, I'm great, I'll be this. It's just check out the YouTube video. And if you kind of like what you see there, and people will, join the room for a month. You like it, you go from there. So just leg in to what you're trying to do. I don't have a huge Twitter presence, but I do have a lot of tweets that are out there. That's Edge Trading GRO1, at Edge Trading GRO1, because at Trading Group.
We'll put that in the show notes for everyone as well. We'll put all the
we'll put
links to your social.
We'll put all the relevant links to the website and to the YouTube in the show.
Yeah. So if you knew nothing about me, you go to YouTube, search Edge Trading Group, start watching some videos, and you'll get up to speed in a hurry.
I got to give you a big endorsement for your trading room too, because a lot of people might not know this, but I started with the order flow stuff through your Edge Trading. Well, at the time you were at a different place, but I met you on Periscope. You remember that?
I do.
I was like, this guy's just so obscene. I got to say something to him. And then I joined your trading room, and at the time my journey was I had found the footprint. All right, but I couldn't find anyone to help me make sense of it. Like, I understood what was going on, but there's a difference between watching a YouTube video and then going to actually do it, right? The surgical skill. And you're the one that sort of put it into context for me. So, I'm, first of all, eternally grateful for that. Second of all, I experienced your trading room, and I got to give you big kudos and big shout-outs, man. It's a great room. You guys have a great group of people. Yeah, so I tell the listeners to go check you out as well on the trading group. Do we have a minute to talk about this verbal journal? Because I think it's important, very quickly.
Yeah, verbal journal is I don't like to make software, but this was something I had an idea for 10, 12 years back in a prop firm. I said, hey guys, wouldn't it be nice if on your chart you clicked and a box came up, you recorded a note, titled it, closed it, and a dot came up the color you made it? And the chants were, of course, yeah. And a lot of swear words were like, blank this, blank that. They love it.
Yeah.
So it took a long time before you take an idea and implement it. And so on a couple pieces of software, Sierra and Ninja right now, it's called Verbal Journal, verbaljournaltrading.com. Go to it, and it does just that. If you got one of those two platforms, you have to be able to document your thoughts and your ideas. It's hard to write them down and have all these notebooks, and then you have all that writing and those ideas, and they're not relevant. You can't put them on a chart. So you just click, talk, close, and your idea's there. If you got bullish ideas, bearish ideas, you could color code them accordingly. If you're mad, or you do a morning briefing, you have to have a minute where you just talk about what you read and what you think and what you know. A lot of people are like, I'm always right in the morning, but I can't trade it. Well, the Verbal Journal allows you to now put a blue dot every time you're bullish, and then you see the market rallied, and you see all these blue dots on strong days. That gives you the confidence, and then you could listen to why you were bullish. You could listen to why you missed a trade. Because missed trades, George, is where people have found the most value in this tool. The missed trades, think about if you caught half the trades you missed, how different your statement and your money would be. Because most trades we miss are out of fear, and most of them are winners. Sure, we miss some losers, and that's what causes us to miss the winners. You miss a couple trades, they were losers. Oh, good thing I didn't take that. But yet you were supposed to. So that actually gives you the confidence to be fearful for the next trade that was an automatic winner. And so missed trades, you document those. Go to verbaljournaltrading.com. And I think what I'll do for your group is, if they put in, and you can put this on the show notes, but TPA 50, I'll give it to them for 50 less. Does that sound good for your listeners?
Yeah, that's fantastic. No, I thank you for that, because it's a great product. It puts an element to your trading that's usually missing, because how valuable would it be to be able to hear your analysis? You know, when you write something on a piece of paper, later on you could say, oh, I was thinking different. But when you put it in your voice, you can hear the tone, the speed. You can hear if you're nervous, your heart beating fast. You can really pick up a lot more information than just a piece of paper where it's just ink on a page, right? So I'm a big believer of it, and I thank you for offering that discount to our team. So again, guys, it's TPA 50 for $50 off, and it's Verbal Journal. We'll put all that in the show notes. But Draeger, it's been a blast, brother. I'm really thankful you took the time out of your schedule to come on the podcast. I know people are gonna love it. I had a great time, and yeah, man, it's been awesome, Marky.
Yeah, just echoing George's comments. Really happy. It's always a good time chatting with you, especially when you come down to Toronto. Hopefully, we'll make a trip down to Chicago soon. But really appreciate you coming on and chatting with us here.
It's my pleasure, guys. In fact, I got tears in my eyes with George's gratitude remarks. I got sniffles a little bit, and I'm going to have to go and wipe up because that was such heartfelt. And I'm just joking.
You should probably go to and get a test at the local local hospital, given the times.
I appreciate it, guys. Anytime. Good luck with this. And people that listen to it, however podcasts spread, like if they share it and everything, they got to do it, because this is never, ever feel like in trading, oh, I got good stuff, I want to keep it to myself. The good stuff is the stuff that the edge is in sharing it, and someone comes back with some, and that's how you build that relationship, sharing good stuff. And that's what you guys are doing in these podcasts. So best of luck with this thing. It's awesome.
Awesome. Thank you, Draeger. Nice chat. Thanks for being on here again. I'm sure we'll have you on at some point.
My pleasure, guys. Anytime.
Thanks for listening to the Mind Over Market podcast. You can find us at tradeproacademy.com. You're listening to Mind Over Markets, a podcast on trading psychology to help you build a bulletproof mindset. Here's your hosts, George Papazov and Mark Borscht.
Hello, trade pros, and welcome back to another episode of the Mind Over Markets podcast. You're here with hosts myself, Mark Borscht,
and George Papazov,
and we're excited to bring you episode 20 of our podcast. In today's episode, we're going to be talking about breaking down the emotional cycle of traders. And this is something that's really important to understand in order to deal with the challenges that you're going to face when you're going to be trading in the markets. And so we've got an episode. Before you take a look at this one, if you haven't heard, we had a great interview with our good friend Anthony Draeger. He's a veteran futures trader, and that is episode number 19. So if you haven't had a chance to yet, make sure to go check that one out, and then we'll come back to this episode. So what are you going to learn from today? You're going to walk away with a deeper understanding of the emotional cycles that traders experience so that you can easily identify where you are in those cycles at any given point in time and implement a means of managing those emotions. So before we're going to jump into this topic, let's hear a quick message from the sponsor of this podcast, Trade Pro Academy.
Awesome. Thank you, Marky. So you've probably noticed there's a lot of volatility in the markets. Anytime you check the quotes, you go online, you notice there's stocks making massive moves down and up. So this volatility is actually super opportunistic for day traders. It doesn't really matter where the market is going. It doesn't have to go up for you to make money. Up or down, there's a profit opportunity for the educated day trader who trades in a community and surrounds themselves with the right team. Join our team. Our traders in our community have been profitable, on average, 60% of them with live capital, regardless of market condition. That means there's opportunity to the downside and up. Take advantage of this cycle that we're about to talk about and join a community where you're going to learn and earn together. And before we jump into the episode, I want to mention this. This is episode number 20, Mark. I think it deserves a little celebration for us. We made it to 20.
I think so. It's unfortunate that we can't record this in the studio together, but it's a milestone nonetheless.
This is definitely, I think this is the first quarantine self-isolation episode that we've done, right? We're both in different locations.
Yeah.
And
So-
it's sad. I miss seeing you in front of me, but hey, we'll have to do it with this.
Yeah, man. I mean, we can technically still see each other, but it's not the same as in real person.
Yeah, it's not, the energy isn't there, you know?
I hear you, man. All right, guys. So let's get into this episode. Speaking on the topic of cycles. All right. Markets have a defined and specific set of cycles because at the end of the day, traders are emotional beings. All right. It's no surprise. Fear and greed drive markets. So not only do we have to learn how to control our own emotions in this game, we also have to learn how to recognize what the collective mind or what the collective herd is thinking. Right. And by understanding how the herd thinks and how they react during certain market cycles, we can start to read sentiment a little bit clearer, and we can also control our emotions a little bit better. Right. So, as I mentioned earlier, this is something that can definitely help us with our trading. And this is because knowing these different stages within this emotional roller coaster, if you will, it can help you identify where you stand at any given point in time during the session and what you've got to do really to get yourself back into an objective state of mind. As soon as you notice emotions creeping in, you're going to want to identify where you are in this cycle, and then you're going to want to have a plan to manage or mitigate those emotions from affecting your trading. So, without any further ado, let's have a look at these steps in this cycle.
All right, awesome, Marky. I'm excited. Can we talk about, before we jump into the market cycles, just very briefly cycles in general, right? Because I think life has cycles. Like, you know, the planet itself has seasons. So we go from spring to summer to fall to winter, and we just repeat. And I think there's cycles in everything that happens. And because markets at the day is just a collection of emotional human beings, there's going to be predictable and repeatable cycles as well. So it's something to even know right off the bat. Some people may not realize that this is a very cyclical thing. There's shorter term, longer term cycles, and they all repeat one after another, which gives us a sense of predictability. So that's what we're going to be talking about today, is specifically market cycles. And, you know, we can translate this to any kind of cycle. You've been through cycles before. Today, we're going to take you through a whole market cycle that repeats constantly. And then we're going to end off by saying which stage we think we're at, which means what, Marky? We know what's coming up.
Exactly. We know exactly what's coming up.
Get the crystal globe out. I'm polishing mine a little bit.
Get the crystal globe out. Exactly. And I think this episode comes at an important time. We are recording this in March of 2020. And so we're about 3 months into the COVID-19 pandemic here. As we mentioned, we are self-isolating at home right now. So if you're hearing, you know, a little bit of a different energy, that's why, but I hope we're still keeping it optimistic. And I wanted to ask you one thing, Georgie. I remember when we initially met, you had a book that you had recommended to me about cycles. Can you potentially speak on that and how it can translate into what we're going to be talking about? I know
Yeah.
This is a bit of a
Yeah, absolutely. I mean, I love talking about curveballs outside the show notes. I think
Yeah,
we have our
bit of a
best
curveball.
episodes. Yeah. So this one was a book written for a president from an economist. I think it was Edward. What was it called? The book was simply called Cycles. I'm gonna just pull it up really quickly because we have The Science of Prediction. Dewey Edward R. Dakin. So Dewey and Edward R. Dakin wrote this book, and it was written for a president. The mandate for them was to study cycles and is there repeatable opportunity, not just in markets, but in the economy as a whole. They came out with a very fascinating discovery, Mark. They came out that the business cycle, or every 7.5 years roughly, there is, going back hundreds of years, there's been predictable patterns where every 7.5 years or so, the markets come in for a soft landing or a recession. That is to say, a pullback from a thriving economy to one that needs to sort of pull back, scale back, and deleverage before continuing higher. That book is interesting because if you look at it, when was the last, if we go back, 1987 was Black Monday, right? And then 92, we had a bit of a pullback. Well, if you had 7.5 years to that, it's roughly 2001, right? And if you had 7.5 years approximately that, it's 2008. And so these cycles that were studied are based on a whole bunch of stuff, crop production, human psychology. And it's a very, very amazing book, phenomenal book to read, very relevant today. You guys, I would recommend picking it up. If you don't know how to find it, in the show notes, click the link. It'll take you right to Amazon to purchase it. But it's a phenomenal book. I'm glad you brought that up because it predicted it. And so now you're doing the math and you're saying 2008 plus 7 doesn't equal 2020. Right? But the thing is, there's been so much artificial support of the Federal Reserve, of corporations buying back their own stocks. So this cycle has been distorted a little bit. And I think we're in a new normal, but it is still cyclical. And this part was, we had to get this massive pullback. It was only a matter of time. Right?
Yeah, exactly. So thank you, Georgie, for clearing that up for the followers.
I forgot the episode wasn't on cycles. I had this whole other spiel.
No, awesome. I think that's a great book, and it was a great read. And like Georgie said, we're gonna throw that in the show notes for you guys. So let's talk about cycles. All right, we're going to be talking about these emotional cycles that traders experience, and this cycle can happen both in a collective mindset, being the general, herd, the collective mind of the market, what the retail population thinks, and then you've got an individual. It can even be an individual trade over trade kind of emotions, emotional cycles that you experience, right? So this can be both applied to your own individual trades. You can experience these emotions in the course of planning a trade, executing the trade. From when you get filled to when the trade gets taken out. These are emotions that you can definitely feel and definitely suffer from, right? And then this can also be the case for the general population, right? So we're gonna be looking to hit it kind of two birds with one stone on this one. How you can apply this both to your personal trades and how you can apply this to the general consensus of what's going on amongst the majority of the world right now.
Love it.
Awesome. So these stages, there's 14 different emotions. However, we can group them into four main stages. All right. So these kind of work cyclically in the sense that you've got uptrends and that you've got downtrends in markets. All right. And in uptrends, this is when the market is making newer highs. You're hearing about it on the news. All right. That is when you have stage one. You've got optimism, excitement, thrill, and euphoria. Those are the four types of emotions that are experienced in that first stage. And once markets seem to get to a top and you stop hearing about new highs being made, that's when you start getting into stage two. You start getting into emotions such as anxiety. You start getting into emotions such as denial. As the market starts pulling off of its highs, you get emotions such as fear, and then you start getting emotions such as desperation. That's where we are at stage two. At stage three, you've got panic, capitulation, despondency, and depression. All right. And then the cycle gets into stage four, which is essentially hope and relief. And then we cycle back into the first stage, which is starting off with optimism. All right. So that is essentially the four stages of these emotional cycles. And let's break down all 14 of these and give you guys some examples of how they would relate back to your own individual trades and how they can relate back to the collective group consensus.
Yeah, absolutely, Marty. This is kind of like a roller coaster, right? You get the roller coaster analogy here that gets pulled into me. It's like you're going up, and you're hearing the click. It's like click, 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 and you know you're about to have fun, and then it starts to drop, and you're inevitably going down, but you know it's going to bottom out. So it's like it's a very recurring emotional roller coaster rather looking curve that has the 4 stages. But I think it's important to also touch on this before we go through each one and unpack them, is why do we tend to remember down cycles more clearly, right? Because if you talk to people about markets at any point of the cycle, they're inevitably going to remember the points that were the down swings, all right, the lows.
Yeah.
Most people remember the trows, but not the peaks. And I think the importance of that is because whenever you're in a situation where there's fear involved, where there's loss, there's hurt, emotional, financial, it's all the same. It triggers areas in your brain that are more responsible to remember it in as much detail as possible for as long as possible. The reason is that serves you is that when you're having this down moment, if you could learn from it, your subconscious mind is saying we're better for the next time around it comes. And the fascinating thing here to me is that while there's these down cycles, they happen so rarely in terms of, occurrence. They're much less frequent and they last much shorter periods of time. Right? Bull markets are 7 years on approximate. Downsides 12, 18 months, 2 years, but it's a multiple factor, 3, 4 to 1. And I think it's important to remember that while it's cyclical, it doesn't mean that we spend an equal amount of time. It's disproportionate amount of time where we spend the least amount in despondency, depression, and on this pullback moments, but we tend to remember them the most. And remember, Mark, when we were having investor conversations when we worked for the bank, primarily you with the retail aspect, and I was in there working with retail branches to coach them with investing, we would show that chart. Remember the little downsides? Like you're letting the fear of these very few moments help or prevent you from getting opportunity of hundreds of % on the upside.
Yeah, exactly. That was one of the things you had a conversation with a lot of the clients at the time was essentially showing them that, once the market started to, take a turn back at the retail branch, 15, 20%, you'd have clients that started to get a little bit scared. And so they'd come in looking to sell and you'd kind of want to offer them the advice at the time that was, this is really the worst time to be doing so because this is when people are, thinking of doing the exact same thing. And at the time where people are looking to do the exact same thing, you'll often get, the opposite happen, right?
Yeah.
So a lot of people are looking to sell. That's likely the time where it's probably a good time to start buying, right? And we're going to talk about these kinds of cycles.
And when we explore the cycle in a second, you're going to understand why it's the case that people freak out at the worst moment. And before we jump into it, last thing I want to mention, Warren Buffett quote. I love this one for a longer term perspective. For day traders, you want to be tracking with the trend, but for longer term investment cycles and economic booms and busts, he says, be fearful when others are greedy and greedy when others are fearful. And you're going to find out why as we dig into the cycle now, why that's the case. Mark, you want to kick it off with the first part, stage 1? Or not stage 1, but part 1.
Yeah, sure. So the first emotion in stage 1 is optimism. All right. And so optimism basically starts off where you're basically getting a hunch or a positive outlook on the stock market. This could be, good news after, basically a pandemic. This could be something that you could see in the next, I don't know, maybe 6 months to, I don't know, maybe 18 months or so, hopefully, where we start seeing optimism coming back into the markets, because that's not where the stage where we're at the moment, right? And so it all starts with a hunch or positive outlook on leading you or the general market to buy stocks, right? So this is could be, a friend of a friend tells you, I'm looking to get into this for this reason. They're going to be expanding, whatever it can be the case, and that's where you start getting into the market. Right, I'm sure you've had a lot of people giving you calls when they're getting optimistic on stocks and they're wanting your opinion on them.
I always get calls from people at the 2 peaks: maximum euphoria, and then when there's the maximum despondency, my phone's always blowing up. People I haven't talked to in decades start texting me, and unfortunately, I've got to ignore most of them because that's when I'm at the most energy level putting into our community. That's when our community needs us the most as well. But I like that. From optimism, then Marky, what ends up happening, and the second stage of this cycle is excitement. So optimism happens when things have been bad for so long that they just can't get any worse. And if they do, you don't really care anymore, to the point that now you're starting to see a little bit of optimism. After optimism, in part two, you start to feel excitement. Right? Things are starting to move your way. Right? You're starting to get a little bit excited inside. You're like, oh, yay, look, it's going to start to work. You're looking at stock charts and you're saying, this is already working. Stocks are going up. So I'm being validated in being optimistic. Like, I have reason to be optimistic. Now I'm getting outright excited because the market's going as well. You're starting to anticipate things, right? And you're hoping that there's a success story in the making for yourself. You're starting to feel it. It really becomes a real emotion. And you're like, wow, this is really good. I'm excited for the opportunity that lies ahead. It's important to note, though, that at this point, most institutions are already long, right? Most professional money traders have already started initiating long positions, and they're adding on dips here. This is where buying the dip works. And the retail investor, while excited, is not financially committed quite yet, right? They're still excited. It's validating their emotions, but it's not leading to the belief that it's time to put their money to work.
Awesome. And so this next stage, or rather this next emotion here, is where those retail traders jump off the sidelines and they decide that it's time to put their money into the markets because it's favorable conditions, and you've got your strategy. And in markets that are moving up, you hear it often in the industry, BTFD. Buying the dip is what that means, with the little word in between. And this is where you're getting the retail traders putting their money off of the sidelines. All right. They can't help but start feeling like they're geniuses. They can't help but start feeling like they're smart. Anything that they seem to buy after it dumps makes them money. All right. And it's just, at this point, you're getting completely confident in your strategy. This is where we call it God mode, if you will, where, anything you touch is just going to make money. And this is not the most dangerous time at the top of this cycle, but one of the more, transitional moments where it starts to get a little bit slippery slopes ahead.
Yeah, I would say this is like 2019 in this current cycle. I remember when it just exploded higher, and there's just every single day kept moving up. A lot of professional traders were selling, and started to see some articles circulating, like, traders confused as to why it continues to rally. Like, economics are slipping and showing signs of faltering, but market doesn't care. That's the kind of article that was circulating back then in the professional sources. But in the financial press, it was like, this is the best decade of the year. Keep buying, load up. They're leading people to believe that this is the best time to get in. And then the thrill leads to number 4 here, Marky, euphoria. This is when, no matter what you do, you could take your 3 letters. My initials are GP. All right. And if I go in on TradingView, I'm going to do it just now. Let's see if there's a stock called GP. All right. Those are just my initials. I don't have to do any research, right? Because there's no risk. Hey, GP doesn't exist. I'm going to go IPO.
Let's try MB.
Yeah, let's try MB. Okay. MB. So what stock is this? This is IMEBZ. IMEBZ 1-day chart. And so when you look at this stock, at any point in 2018, if you had bought the dip, it had worked. This is when you make random letters up and you buy the stock and it's going to work. All right. This is the euphoria where no matter what you do, it starts to pay you. And you start to think, hey, you know what? I'm really good at this. I'm going to put more money into it. You start to go in there and start trading on margin. Saying, because I'm so good, let me refinance my house, take that money and dump it into the market. This is the stage of the market that there's a saying, don't confuse bulls for brains. All right.
One of my favorite things.
I love that one too. It's like when things are going up, yes, you're going to make money, but this is an unrealistic performance that you're now creating and coming to expect. It's when things get complacent, retail jumps in full. Somebody who rode out the bottom part of the cycle coming up, who was optimistic but didn't buy, who was excited but didn't buy, who's thrilled but still didn't buy, is finally jumping in to buy what is going to eventually become the top. And so this euphoria stage might present the maximum kind of ego capital, meaning that everything I touch is working, the maximum amount of confidence, but it is also the point of maximum financial risk. All right. because at this point profits are turning so quickly, you're over leveraging at a point where it's getting complacent. And the question that I like to ask in these kind of markets, especially at the euphoria stages, all right, when everybody that wants to buy has already bought, where will the market go? Right? There are no additional people who want to buy. There's no additional quantity because all the money on the sidelines is now long. When everyone's long, all you have is sell stops and sellers to come. And this is kind of how that market top is formed. So this is euphoria. This is when everyone is so greedy that Warren Buffett's saying it's time to start being fearful, right? Because everyone's on board. And this is a peak. This is if you're visualizing this, optimism, excitement, thrill, euphoria peaks out the curve, the rally, if you will, the economic expansion peaks.
Yeah, exactly. And so what happens after euphoria once you start getting that peak? Well, inevitably the market starts to pull back. All right, the market starts to make a bit of a pullback, and this is what gives you the emotion of anxiety. All right, oh no, the market's turning around. All right, it starts to show first signs of weakness, and you start to experience the first signs rather of giving your hard-earned gains back to the market. Right, and this is a tough concept for a lot of traders because many of them haven't seen this happen. Right, if you're just buying and every time you buy it makes money, once you start doing that and you're giving that money back, that's going to start to instill some emotions. All right, we're going to remain greedy and think that the long-term trend is higher. And if I could kind of pinpoint this moment on the chart of the S&P 500, this would be at around the February 2020 of this year, right around the 3,300 marker. All right, we had hit completely fresh highs, and then up until that week, I believe it might have been that week or a week after that week, where we had the initial move that broke back below 30, or rather that retested the 3,000 level. All right, we had an initial 5-day move, quick volatile move, caught a lot of traders off guard, and that's where the anxiety started to come in. All right, and so as I mentioned, in this emotion or in this kind of a stage, traders are starting to get a little bit fearful, and this is where that fearful mindset starts to come into the market. All right, and then as the market starts to trend lower, you get the next emotion coming in. And what's that, Georgie?
The next emotion after anxiety is denial. And denial is when, the markets don't turn as quickly as you would have liked. And like Mark mentioned, whenever there's a moment in your life where there's panic or fear creeping in, your reaction automatically goes to the subconscious level. You do that which has worked in the past. What has worked in the past? Just buying dips and blindly putting more money in it. So you're starting to deny the fact that what's taking place is real. You're saying it's going to bounce back. You're anxious, and now you're getting to the point where, like, look, there must be something wrong. Instead of looking for the next 10 years like I had hoped to make all this money, let me just get back to where I was. I'll hold it. I'm anxious. I'm starting to deny. I'm in denial about the part of the trend we're in. But let me look a little bit shorter term. If I could only get back to break even, or if I could only get up another 3 or 4%, I'm going to get out. I promise. All right. And, we're at this point, we're still in anticipation that the market's going to go up. We're seeing on the chart huge carnage. All right. We're seeing the Federal Reserve March 3rd do a surprise 50 basis points rate cut at the same day the market closed on lows. But we're denying that. We're in denial. That doesn't support what we want. What we want is to see a rebound. And so we start anchoring to a level. We're saying, if we just get a little pop, I'm going to be out. I promise, market, you let me off this time, it's going to be different next time around.
Yeah, it's exactly true. And that's the part where traders are going to be like, all right, if only I can get back to break even now, I'm just going to close on my position and just not do that ever again.
Yeah, I've learned my lesson this time, I swear.
Yeah, exactly. And so as the market might start to stall out for a couple of days and give you a little bit of a bounce, right? Like we mentioned, the Fed tried to throw some crazy stimulus at the market, almost unprecedented. And what did the market do? It rallied initially and then closed on the lows. All right. And then once you get that close on the lows, you get that reality that sets in that we're not as smart as we once thought. Right. Buying the dips, maybe this thing is not working. You start to get fearful, right? Instead of being confident in your strategy, you start to become confused.
right? What used to work doesn't work anymore. And now you're starting to question whether my strategy is effective, right? Is my strategy effective in these markets? And then you start to really question your whole process. And this is the point, where you can get out with a small profit if you've invested from the long term and just move on, but you don't for some reason. All right. You don't for some reason because you're fearful at this point and you continue to hold on to those positions. All right. And whether this applies to long-term investments or, taking a trade that has maybe started off going in your favor and then has now almost come in, hit your stop loss. You're in fear of taking that loss. And, for some traders, they don't let that fear come to fruition. Right? They don't accept that fear. They don't close out the position. They don't close out the loss for what it is. They actually hold on to it. They'll cancel their stop losses and they'll hold on to it because of the fear of crystallizing that loss. And that kind of leads you on to the next emotion. As the market continues lower, as your position continues lower, you get into this next emotion.
Desperation. So this is where it starts to get dark. All right. I think Mark mentioned a great point, is that we still have a chance here to get out at a small profit or even a small loss. But what ends up happening is the market continues to go down. All right. And you don't have any more capital to buy the dip. Now you're at a loss. Not only have you lost all the profit that you made, but now you're losing real money that you worked hard for. And if you leveraged up and you borrowed money and maxed out margin, you're now losing some serious money that's going to take a lot of work to get back to. All right.
Awesome. So that's desperation for you there, guys. And so emotion number 9, this is possibly the most emotional period by far, and that's panic. All right. You're absolutely clueless. You're absolutely helpless. Nothing you try works. Everything you try just seems to lose. And this is a stage where, you really feel like you're at the mercy of the market and you've got absolutely no control over what you can do about it.
Yeah. And right after panic comes the next emotion, capitulation. And, capitulation to me is a fascinating stage, because this is the level at which you're driven to take action. All right. This is a level where up until this point, you're reading every news article that supported your theory. The markets might be dumping. There might be 100 articles telling you how it's getting really bad, but you're going to find one that supports your view, and you're going to hang on to that bias for as long as you can. This part, capitulation, basically is the stage at which you admit that, okay, I've done the wrong thing here. I need relief. This is the stage at which your subconscious mind has trusted you up to 0.9. Now you've panicked, and now you're going to set off the chain reaction that you actually have the least control over, right? This is the part where most people incur most losses, yet are the one that have the least control over. And the way to avoid getting here is to take action much sooner than step 10. But step 10 here, or emotion number 10, is capitulation. You've reached the breaking point. And now you're saying, forget it. I'm going to sell everything I have on the market. You go in your brokerage account, you call your broker, however you do that transaction, depending on whether you have a managed solution or your own. Ideally, or likely both. You're going to do both things. Sell your own portfolio, tell your broker to do it as well. All right. And you incur the loss. Now the loss becomes real. Right. Whereas before you had a paper loss, now it's a real loss. Now the money that you worked hard for is likely gone to a large extent. All right. And all the gains that you had before are gone. So this is where the loss is realized, both financially, emotionally, and psychologically. All right. And I think this stage is super dangerous because it pulls you in to so much fear by the time you capitulate. Because once you go to sell, guess who else is trying to sell? Everyone else is capitulating at the same time. This is a point where everyone sells everything they have at the same time. And the reason it's so bad is because that causes even more downside and more panic and more capitulation. This is where all the sell stops and market orders come on board. And if everyone's looking to sell and the smart money is sitting back here and saying, hey, look, I don't want to buy this yet. This is nuts. And everyone's looking to sell and there's no buyer on the market, prices will drop very sharply in a short period of time. Right? This is where everyone capitulates. This is when the loss becomes from an idea to being real.
Exactly. And that capitulation, once you've sold out of everything,
at a much bigger loss than you had anticipated, leads to the emotion of despondency, right? After you exit the markets, you get into that stage where you don't even want to think about trading, right? I don't want to do this. The stock market is manipulated. This is not for us. This should be avoided like the plague. I'm sure you've heard it before, Georgie. I know I have plenty of times about people's stories and their experiences with the stock market. And, a lot of the advice people give or rather the advice that people give is relative to their experiences with the stock market, right? So if somebody had a bad experience with the stock market, maybe they bought a stock on the recommendation of a friend and they lost money on it, and then you decide you want to become a trader and then you tell that person on it, more likely than not, they're going to tell you to be careful, stock trading is gambling, etc., because of their experience with it, right? So
Absolutely.
yeah, getting back to the point here, despondency is really once you get to that point where you're just kind of fed up with the markets, you don't want to do anything with the markets, and this is really the time. It's one of those rare points in this part of the market cycle where you've got the point of maximum opportunity coming, when everybody has already sold, they're kind of pissed off with the market, they don't want anything to do with it. This is the time where the markets start, or rather where the institutions are starting to accumulate, some of the shares after, the massive move that typically tends to happen where you get these kinds of scenarios. So emotion number 11, despondency.
This is also the emotion of financial transfer. All right. This is where
Yeah.
capital transfers from the retail back into the institutional portfolio. So this is the maximum opportunity and also the biggest capital and wealth transfer from the retail investor to the professionals. And I'm seeing comments even on our YouTube channel and like as we go along where people have been hurt and they're at the stage right now where they're like, look, this is manipulated. What is wrong with you guys? And they're looking for an outlet to put their fear and negative emotions on. It's unhealthy to hold negative emotions. And so, as humans, because we're not trained how to handle our emotions, what do we get taught in school? How to do calculus? Completely useless. But we're not taught how to maintain and manage our emotions. They don't have a place to release this. They release it on the people who are still in the business who tend to be doing okay. Also, remember that we're not out here when we're making money at the downside bragging about it. This might sound superficial and stuff, but Mark, you could see I've toned down myself. I'm keeping watches, things like that, things that at the top seemed accomplishments for some out of view because we know people are getting hurt. We're not out there bragging saying, "Oh, your portfolio got ripped apart. That sucks. I'm up huge on my day trading account." This is the point where people are holding on to so much negative emotion. And after this comes the next step, depression. All right. And this is both physical, psychological, financial, emotional, every context of the word. There's a depression that comes, not in the economic markets, but in our own journey, how we experience it with the financial markets. This is when we know we have to accept the fact that what we once thought was going to bring us financial freedom is now no longer on the table. But even more to that point, we've now lost the money that we even approach this financial market with. And the depression here is, we're looking for an outlet to offload this negativity. It's proven that the longer you hold negative emotions, the more health issues you have. I don't want to get into studies and numbers here. Number one, it's controversial. Number two, there's a massive pharma industry that would not like any of this. I don't want to disappear. I want to be here. I love you guys. So when you're holding on to this negativity, you start to look at negative outlets. Some people cry, some people pray. All right, some people drink, some people get in self-destructive habits. Some people blame themselves. How could I have been so stupid? All right. Some are lucky enough to look back and say, hey, what went wrong? Maybe I started at a time where, I didn't really know what I was doing. Maybe I got lucky. Maybe I should surrender to the process and count the losses I have in my portfolio as my entry into this industry, as my tuition. Because only when you live through these down moments, you become a trader. This is where real traders are born. Where people say, look, I got hurt bad out there. All right. However, I'm still alive. I'm healthy. All right. I'm going to rebuild my capital. I might have some left, whatever the case might be. But my gosh, was there an opportunity here on this downside? I could see it. I may not have been trained to take advantage of it, I may have traded emotionally or invested emotionally, but now in front of me lays the greatest opportunity in my career. Different people deal with depression, despondency in a different way, right? Some unfortunately go off the deep end and it becomes an escalating pattern of destructive habits, right? Other people look at the more optimistic route and look for a way to bounce back and use this as a learning experience, as a platform to build on. And this is where, where we come into play, Mark, you and I, Victorio, all the people at Trade Pro Academy. It's our job to help you see that, right? And so through these tough moments, this is why we have to stay humble and kind of empower you guys and get you excited about this, because it's dangerous to go the dark route. All right. It's dangerous because you take money problems and you can convert them to health problems, relationship problems, the kind of problems that money shouldn't be able to affect. It causes a lot of damage that's unnecessary in your life. All right. So I want, we went on this randomly. I didn't know I'd speak on depression, but I'm happy I did, because I want to tell you guys that what you are currently experiencing, if you're in this stage, with your portfolio, with your accounts, because we're getting close to some of these darker stages. We'll talk about where we think we are in a moment. But if you're in the stage now where you're experiencing this, I want to tell you this. It's okay. Number one, there's a learning opportunity here. Number two. And number three, because this thing is cyclical, the good news is there is a way out of it. And there are other people who have gone through this before. And in fact, any person, if you're going to invest for the long term, if you're going to trade, if you're going to take financial opportunity in exchange for a risk capital amount, you're going to have to live through this. And you just did. So you earn a stripe, right? You're building resilience. So as we get to this stage, I want you to know most people panic, but this is the point where for you, you have maximum personal development and also maximum financial opportunity as well in the future.
Exactly. Thanks for sharing that, Georgie. And so we're at emotion number 13 now. And so after you get through, the emotions of despondency and depression, we get to the emotion of hope. All right. This is where the markets start to stabilize. You're not hearing negative news on the news cycle every single morning. You're starting to hear some positive news coming through about, the economy, whatever the situation at the time. Once we reach this stage of the of the cycle where we're currently at in 2020, I think this is where we'll start seeing, maybe vaccines being put on trial and maybe getting some positive results from those, maybe seeing the the disease start, or rather the pandemic start flatlining, getting good signs like that. I think we can get to that stage. And so that really is a stage where the markets start to stabilize. This can be kind of equivalent to what we saw in April to May 2009. After we had that big sell off, we started to stabilize. The markets climbed for a couple of weeks. They had 2 or 3 weeks where they closed green back to back and started to show some strength, some buying coming back into those markets. And that's really kind of the point of hope. It's where you kind of get to the realization that the market does have cycles, right? And this is what we're trying to get at, right? People are going to have to go through all of those emotions that from 1 to, at this point we're at 13, you're going to have to go from 1 through 12 in order to get to hope. All right, that's the only way that you can get to hope. And so at this point, just like Georgie said, you've earned your stripes, and now you can start this is where people start to look for new opportunities in the market. All right, the depression and the dark cloud that kind of hangs around that environment and that kind of sentiment, which we're honestly experiencing right now in March of 2020. Every single day we're waking up, all that we're hearing on the news flow right now is how many new cases of corona are there, how many new deaths are coming in, and hardly do we hear about the recoveries. And so it's just a constant negative news flow, and that's kind of the sentiment that we're seeing at the moment, right? And so hope is number 13. That is when you start to see, in this case, we would start to see some good news coming out, and where the markets start to bottom out as well, and you start to see some weeks of strength, right? Once we get to that point, you're going to start to see some weeks of strength, and then at that point, we're going to transition to the final and the 14th emotion in this 4-stage cycle of emotions that traders experience.
And that cycle is relief. Things start to feel good again, because there's an interesting thing about worsening situations or increasing amounts of pain. You get to a point where it's like every single day, if it's getting worse and worse, it hurts less and less. And you get to a point that if you're like, look, if this is the worst that could happen, theoretically, if I just look up, this is the worst it's going to be. It means there's nothing but upside from here. And this is where you start to feel relief, right? Things start to turn around. You start to hear a little bit more positive stories. To parlay this into self-isolation mode is that, at the moment, I went out for a walk. Obviously, I got flamed for it. I'm not out there kissing random people though. I'm keeping 6 feet distance, whatever it is. I looked up, the sun was shining. I'm like, you know what? One day it's going to be good again. This is great. And I kind of had like a little bit of sigh of relief. No matter how bad it is or it's going to get, one day we're going to get there. This when the relief stage comes in, you start to see some of the investments do well. You start to see success stories in companies who are coming out in a new way. Doesn't mean you're looking for these old companies that got beat up to come back, but you're seeing new success stories emerge out of the rubble. You're seeing the phoenix fly, if you will. New companies taking this as an advantage, doing well, building momentum, and things start to regain a little bit of the happiness. You might even smile for the first time. And then guess what happens after the relief? You're relieved it's all over. You're already hopeful from the last stage. Things are starting to rebound. Where do we go from number 14? Is this where it ends?
We go right back to number 1, right back to optimism. All right, and that's how the cycle completes itself. Right, from optimism, it starts at optimism, and it recycles back at optimism. All right, and so that is essentially the 4 stages of emotions that traders experience through, both having their own trades, their own individual trades. You'll suffer a majority of these emotions. Not to say that you'll suffer, but you'll experience a majority of these emotions, especially if you don't have a plan. If you don't really know what you're looking for and you're trading based on a hunch, I can guarantee you're gonna, this list here is very cyclical in the way that you're gonna experience things as you take a trade. And I just wanted to speak on that a little, just quickly here. So when you take a trade, you're initially optimistic, right? We're gonna go through this list quickly here to summarize how this would be relevant in an individual trade kind of a scenario. So let's say you've qualified a trade. Obviously, if you're taking the trade, you're going to be optimistic that it's going to hit your take profit. Right? Would you agree, Georgie?
Oh, 100%. Otherwise, you wouldn't be getting in, right?
Exactly. So that's where the hunch starts. You've got an idea, and maybe something's looking like it's going to go your way. Great. You're optimistic. You take that trade. Right? You're in the trade right now, and the trade starts moving your direction. Excitement starts to kick in. Right? Emotion number 2. Excitement starts to kick in. You're starting to anticipate how much money you're going to make. Selling out that position at some point, retiring, buying a Lamborghini, etc. All right. Good news for you. The stock keeps going up. All right. Stock's gone up. Now you've tripled your money. This is where thrill starts to come in. All right. You're at the thrill stage. You get to this point, maybe I'll cancel my take profit. This market's going to keep on going. I'm going to keep taking this thing for as much as it'll give me. Great. Market continues going in your favor, and you can't help but feeling like a genius. Man, if I just take one of these trades every single day, this is going to be great, right? These are the kinds of emotions that we go through on an individual trade by trade basis if you don't have a plan, right? Then the market hits a new level. You're up nice, maybe 5 times, and you're deciding, man, should I sell here? I think this might be a good idea to sell. You know what? I think if I just hold it for a couple more longer, I could really get that car or that house. You know what? This thing's going in my favor. I can't lose right now. Great, I'm going to hold it. You hold on to that trade. All right? It starts to top out, starts to, hit a resistance point, starts to form, whatever pattern you look for, triple top, double top, and then it fails. All right? You get the initial move that breaks market structure to the downside. All right? At this point, you haven't sold yet. This is where you get anxious. All right? I'm sure this is very similar to the investor cycle from Bitcoin. All right, that whole cycle. All right, and this is the part where you hit 20,000 on Bitcoin, and the market started rolling over. All right, you get anxious. All right, I'm gonna buy this first dip. It's got to go. This has been working for the whole time. Then the market, you're at anxiety now. You're at the emotion of anxiety. All right, now you're buying back in. Market gives you a little bit of a bounce, and then it goes right off to new lows.
All right. You're still in this position. You're giving back gains now. You're in the stage of denial. All right. At this point, you're starting, the market's moving right back to your break even position. All right. This is where fear really starts to kick in. You are back underwater now. You've given up all the gains that you had, the house money that you had. All right. And now that's gone. So technically, you've given up 1,200 or whatever the amount you want it to be, 1,500, whatever the amount you want it to be. You've given that all up and now you're underwater. All right. And this is where desperation kicks in. Man, I've given this up. I've lost all these gains. What do? I had a chance to profit. I missed it. I don't really know what to do right now. Should I hold this position? Should I get rid of it? I don't know. I'm just going to wait and see if I can get another bounce. Maybe I can get another bounce, right?
Then, you know what else happens here, Marky? Before you even go to panic, people start pulling their stop losses. I don't need a stop loss. Yes. It's going to come back. It'll come back. It has to. They always do.
Exactly. And so imagine you're still in this trade. Now you've pulled your stop loss because you've had a trade that was once at profit. Now it's underwater, and your mentality is stuck, is geared to those profits that you had given up. You had those profits, and now this position has got to come back and get you at least a break even, ideally back to those profits that you had. You want to recover that, right? That's what you're remembering. And then, you know what? The market goes lower. The market goes lower, and at this point, you're really in trouble. You're, close to a margin call if your broker hasn't called you already to exercise the margin call. You're almost there. You're getting nervous. Then you sell. All right. You're at the point of capitulation. You've reached your breaking point, and then you sell that position. And now it doesn't matter what happens. Now you're starting to feel the next emotion. You're feeling despondency. All right. On an individual trade basis, after you exit that trade, you get somewhat of a sigh of relief now. It's still despondency kind of emotion, but you're out of the markets now. And now you don't even want to kind of think about that. The money's lost. You've kind of crystallized it. And now you got to be thinking about your next best trade. This is where a lot of traders, they kind of go into the next emotion, depression, and then they start revenge trading, right? They get taken out of that position, and now they keep trying to buy the bottom until they lose their capital, and then it inevitably goes up, right? And so after despondency, like we said, you've got the depression stage. This is the part where, you're upset about the trade. You're upset about losing money. You don't know what to do next. And then next you see the market bounce, right? The market bounce and starts to play back into your idea. You see that dips are starting to be held by buyers, and now you start to get hope again. All right. You've thought about the trade. You've reviewed the trade. And at this point you're saying, all right, I think I can start looking for positions again. I'm ready to take on new opportunities, right? And then the market can continue on higher, and now you're back in relief. All right, the markets are back to reacting normally. We've just experienced a normal cycle. I know where I'm at, and I know what I have to do to get, back to objectivity. And I think that's what's important about these emotions, especially as they relate to your individual trades, is because you can identify where you're at any point in time. In real time, once you're in a position, where am I at on this cycle, right? Which emotion am I feeling? If emotions are starting to creep in and you realize that, you can identify where you are in this cycle, and then you can put it together a plan to help you mitigate those emotions from affecting your performance or affecting your trading.
Love it. I love that. You just walk through the whole cycle, and I think that really makes it stick from actions that you have. As you went through this, Mark, I keep saying you guys to the listener, but as you went through this, I experienced it with you. I experienced the yay to the because I've been there. To get here, you have to be there. And this is where I think is interesting. No matter where you start your journey, Mark, I think even if you start in the despondency, if this is when you first start trading, like right now, people are calling my phone. Actually, my phone's ringing right now. Look at this, Mark. Have you ever heard me talk to this person? They just no. So
yep.
The phone's ringing, and people want to know, what should I do? Because now that this market's captured their interest. So even if you start at the very bottom caring about this market, you're like, oh my God, I need to know how to make money right now because this is becoming important all of a sudden. If you start at despondency, depression, even if you start at euphoria, no matter where you start, before you realize how this market really works, you're going to have to experience a down curve. And I think people who started euphoria, like 2019 markets wise, have gone through the curve now. People who are just starting at this moment are missing how this whole downside was actually created.
Yeah.
And so they're the ones who will become overly confident in the next 6, 7 years of the next bull and will lose 7, 8 years of profit in 2 months. And we've had a historic market that literally, you usually lose money slower. It takes a little bit more of a battle, like 2008, 2001, months on end. It was downside, but smaller amounts. Right now, we just rinsed this downside on a quicker scale, and it's been unprecedented downside action. And so here comes the golden question here, Mark. Where do you think we are right now in terms of the cycle?
Where do I think we are? I think personally we are. I want to say we're close to we're definitely past the panic stage. I'm definitely seeing panic. I think we're coming into the capitulation phase.
Yeah.
I definitely think if I were to put it between two, it would be really between the panic and the capitulation phase, more so coming towards the capitulation side of things.
Yeah, I'm with you. I think that if we hadn't, look, this would have taken, going from fear to capitulation usually takes months. We've gone into unprecedented territory where we're almost 40% down in less than 30 days, right? Like really crazy, unprecedented type of emotions. And because fear is stronger than greed, I think we've rinsed out the cycle to the downside a lot quicker. Also, now we have more automated trading technologies that are going through in the market who liquidate faster, all right? And we've condensed the downside. All right, so because it's happened so fast, I think we have whiplash. A lot of us have to sit here and process it. And we also, let's not forget that the spark in the room was the corona situation. But before this whole coronavirus, it's like tail risk, this black swan, Nassim will tell us, Nassim Taleb, that's his name, right? The guy, the black swan author.
I think so, yeah.
As this occurred, this is what brought down the market, but there was a lot of other reasons, right? Like corporations had been flush out on over leverage and buy. I could do a whole episode on this. What you need to know is that this wasn't the prime cause. This sparked the selling, but there was a complacency. Like there was a sense of how much further could we go? People wanted a reason to sell. If they didn't want to sell and this happened, they would have continued to buy. People were looking for a reason to get out. And so I'm with Mark that I think if we haven't capitulated yet, that there's going to be one more move down to capitulate. But the next step coming up is let's see what this downside looks like. And by the time the episode's out, you might even know. There might be one more downside push where we attempt to break the low. And if we cannot, then maybe we are in the stage where, we're getting a little hopeful. Maybe all the stimulus, this unprecedented new money that's been printed and circulated in the economy, fiscal and monetary stimulus, the government and the Fed level. Maybe this is starting to take hold. Maybe we're starting to build a sense of hope and relief. And if that is the case, then you know what the next one is: optimism. Maybe there's going to be a great opportunity coming up shortly, or maybe we have a little bit more of capitulation and we have to go through a larger cycle of, despondency and depression, where we start to see the quarterly results coming in from the economic front. GDP starts to weaken, all right? Job layoffs lead to businesses going bankrupt because we haven't seen any massive bankruptcies yet, right? There hasn't been a Lehman-style event to kind of cause a systemic risk in the whole thing. It's just right now, there's people laid off, businesses are making less money, but there hasn't been any bankruptcies at this point. If this goes on for longer, and companies start going bankrupt, then you can't just restart the economic engine. It's not like it's shut off and you just turn the key. You're going to have to do some engine work. Yeah. And I think this is the big question in the cycle is if we don't see too many bankruptcies, if we get pulled through, if this corona thing looks good, if we start to buy again, we might be able to squeeze by. But if the economic data starts to look really ugly, this thing lasts for longer than we anticipated. Employees that were laid off have no prospects of getting hired again because no one's hiring. That could trigger the real capitulation. And so to me, we're either bottomed out already and in the process of gaining some relief and hope, or the real capitulation event is yet to come. At this point is going to vary on the economy. We have to look at economic indicators because, Mark, we've talked about this before, but the market itself was so much more elevated than where the economy is. Since the 2009 low, Market's up over 400%. Is your salary up over 400%? Right? Are the business conditions up over 400%? The answer is no.
Yeah.
Right? Financial assets have really been, the valuations have been stretched on the back of the Federal Reserve rescuing the last despondency phase in the housing bubble crash, coming in with a stimulus and a response. But that's inflated prices because the Fed never got out. People don't realize this. By maintaining a portfolio, the Fed was forced to rebuy bonds, which means they continue to provide stimulus. Since '09 to today, as of this recording, the Fed hasn't got their hand out of the pot since the last recession. And so we needed to come down on the stock market. Now it's caught down to where the economy is. It's not like this drop in the market, this 40%, was a loss, right? It's not like we lost value. We repriced true value, right? And I think what's important is to realize, now we're at where we should be. Now what's next? Let's look at the economy. Let's see how it recovers. A true resilient economy doesn't go bust overnight because they don't have sales for 2 weeks. If your business can't survive without sales for 2 weeks, that's trouble. The capitulation hasn't even started if that's the case. So what you got to do is you got to look at the stuff, be really cognizant with the information, and rather than putting your account at risk by trying to pick a bottom pickers get smelly fingers, what you need to do is join a community, be a part of a group who is professionally doing this. All right? Not, somebody who's a painter turned crypto portfolio manager, somebody who's been doing this for their life and's been through these cycles. The number one question you should ask your investment advisor if you're panicking is, have you survived the cycle? Have you seen the cycle? Ask them, what stage of the cycle are we in? If they don't know what you're talking about, you probably know more than them. All right? Because we're at the stage now. I know I'm going much longer than my allotted time here. But
you go on.
Mark, we're at the stage, Mark, where a lot of portfolio managers who are in this industry probably don't remember '09. Maybe the more seasoned guys, but there's new people who've come in who have built a name for themselves, who are the younger generation.
Well, I'm seeing a lot of my friends from university, a couple of years older, guys around your age, portfolio managers now.
Yeah,
right.
And I was the crazy kid that you and I, Mark, both, we were reading into the stuff because we had a passion for it at that age. Most kids, their career starts when they finish university, right? My career started when my parents immigrated because I didn't have no freaking money. Right? I would have loved to have a normal, fun childhood, but I was always focused around money and how I could make more. And so what you need to know is there's people a whole generation of wealth management that's managing money today who has no clue what the cycle feels like on the downside. And even though what they've seen right now is like, oh my God, here's a double-sided market, we're finally dropping. I don't think the real capitulation has happened yet. Watch the economy. If the economy starts to crack and we start to see bankruptcies, companies laying off more people, it's going to balloon. This whole thing's going to implode. Because if one company goes bankrupt, guess what? The land that they're leasing from that landlord, he doesn't get paid. If he can't find a tenant and he's maxed out his ownership of land, he's going to default on 30 other properties just because one can't pay. Those businesses get screwed. The banks that lend them the money implodes. Yeah, and before you know it, now you have economic damage. We haven't felt economic damage yet. This is why I can't believe yet the market's capitulated. We got to see what the next down move looks like. And so with 3 notes, I kind of dropped all that. But I think we're either coming up to the greatest opportunity ever and it's all over, the carnage, or the economy is going to suggest otherwise, and we have a little bit more downside to go, another 10, 15%, 20 maybe. Hopefully not, because that looks ugly.
Yeah, I think you guys are in for, that was definitely an extra bonus nugget there. So let's go ahead and summarize what we've discussed so far in today's episode, and we're going to kind of wrap things up here with this quick summary. So we've discussed this investor cycle, you can call it the investor psychology cycle, the trader psychology cycle. It's kind of interchangeable because at the end of the day, we're humans, right? Humans are going to experience this cycle of emotion. So whether you're an investor or a trader, you're likely going to experience these emotions at some point in time. And it's important to understand, what phase you're at and what, part of the cycle that you're at so that you can identify, what your next best steps are.
On top of that, we gave you guys the 4 stages and we discussed the 14 different emotions that make up these 4 stages. And so, in quick summary, these were excitement, rather optimism, excitement, thrill, euphoria, anxiety, denial, fear, desperation, panic, capitulation, despondency, depression, hope, and relief. And we also talked about how this relates to the overall economy, where we're at in the overall economic cycle, not necessarily the economic cycle, but where the stock market is at based on this cycle and based on what market sentiment looks like right now. We discussed how this is relevant to your individual trading and how your emotions are impacted once you're in trades, how you follow through this cycle. And finally, George shared an awesome little nugget there on where we think we're at in this current cycle. We're recording this on what's today's date? March the 26th, 2020. And so that's what we've got to tell you guys. We're definitely in past the panic stage, and next stage we're looking at is potentially the capitulation, despondency phases. And both myself and Georgie, you can agree or disagree with me here, but I think we're both hoping that it's the side where where hope and relief and optimism are going to be coming back into the market. I got my fingers crossed that that's what it's going to be, and it's that the worst is behind us at this point. But like you said, we've got to keep an eye on the economy, and we've got to keep an eye on what happens with this and how this develops, and that'll give us a better sign of where we truly are within this cycle of emotion, rather of psychological investor emotions.
Yeah, the steeper the rally, the harder the crash. And I really do hope it's over. I'm over this. I don't want to see anyone get hurt. I hope, fingers crossed, you can't see it, but I hope it's over. And I think the most important next picture is what the economic damage has been with this coronavirus isolation. But, I think there's more downside, and I hope I'm wrong on every bone in my body. I hope we recover, we keep going up. I really do. But at the same time, in 2019, when things were getting priced up so high and people were just buying, making money, where the professional institutional money was concerned, we knew at some point there was going to be some damage, in the industry. And unfortunately, it's here, and I hope it's over. But, all you could do is be in a community, stay focused, and keep watching info, assess the real time rather than trying to predict.
Exactly. And if you guys are looking for a community, what you'll want to look for is a community that is there for their members at any part of these cycles. You'll want to look for a community that's involved and keeps their members up to date with what's going on. And you really don't want to be in a situation where you're in a community and you're kind of left in the dark, especially during conditions like what we've been experiencing these last 2-3 weeks, even these last 2 months. All right, and so do your due diligence on that front. We've got a great place here with Trade Pro Academy, so make sure to check us out. And that's really going to be all that we've got for today's episode, Trade Pros. So thank you so much for listening. I really hope that you guys enjoyed this one. If you can think of one person in particular that might find today's message really helpful on their trading journey, please go ahead and share this episode with them. Also, if you guys enjoy listening to this podcast, we put in a lot of work and we try to deliver, outstanding value. So if you guys can do us a favor, if you're enjoying it, please make sure to drop onto iTunes, drop us a rating and a review. Until next time, everyone, this has been Mark and
George
from Trade Pro Academy. Good luck and good trading, guys. Take care.
Thanks for listening to the Mind Over Market podcast. You can find us at tradeproacademy.com. You're listening to Mind Over Markets, a podcast on trading psychology to help you build a bulletproof mindset. Here's your hosts, George Papazov and Mark Borscht.
All right, Trade Pros, welcome to the podcast. Welcome back. Today we have a special episode on Mind Over Markets. We're interviewing a good friend of mine and someone that I met through some business interactions that then flourished on to be, a much deeper relationship. And we've went back and forth a lot about, consciousness, personal development, abundance. And we figured in this episode, we're going to bring out our guest today, Matt. and we're going to have a discussion a little bit in length on this. So it's not 100% trading focused, but it's mostly psychology, personal development, and allowing yourself to step into the reality of you where money isn't an obstacle. And we're going to work on money mindset, abundance, and we're going to go through a lengthy journey here, and it's going to be super fun. Super excited to have you on here, Matt. Welcome aboard, and welcome to our podcast.
Thank you so much for having me, George. It's a real honor and a pleasure to be here, and I'm just grateful for the opportunity.
Awesome, my man. Really excited to talk with you. I want to start off by maybe ask you to tell us a little bit about yourself and your personal development journey, what you've gone through so far.
Yeah, definitely. And this isn't the sort of thing, that people ask you about every day. So, just thinking about this question, I'm like, wow, it really has been a journey. At the time of this recording, I am 31. And I believe I was 19 when I really got introduced to the idea of personal development, kind of in the first place in its pure form. So anyways, my name's Matt Brown, and I'm from Chicago, Illinois originally. And now I live in Portland, Oregon with my wife. And, I grew up in a good family and had a good education, but self-help, personal development, consciousness, psychology, these things weren't like really that interesting to my family, and it's just not something we ever really engaged with. It's more just study hard, work hard, that sort of thing. And sort of my avenue into personal development, it's interesting. I'm an introvert naturally, and during college, I was living in Spain for a year abroad, and I had made some friends there. And that's when you really start going out, and you're interacting, you're becoming more social. And one of my good friends there is named Stan. I think he could tell like I needed a little bit of help like on the dating side of things and like interacting with women and stuff like that. And so he gave me a recording from a guy named Eben Pagan. I'm not sure if you know who he is.
I don't actually.
So, Eben is probably he's kind of known in both worlds, but it was basically, he gave me a recording of a self-help seminar that he did that helped men be more confident and meet women and have communication skills and stuff like that. And it was the first thing I had ever heard like that, like how to understand your own personal psychology and how things are interfering and how your identity plays a role in all of this stuff. And so it was kind of like self-help, personal development masked as dating advice. And I was just hooked. I was like, oh my goodness, I have never heard anybody speaking about this in the first place. And in that seminar, he recommended all of these books. And so, I was a very kind of like brainy person at that time anyways. And so I just got all these books and I started devouring them, like things like Think and Grow Rich. I've read probably hundreds, if not thousands of books. So a lot of stuff like that. So that was kind of my introduction into personal development. And it's funny because my friend, he was like, Matt, I need you to up your dating game so you can go out and be my wingman, basically. Go out to the bars and help me meet Spanish women. And here I am, 10 years later, and I'm married to the love of my life, and I have a great life. And I've talked to Stan about this. I'm like, that was a pivotal moment in my life, getting introduced to that sort of material. And that was kind of the trailhead that got me on this path.
That's amazing. So I guess through some of the skill sets you learned, you were able to implement that. Like, is there a story that you applied it to the relationship, and then it's like a sweet romantic story that ended up into the marriage, or was it something that just blossomed naturally without some of the self-help stuff you applied?
With getting married, or
yeah.
What?
Like, what's the story between how that happened? Because I find that interesting, right? I've looked at a lot of self-help stuff applied from that, and I think it stems from the same thing, right? It's like looking at yourself as identity, like who you are, and putting yourself out there. And I think it's interesting to apply it to that way as well, because at the end of the day, that's what we're doing as traders also. We're not in there, picking up people, but we are exposing ourselves in a way that most people aren't comfortable doing. So I was just curious, like, did some of what you learned, was it a reason that led to the marriage, or like, give us some lines is what I'm asking.
Oh, for sure. Well, the thing is that it really was a deep personal development seminar, that sort of thing. And it wasn't like pick up lines, that sort of thing. It was more like really looking at your unconscious and looking at your shadow and the things that you can't see about yourself and what your blind spots are. And so one of them that was actually really important was at that time, I'm kind of like an angsty 19-year-old. And one of the things that Eben was talking about in the program was how important it is for you to have a positive relationship with your father, whether they're in your life or out of your life. You need to have a positive relationship and a harmonious relationship with that sort of patriarchal masculine energy in your life. And so at that time, I was kind of like, my dad, there was a lot more friction and a lot more dissonance there. And so there was a set of exercises in the seminar about things you need to hear from your dad, basically, like things that you need to hear from the part of your psyche that is projected onto your father. And so, I was all in. I'm like, I'm doing this. Like, I need to really develop, because that's what really captured me about all this work was it's true personal development. And so when I got back from Spain, I don't remember exactly when it was, but once I had been kind of steeped in this long enough, I sat down with my dad and I said, Dad, I just feel like I have all this tension with my relationship with you. And I think it all stems from feeling like you aren't proud of me. And that was really hard for me to say to my dad. And he goes, oh no, like, I'm so proud of you. And it was very healing for me and for my own psychology to be able to hear that from my dad. The conversation was more in depth than that, but really the exercise was helping you to realize what you needed to hear from your dad and then ask them to say that to you. And so, going through that, that's what starts this whole reintegration process of the psyche. And disclaimer, I'm not a psychologist. I'm not a doctor of any kind. So this is just straight up from my own personal experience.
Right.
And I'm very happy that I was able to do this and repair my relationship with my dad and hear these things from him, because actually a few years later he ended up dying. And if I wouldn't have done this, then I never would have gotten a chance to hear these things from him in a way I needed to hear them when he was alive. And I'd have to go through some hypnotic